It's been making the rounds, and it's causing, well, a mix of anxiety and a lot of hope for millions of Americans,
A huge amount of hope.
especially for those living on fixed incomes. We're talking about the announcement from the president about a major potential financial dividend.
And the number being thrown around is big, upwards of $2,000.
$8,000, yeah. And the big question, the one we hear constantly, is will this payment actually include the people who need it most?
Right. Will it finally reach the fixed income community? We're talking about people on Social Security, SSI, SSDI, low-income veterans.
Folks who, often feel like they're the last ones considered when government funds are being handed out.
They absolutely do. And they need clarity on this, right now.
And the simple answer, based on the principle that was laid out in the initial announcement, is broadly yes. Inclusion is definitely expected.
And this is a huge but.
The entire conversation, everything we're about to discuss, it all hinges on one single crucial variable that hasn't been defined yet.
And that is the definition of high income.
That's it. That phrase is everything.
So we are dedicating this deep dive to walking you through every rule, every historical precedent, and every potential pitfall. We're going to clarify the income thresholds from the past.
We'll also debunk some of those persistent myths.
Oh, absolutely. The ones about needing to file taxes or that this is only for people who are working.
Which is completely irrelevant.
Completely. And we'll guide you through how a payment like this would likely be delivered. So if you are on a fixed income, this analysis is going to give you the definitive information you need about this potential $2,000 plus payment.
Welcome, and thank you for trusting us with this deep dive.
Yeah,
Our mission today is very specific and, I think, very critical. We
absolutely.
want to cut through all the speculation, all the misinformation that's already flying around about this significant financial update, and just provide some actionable clarity.
And this isn't just some abstract policy discussion, is it? I mean, this is information that directly impacts the bank accounts of millions of people.
Millions.
People who rely on monthly federal benefits. We're talking Social Security retirees, survivors, individuals on SSDI, that's Social Security Disability Insurance.
And SSI, Supplemental Security Income.
Right, the need-based benefit, plus VA benefits, and of course, Railroad Retirement Board benefits. We know this community has been, well, historically frustrated.
Frustrated is a polite word for it.
It is. They feel overlooked or tangled up in all this bureaucratic red tape during previous payments.
And that frustration is completely warranted. I mean, the psychological toll of just the uncertainty of not knowing if financial relief is coming your way, it's very real.
It's immense.
So our commitment here is to address that emotional context with clear, factual information based exclusively on the sources that are available right now. We want you to walk away from this knowing exactly where you stand.
Okay, so let's start at the source. We've isolated the core statement that started all of this.
The exact words.
The president announced a proposal for, and I'm quoting here, at least a $2,000 dividend for everyone will be paid, not high-income people.
Okay. That statement alone is a really powerful starting point.
It is. It locks in the potential amount, which is significant, $2,000 or even more.
And it establishes that the sole primary reason for being excluded is income.
Not high-income people. That's the phrase that matters.
Right. Let's unpack that core concept, starting with where the money is actually supposed to come from. Because the mechanism here, the funding, it fundamentally differentiates this payment from, say, the stimulus checks of the pandemic era.
It's a completely different animal.
Right. In those previous relief efforts, like the CARES Act checks, the money was largely generated through deficit spending.
Right. The government was essentially borrowing the money.
Exactly. And the goal was to stimulate the economy and to do it fast during a crisis. But this new proposal is structured very differently.
It is. The source material explains this explicitly. The funding is proposed to come from the distribution of revenue generated by federal tariffs.
Tariffs, okay.
And this is a distinction that is just crucial for you to understand. Tariffs are, essentially taxes or duties that are levied on goods and services imported into the United States.
So when companies bring products in from other countries, they pay a tax on them.
Precisely. And when those fees are collected by the government, they become federal revenue.
So the proposal isn't even labeling this as traditional stimulus or relief in the same way.
No, not at all.
Instead, it's being framed as a dividend. It's a return of revenue that's being distributed back to the population.
Which is a very different economic argument. The idea is that the revenue generated by our national trade policy should be shared directly with the citizens.
And that framing, the whole using trade revenue thing, that's a critical political and economic point, isn't it?
No, it's huge. It suggests a policy mechanism that avoids increasing the national debt to fund the payment.
Which is always a major point of contention in these discussions.
Always. And if we look at the historical precedent for this kind of approach, I mean, distributing specific categories of federal revenue directly back to the people is a tool that's been discussed in various forms throughout American history.
Rarely on this scale.
Rarely, if ever, implemented on this scale. It really creates an entirely separate category of financial aid.
Okay, so if we go back to the specific language that was used, that quote, let's repeat it.
Quote, "At least a $2,000 dividend for everyone will be paid, not high-income people."
And that phrase right at the end immediately brings us to the biggest piece of missing information, the elephant in the room.
That phrase, "not high-income people," is the gravitational center of this entire proposal.
Huh.
It is the single most important detail that we are currently missing from any kind of legislative text.
It's everything.
Until Congress or the relevant agencies actually define that specific income level, we can't finalize who is eligible. We can't finalize distribution models. It's all on hold.
So what is the threshold specifically? I mean, does high income mean an individual who is earning, say, $50,000 a year, $75,000, $100,000?
That is the multi-billion-dollar question.
That line in the sand dictates who gets the payment and who doesn't, and it determines the size of the population receiving the benefit.
And while that ambiguity is, it's frustrating, we can offer some pretty strong reassurance to our core audience here.
To seniors, older adults, people with disabilities, low-income individuals.
Exactly. For the vast majority of beneficiaries who are living solely on fixed incomes, your eligibility is only going to hinge on your income being below that yet-to-be-defined threshold.
And given that the average fixed income is significantly below any historical or even likely definition of high income.
Right. The chances of you being included based on this singular criterion are exceptionally high.
So the uncertainty then isn't really about the principle of whether fixed income folks will be included.
No, not at all.
It's about the exact number that Congress will ultimately decide on.
Right.
The mechanism itself is clearly designed for a very widespread distribution, excluding only the very top end of the income spectrum. Okay, so let's move past the funding mechanism for a minute and address the most urgent practical question for our listeners.
The one everyone is asking.
Are recipients of federal fixed benefits, so Social Security, SSI, SSDI, VA, spousal benefits, survivor benefits, and Railroad Retirement Board, are they included in this dividend proposal?
The simple, clear answer based on all historical precedent and the income-based principle that's been articulated is broadly yes.
Broadly, yes.
But we need to define exactly why that is the case and maybe clarify the different benefit types we're talking about because the details really do matter here.
Okay, let's break down those categories just for clarity's sake. So first, we're talking about SSDI.
Social Security Disability Insurance. So benefits for those who have a sufficient work history but are now disabled.
Then there's SSI.
Supplemental Security Income. That's the need-based, very low-income program for aged, blind, or disabled individuals. And crucially, it's often paid to people who don't file taxes.
Right. Then you have your standard Social Security retirement and survivor benefits.
The traditional monthly payments that are based on the work credits you've earned over your lifetime.
And, of course, VA disability compensation or pension.
Right. Benefits for veterans, especially low-income or disabled veterans.
And finally, RRB.
Railroad Retirement Board benefits, which is, very similar to Social Security, but it's specifically for railroad workers.
Okay, so for all those groups, why are we so confident they would be included?
Because when Congress writes legislation for widespread financial payments like this, especially ones framed as dividends or broad economic relief, they are always income-based.
Always.
They set a specific threshold, and they use a standard income metric to do it. Typically, it's your adjusted gross income, or AGI, or sometimes a modified AGI.
What they don't do is write in specific exclusions for certain types of income.
Exactly. Lawmakers do not usually insert language that says something like, we will count your W-2 wages, but we will specifically disqualify your Social Security retirement payments. It just doesn't happen that way.
That distinction is so key. The money you receive from these benefits, whether it's SSDI, VA, or retirement, it's treated as income.
That's right.
And if your total income from all sources is below the threshold, you qualify. period.
The reason this community often feels left out is usually because of the bureaucratic hurdle of actually getting the money.
Especially for non-filers.
Exactly, which we will definitely discuss in more detail later. But it's not about the initial eligibility.
And we have to acknowledge where that frustration comes from.
We do. During the first 2 rounds of pandemic relief, there was a lot of initial confusion and some serious delays for Social Security non-filers.
It was a mess at first.
It was. But once the legislation was clarified and the agencies figured it out, inclusion was confirmed. And that precedent is exactly why we are so confident now. The intent is always to include low-income Americans, regardless of the source of that low income.
So just to be crystal clear, the comprehensive list of those who are expected to be covered includes virtually all low-income and fixed-income individuals whose total annual income falls below that final limit.
You are not excluded just because you rely on federal benefits rather than a traditional paycheck.
That's the bottom line.
And to put an even finer point on this, the critical watchword in the final legislation when it's written will be AGI, or MAGI, as long as your benefit payments count toward that total income number, and that total number is below the high income cap.
You're in.
Inclusion is assured. The fear of being excluded simply because you're a senior or you're disabled is, historically speaking, unfounded when the legislation is explicitly income-based.
Now, let's dive deep into the numbers. To really understand what not high income is likely to mean for this dividend, we have to look at the best historical roadmap we have.
And that's the income limits that were established for the 3 previous stimulus checks, the ones administered between 2020 and 2021.
Using this historical data, it gives us critical context.
It does. It allows you, the listener, to project your likely status, which can hopefully reduce some of that anxiety. We can't guarantee the final number will be the same, of course, but history offers some very strong clues.
Okay, so let's run through the specifics, the precedents. Let's focus on the individual thresholds first.
All right.
For the very first stimulus check, that was the $1,200 payment under the CARES Act, the individual income threshold where the payment started to phase out was $75,000 in adjusted gross income.
But the full payment didn't phase out completely until $100,000 for single filers.
Right, and that $100,000 completion point, that became a point of confusion for a lot of people.
It did. So for the next 2 payments, stimulus check number 2, which was $600, and stimulus check number 3, the $1,400 one.
Congress tightened the limits.
They did. The individual threshold where the phase-out started was set definitively at $75,000 AGI.
So that $75,000 mark is the most recent and the most consistently applied precedent for defining what a non-high-income individual looks like.
It's our best guidepost.
And this data is immensely relevant to you, the listener. We'd ask you to just consider your own annual adjusted gross income.
AGI is usually the easiest metric. It's essentially your total income before you take certain specific deductions.
So is your income below that most common, most stringent historical limit of $75,000 a year as an individual?
And if your answer to that internal question is yes, and for the vast majority of people who are relying solely on Social Security or SSDI or SSI, the answer is comfortably yes, then you've met the primary financial eligibility requirement.
At least based on all past precedent and the stated intent of this new dividend proposal.
And if you're married and filing your taxes jointly, the historical precedent for that phase-out starting point was typically double, so $150,000 AGI.
And just a friendly reminder to our listeners, we love your engagement in the comments, but please respect your privacy. Do not share specific personal income figures.
Please don't.
Knowing where you stand, just for yourself, relative to that historical 75,000 individual or 150,000 joint threshold is really the essential takeaway here.
Now, we should probably address the critical mechanism for those individuals whose income does go over that threshold.
Right. Maybe because you have a fixed benefit plus some part-time work, or you have a substantial private pension kicking in.
This is where the phase-out comes into play.
The phase-out. It's a legislative tool that's designed to prevent an unfair, what they call a cliff effect.
Exactly. It avoids a scenario where someone earning, say, $74,999 gets the full $2,000.
And then someone earning just $2 more at $75,001 gets $0.
Right. It creates a gradual linear reduction in the benefit amount as your income rises.
So how does that formula typically work?
Let's detail it because it's critical for our informed listener. Based on the past stimulus models, the reduction rate was set at $50 for every $1,000 you earned above that initial threshold.
50 for every 1,000.
That specific ratio is often linked to approximating a 5% effective tax rate on the excess income.
Okay, let's run a detailed example so this is really clear. Let's assume the final threshold for an individual is 75,000 AGI, and the payment is $2,000. What happens if someone earns, say, $78,000?
Okay, so at $78,000, they are $3,000 over the limit.
Right.
Using that 50 per thousand formula, you'd calculate $3,000 divided by 1,000 equals 3.
Okay.
You then multiply that 3 by $50, which equals $150.
So 150 is the reduction amount.
That's the amount that's phased out. So they would receive $2,000 minus $150 for a final payment of $1,850.
And this gradual reduction just keeps going until the payment hits zero.
Exactly. If the reduction is $50 per thousand, it takes 40 of those $1,000 increments to phase out a $2,000 payment completely.
So if the starting point is 75,000,
then the payment becomes zero once your income hits 115,000 AGI for an individual.
the crucial reassurance here is really twofold then.
It is. First, fixed benefits like Social Security are very rarely high enough on their own to trigger this phase-out limit for the majority of recipients.
And second,
Second, if your income is just slightly above the threshold, you will still receive a substantial portion of the dividend. You are not automatically disqualified. Understanding the phase-out is crucial for people who have that mix of income.
fixed income plus a little bit from somewhere else? Okay, we need to transition now and start busting the two most persistent and frankly anxiety-inducing myths that confuse fixed income recipients every single time a government payment is announced.
Every time. And this confusion often centers on seniors and people with disabilities who, use the SSA or the VA as their main point of contact with the government.
So the first major myth that we have to comprehensively debunk is the idea that you must file a tax return to be eligible.
This assumption causes an immense amount of stress for non-filers.
Let's be definitive here, and we can rely on the mechanism that was established in previous rounds. The ability to receive this dividend is entirely income-based.
It has nothing to do with whether you filed a tax return whatsoever.
So why is this myth so persistent? Where does it come from?
It's historical. When the very first stimulus checks were implemented, the IRS initially only had data for people who filed taxes. That's who was in their system. But subsequent legislation clarified that the government could use data from non-filing benefit recipients, specifically from the Social Security Administration, the Veterans Administration, and the Railroad Retirement Board, to automatically process those payments.
And this technical detail is what matters most to you, the listener. If you are a non-filer, the SSA already has your income data.
They do.
And they are generally equipped to share that information directly with the Treasury Department.
Which means you receive the money through your existing payment method.
Your direct deposit details, your direct express card.
Without ever having to touch a tax form.
The SSA's role here is often overlooked, but it is absolutely essential.
It is. They act as the data conduit for low-income beneficiaries who fall below the income level required to file taxes. They process your benefits, and in cases like this dividend, they provide the necessary data to confirm your income and where your payment should go.
So it doesn't matter if you file every year, or if you're required to file because you have a higher income, or if you haven't filed in 20 years because your income is solely from, say, non-taxable SSI.
Your filing status does not determine your eligibility.
It only determines which government agency is processing your data, IRS or SSA.
Exactly. The second massive misconception that just needs to be shattered is that this dividend is only for working people.
We hear this all the time.
The proposal is for everyone below the high income threshold.
Again, we can state this definitively. It doesn't matter if you're currently working or if you're retired or if you're disabled and unable to work.
The eligibility test is always focused on the dollar amount of your annual income, not the activity that generated it.
If your only income is your fixed benefits, you are included, as long as that income is below the limit.
Working status is entirely irrelevant to receiving the benefit.
Okay. So while the goal is broad inclusion, we have to pivot now to some critical financial exclusions and offsets.
Right. These are often the reasons that a payment that is technically due to a recipient never actually reaches their bank account.
And the most common exclusion involves federal back taxes.
If a beneficiary owes significant past taxes to the federal government, specifically to the IRS, the dividend check may not be issued directly to them.
What happens instead?
Instead, under something called the Treasury Offset Program, or TOP, the government will keep the dividend and apply it directly against your outstanding federal liability.
So they're not going to write you a check for $2,000 just to have you turn around and pay that same $2,000 back to the IRS.
Exactly. It's an automatic offset, and it's mandatory under federal law when certain debts are owed to the government.
It's vital to note, though, that this is usually restricted to federal debts.
That's a great point. State taxes, local taxes, or private debts like medical bills or credit cards are generally not covered by the TOP mechanism for offsetting these specific dividend payments.
The second important offset that we saw in previous stimulus rounds, and could see again, relates to past due child support.
Yes. In the past, these payments were vulnerable to being offset to cover significant court-mandated past due child support obligations.
It's often a nuanced legal point, but it remains a potential impact that could reduce or even eliminate the payment for some recipients.
For the overwhelming majority of our fixed income audience, though, people who do not owe substantial federal back taxes or past due child support, these offsets should not be a concern.
Your payment should flow directly to you.
And, of course, we have to emphasize we're providing general rule guidance here based on the sources and historical precedent.
This isn't personal financial advice.
No. If you have significant federal debt or complex legal obligations, the best course of action is always to consult an accountant or a legal professional to understand your personal liability status regarding these offsets.
So, after this pretty extensive deep dive into the eligibility mechanism, where exactly do we stand today?
Right. What's the current status?
We have a clear public proposal for a $2,000 plus dividend. It's funded by tariff revenue, and it's targeting everyone except high-income people. But we are still operating with two crucial gaps in our information.
Absolutely. And these two missing pieces create a necessary delay. First, we need the official, legislatively defined income threshold.
A magic number.
Is it going to be that $75,000 individual AGI precedent? Or will it be adjusted for inflation since 2021? Until that specific number is written into law, we can't confirm the exact size of the excluded population.
And second, and this is the big one, we need the passage of the necessary legislation.
Public announcements are only the first step.
Right. Congress has to draft, debate, and pass the bill that actually authorizes the expenditure of that tariff revenue for this dividend. And that legislative process is often lengthy and subject to change.
It can be very lengthy. So until those two pieces are confirmed, the final high-income definition and the legislative passage, we can't provide an official payment date.
And that uncertainty is precisely why reliable, verifiable updates are so crucial right now.
Because scams are inevitably going to proliferate.
This brings us directly to what might be the single most critical section for the safety of our listeners: financial protection and scams.
Yes. Our audience seniors, older adults, people with disabilities, and low-income individuals are, statistically speaking, the most targeted by financial fraud.
Especially when news of a large potential payment like this is circulating.
And this is a very stern and necessary warning. These fraudsters, they're highly organized, and they capitalize on the confusion and the urgency surrounding money. They will use the exact figure, $2,000 plus, in their attempts to steal your money or your critical personal information.
So we have to be crystal clear on this point.
Absolutely. No legitimate government agency, not the IRS, not the Social Security Administration, not the VA, not the Treasury Department, will ever initiate contact by calling you, texting you, or emailing you to demand money.
Or to request your bank account number.
Or insist you pay a fee using gift cards or Bitcoin or a prepaid debit card to release your dividend.
If they call you, it is fraud. Hang up the phone.
The government communicates critical financial updates and payment confirmations through highly formal official channels.
That means official letters mailed to your residence with a verifiable letterhead.
Or through verified, secure government websites like SSA.gov or IRS.gov. They will never cold call you demanding sensitive financial details.
You need to listen for the key warning signs. Things like urgency. They'll say you have to act now.
Right. Or demands for payment in unconventional methods. No government agency wants an iTunes gift card.
Threats of legal action if you don't comply immediately, or being asked to verify your full Social Security number over the phone. These are all immediate red flags.
And we advise every listener to have a specific plan in place for if you receive suspicious contact. If you get a call, just hang up immediately.
Don't engage. Don't argue.
Just hang up. If you receive a text or an email, delete it without clicking on any links. Do not engage with the scammer. And then take the essential step of reporting the attempt immediately to the Federal Trade Commission, the FTC. Your report helps law enforcement track these criminal operations.
And our commitment to you is continuous. As soon as the final official definition of high income hits the wire, or when the distribution methods are solidified through an enacted law, we will issue an immediate deep dive.
And we'll break down payment dates and the specific distribution logistics, direct deposit, direct express, paper checks, all of it.
So please use the comments section to ask any questions that we haven't answered or suggest areas where you might need a dedicated follow-up discussion.
Things like specific scenarios related to being an international recipient or having a representative payee. Your input ensures we focus on the issues that are most important to you. So, as we conclude this expensive deep dive, let's provide a final, concise summary of the most important facts for you, the listener, to retain right now.
First, the update. We are discussing a potential $2,000 plus financial dividend, which is distinct from past stimulus payments.
And it's funded by federal tariff revenue and aimed at a very widespread distribution across the populace.
Okay. And who qualifies?
Fixed income recipients, that includes SS retirees, survivors, SSI, SSDI, VA, and RRB beneficiaries, are fully expected to qualify.
And your eligibility is contingent only on your total annual income being below that finalized legislative threshold.
Which, based on historical precedent, we expect will be around $75,000 for individuals and $150,000 for married couples filing jointly.
And just as important, what doesn't matter?
Your eligibility is not determined by whether you file a tax return. The SSA and VA data will be used for...
And your current working status is entirely irrelevant.
It's a simple, singular income test.
There are a few key caveats, though.
Yes. If you owe significant past federal taxes or child support, you need to be aware that your payment may be offset under the Treasury Offset Program. And always, always remain vigilant against scammers who are using this news to solicit your personal information.
We understand that this potential payment offers far more than just monetary value. I mean, it offers crucial breathing room.
It's a hedge against inflation.
It can help with unexpected bills, and it offers a degree of dignity for those who are struggling to manage on fixed budgets. We're here to be your trusted, comprehensive guide through these often confusing policy changes.
The process is in motion, but we are awaiting those two crucial legislative details, the final income cap and the final bill passage. We will not stop researching until we have those definitive answers for you about when the money will arrive.
So we strongly encourage you to subscribe to the deep dive and make sure your notifications are turned on. You absolutely do not want to miss our next update, which will focus entirely on the distribution methods and payment dates once that crucial legislative information is finally made public.
And please, share this deep dive with any other friends or family members on a fixed income who need this kind of precise, clear information.
And finally, a thought to leave you with.
This proposal, driven by the distribution of tariff revenue, it establishes a really unique policy mechanism for financial aid. It diverges significantly from previous relief efforts that were funded by increasing the national debt.
So think about the broader economic debate that this sparks. Should widespread financial support be primarily financed through specific trade revenues, making it, revenue neutral?
Or should it remain tied to deficit spending when a crisis hits? This distinction, it raises some really important questions about the entire future of how government aid is financed.
Welcome to the Deep Dive. Today we are taking a scalpel to the mountain of financial news to deliver clarity on one of the most hotly debated proposals coming out of the administration right now.
This is a big one.
It really is. We are talking about the very real possibility that thousands of dollars, specifically a $2,000 direct payment, could be on its way to you as emergency economic relief.
That's the critical update. And for our listeners, particularly those who rely on a fixed income, retirees or people on benefit programs like Social Security, SSI, SSDI, or VA benefits, we know your single biggest question is, do I qualify?
Of course.
We have heard the confusion, especially surrounding the jargon about working families. We are going to dedicate significant time today to provide concrete assurance about why this money is absolutely intended for you.
And this is, far beyond just some political rumor. This potential $2,000 payment is being discussed almost daily by the highest-ranking officials. We're talking the president, the Treasury Secretary, influential senators, and the updates are consistent and they're highly detailed.
Yep.
If this is approved, it offers a necessary and, frankly, a substantial financial buffer. It could provide immediate breathing room against relentless inflation, high utility bills, and, well, the rising cost of everyday essentials.
Our mission today is comprehensive. We will break down the exact timeline, but we're also going to dissect the highly unusual, very specific funding mechanism for this. Most importantly, we'll provide the detailed technical assurance on eligibility, explaining the tax credit structure, and detailing the critical legal protections ensuring that money is safe from garnishment once it lands in your account.
So if your financial stability hinges on a fixed income, this deep dive is required listening.
Absolutely.
Okay, let's set the stage and define the terrain we are navigating. Our goal is to filter the speculation surrounding what the administration has repeatedly termed dividend payments.
Right. That's the key word they're using.
It is. And for you, the listener, we need to be clear. A dividend payment in this context is simply the administration's preferred political term for what is functionally a stimulus check or a direct emergency relief payment. And the consistent figure attached to this conversation is $2,000.
And what's fascinating here is the sheer intensity of the political commitment. I mean, we've seen these proposals before, right? But usually they remain kind of vague until the legislative details emerge.
Sure, there's trial balloons.
Exactly. But here, the administration is front-running the plan, giving regular public updates. When Treasury Secretary Scott Bessent, a key financial architect, publicly discusses the plan's funding and purpose, and the president speaks on it repeatedly, it signals that this is not some disposable political ploy.
It's more than that.
It suggests a high degree of confidence and intent to push this through, likely because they view it as politically essential for the coming election cycle.
That political momentum makes our deep dive essential. I mean, our fixed income listeners, retirees, disabled individuals, and veterans, they need clarity. They need to know with certainty if they qualify, given the confusing language, and just as important, when this critical financial support might actually materialize.
And managing expectations regarding the timeline is vital, but we must emphasize the weight of this political promise. The administration is committing massive political capital and, as we'll discuss, nearly 2 years of specific federal revenue to this one promise.
Wow.
If they fail to deliver $2,000 after building it up this much, the political fallout would be immense. The commitment level itself is a powerful indicator of a high probability.
Okay, let's unpack this first major technical hurdle. Where is this $2,000 payment actually supposed to come from? This is the most complex part of the proposal because it explicitly rejects the typical mechanisms of stimulus funding.
Right.
Like borrowing through treasury bonds or tapping into general revenue reserves.
This is what distinguishes this payment conceptually and, well, politically. It's why the term dividend or rebate is being used. The stated mechanism is the funding of these payments entirely through tariff revenue.
Tariff revenue. So break that down for us.
The plan is to strategically peel off roughly $600 billion that has been collected from tariffs, which are basically taxes levied on imported goods, and redistribute that money back to the American population.
$600 billion. That's an astronomical figure. Let's ground that number in reality. How much distribution does $600 billion actually cover, and where does that money typically go now?
The math is indeed enormous. The proposal aims to cover approximately 85% of the population, which translates to roughly 284 million eligible individuals. Now, this excludes considerations for dependents, which usually complicates the final number a bit.
Sure.
But if you just multiply 284 million by the $2,000 payment, the required cost comes out to roughly $568 billion.
So the $600 billion they've earmarked is just about right.
It is. It's specifically earmarked to fund this relief payment entirely, with a small buffer built in.
And the context for that scale is staggering. You mentioned this is not just a fraction of collected tariffs.
That's right. Our sources indicate that $600 billion is nearly 2 years' worth of total tariff collections. So to fully fund this proposal, the government would essentially have to divert practically all the revenue collected from tariffs over a substantial 24-month period.
Just for this single one-time distribution.
Exactly.
Here is where I have to push back with a critical question. If the government is diverting nearly 2 years of tariff revenue, which normally goes into the Treasury for other purposes, subsidizing domestic programs, maybe offsetting costs of border security, or just contributing to general operational funds, doesn't this diversion necessarily impact other areas of federal spending?
It has to.
Is this truly found money, or is it robbing Peter to pay Paul?
That's a crucial, astute question that highlights the political maneuvering here. while it's politically framed as a rebate of money collected from foreign entities. The importers, though ultimately we consumers bear the cost, you are absolutely correct. Tariff revenue is not sitting in some separate, unused account.
Right, it's not a rainy day fund.
No, it is integrated into the general fund. Diverting $600 billion absolutely means that specific federal programs or agencies that rely on that general revenue will either have to go unfunded, or the government will have to increase borrowing or cut spending elsewhere to compensate.
So the short answer is no.
No, it's not found money. It's a very intentional, politically charged redirection of funds.
And that explains why they chose this specific mechanism. It allows them to position the payment not as new debt or deficit spending, which is politically toxic to certain factions, but rather as returning money that was already collected.
Exactly.
It makes the payment palatable to fiscal conservatives by framing it as a trade adjustment, not a welfare program.
Exactly. It's highly politically significant. It avoids the argument that they are printing new money or adding to the debt directly, even though the practical effect on the general fund is very similar to new spending. It's an effective rhetorical device, positioning the administration as returning collected revenue to the people rather than increasing the government's overall size.
Now let's pivot to eligibility, which is where we can provide the most relief and correct the pervasive confusion. We heard the Treasury Secretary, Scott Bessent, use the specific terminology that this money would be targeted at working families. This single phrase caused tremendous anxiety for countless retirees and disabled beneficiaries.
And understandably so. We saw mass confusion with listeners writing in saying, I haven't worked in 10 years, I'm retired, I'm on SSDI, am I automatically excluded?
Right.
We must strongly and definitively refute the literal interpretation of working families. That phrase is purely political shorthand. It is broad, encompassing language used to appeal to the tax-paying base, but it is not a legal definition for exclusion.
So just to be crystal clear, if someone is a retiree collecting fixed Social Security, SSI, SSDI, or VA benefits, and they are not currently employed, are they still included in this payment?
Absolutely. Yes, 100%. The crucial factor here is the legal definition of eligibility, and that definition is based solely on your income threshold, specifically your adjusted gross income, or AGI.
AGI.
They do not send an agent to your house to check your employment status. They don't check your work history. They simply check your AGI on file with the IRS.
So what are the anticipated income thresholds? What's the number people need to look at?
Well, the administration initially mentioned a figure under $100,000, but based on all historical precedent from the 3 previous rounds of direct payments and, current discussions among lawmakers, the threshold is highly anticipated to settle at $75,000 for an individual filer.
Okay, $75,000.
And $150,000 for a married couple filing jointly. If your AGI falls below those levels, whether that income is derived from a salary, a pension, or Social Security benefits, you qualify.
That means the vast majority of fixed income recipients whose total income typically falls far, far below that $75,000 mark are included.
Precisely. If your income, whatever the source, is below the legal cutoff, you are included. The panic surrounding the working families phrase needs to be dismissed, because if the goal is broad economic relief, excluding the massive fixed income demographic would completely undermine the entire purpose.
It would be self-defeating.
Completely.
Let's elaborate on the political and historical confidence we have in this inclusion, because I think this context is the most reassuring for our listeners. Why are we so confident seniors and disabled individuals will be included?
We have to view this through the lens of political strategy, especially given the projected timeline, which places the distribution right before the midterm elections. Seniors and retirees are not just a voting bloc. They are arguably the largest, most reliable, and most engaged voting demographic in the United States.
They have the highest turnout rates by far.
Absolutely. In fact, studies show seniors often vote at rates 20 to 30 percentage points higher than younger demographics in midterms.
That's a huge difference.
It is. So to propose a highly publicized, substantial $2,000 cash payment intended to generate goodwill and economic stability, and then arbitrarily exclude the highest turnout demographic, it would be political malpractice of the highest order.
It would be ridiculous.
It would be ridiculous. Lawmakers know that distributing this money to this group is essential for achieving the political objectives of the payment. It's an incentive that targets the core voting base.
It really is.
Furthermore, we have a bulletproof track record. Let's just review the past stimulus efforts from 2020 and 2021. We had 3 rounds: the $1,200, the $600, and the $1,400 payments. In every single instance, Social Security retirees, SSDI recipients, survivors, SSI recipients, and VA beneficiaries were fully included.
So the precedent is there.
The precedent is there, and the mechanism to deliver the money is already set up through the Social Security Administration's existing payment systems. The pipes are already built.
That is the crucial proof. The logistical capacity and the political precedent are already firmly established.
And we can go back even further for dedicated proof. Back in May of 2009, the government issued a $250 economic recovery payment that went specifically and only to Social Security, Railroad Retirement, and Veterans Affairs beneficiaries.
So they've targeted this group specifically before.
They have. That shows that historically, when the government targets economic relief, fixed income beneficiaries are often the first people they ensure are covered. So the working families language is simply flavor text. The underlying financial rules are what matter.
That transition leads us perfectly to the technical structure of the payment itself. If you qualify based on income, what exactly is this payment, legally speaking? This is critical, especially for those who have very low or even zero taxable income.
This concept is the bedrock of the guarantee for fixed income people. Legally, any federal stimulus or direct relief payment of this nature is structured as an advance of a refundable tax credit.
A refundable tax credit.
This technical distinction is the non-negotiable safety mechanism.
Let's drill down on that term, refundable tax credit, in plain language. Can you explain why it is so fundamentally different from a standard tax deduction, for example?
Absolutely. Think of tax credits in 2 main categories. A non-refundable tax credit is limited. It can only reduce the amount of tax you owe down to 0. So if you owe $100 in taxes and you have a $500 non-refundable credit, you only get to use $100 of it.
And the rest just disappears.
Right. And you get nothing back in cash. If you owe 0 taxes to begin with, a non-refundable credit gives you 0 benefit. It's worthless to you.
But because these dividend payments are designated as refundable,
they flip the script entirely. A refundable tax credit means that even if a person's income is 0, and even if their tax liability is 0, they are still entitled to the full amount of the credit. The government cuts a check directly to them for the difference.
Okay.
This structure is the singular reason why the previous payments were successfully distributed to millions of SSI recipients who may have 0 taxable income and are not even required to file a tax return.
So the refundable nature ensures the payment is treated as an entitlement, regardless of filing status or tax debt. It essentially guarantees the money gets distributed to those with the lowest incomes.
Precisely. The goal is liquidity and stability for low-income populations. By making it refundable, Congress ensures that the lowest income individuals, who are often the most cash-strapped, receive the full benefit regardless of whether they engaged with the tax system that year.
This raises a point we must elaborate on. If a large segment of this fixed income population is not required to file a tax return because their income is below the minimum threshold, how does the IRS know where to send the money? What is the implementation mechanism for non-filers?
That's a key piece of operational detail that should provide a lot of comfort. The IRS doesn't rely on the tax return in these specific circumstances. For beneficiaries, the IRS performs a critical cross-reference using existing data streams.
So they talk to other agencies.
They work directly with the Social Security Administration, the SSA, and the Veterans Affairs, the VA systems. The SSA and VA already maintain the necessary banking information and address data for all beneficiaries receiving monthly payments.
So the infrastructure is already fully integrated. The information is already there.
It is. If you are a non-filer on Social Security, the IRS simply pulls your payment address or direct deposit information from the SSA's master file and issues the advanced tax credit payment that way. You do not need to take any action. No special application is required.
And that's why, in the past, if you got your benefits on a Direct Express card,
the payment will likely arrive on that same card. The only question remains your income threshold. Your filing status is immaterial.
We've established the what and the who. Now for the most pressing question. When might this critical $2,000 payment actually arrive? What is the official current indication regarding the timeline?
The official indication, based on statements from the administration and lawmakers discussing the legislative calendar, suggests the money is, and I quote, likely coming sometime in the middle of next year or possibly a little bit later than the middle of next year.
Okay, so translating that into a specific calendar window, We're looking at late summer or early fall of next year.
That's correct. We should specify this likely means late Q3 or early Q4 next year. So, for anyone struggling with bills right now, this time frame is not immediate relief, and it's crucial to manage those expectations.
Right.
They are still developing the final detailed legislative proposal.
And as we discussed earlier, we have to acknowledge the political reality underpinning this timeline.
Indeed. The projected distribution window, late summer, early fall next year, is perfectly timed to coincide with the run-up to the midterm elections.
Of course it is.
It's a classic political strategy. It aims to maximize the economic feel-good factor just before the electorate goes to the polls. It is intended to, bait the hook, providing a highly visible cash-in-hand benefit right before a major election cycle.
However, we need to stress that this remains a preliminary plan. Lawmakers do not yet have a definitive, signed-off distribution date, and the whole mechanism is subject to legislative negotiation.
Precisely. This is not codified law yet. The timing is a target, not a guarantee. You should absolutely not be counting on this money arriving next month. But this target timeframe holds true unless a specific, severe external economic condition arises.
And that leads us to the accelerator condition. What event could trigger this payment to arrive significantly faster than the middle of next year?
The economy itself is the ultimate catalyst. The current sort of leisurely timeline assumes economic stability. If, however, the economy experiences a sharp, severe contraction, a deep recession, or what many analysts call a hard landing in the near term, say, over the next 4 to 6 months,
The calculation changes.
the political calculation shifts instantly from election timing to emergency stabilization.
So, in a scenario of severe contraction, the administration would essentially discard the political calendar and move immediately.
They would have to. An imminent economic crash would mandate an immediate, aggressive response. The administration would trigger massive quantitative easing, that's money printing, and immediate direct cash distribution to stave off a systemic collapse.
And that's where we hear those dramatic terms.
Yes, the source material refers to this as pulling out the dozers and implementing helicopter money, which basically means pushing cash out to individuals as fast as the payment systems will allow.
And let's address that number we mentioned in the overview. If a deep crisis were to occur, why would the intervention be potentially on the scale of $15 trillion, far exceeding the stimulus efforts we saw a few years ago?
This is a crucial distinction between preventative stimulus and emergency response. The previous stimulus rounds were focused on keeping the economy afloat during mandated shutdowns. If we face a fundamental structural crisis now, with high debt loads and entrenched inflation, the response needed to stabilize global markets and prevent a complete liquidity freeze would be exponentially larger.
Just a different scale entirely.
A different scale. Analysts suggest that given the current global economic entanglement and the risk of cascading failures, the required liquidity injection, the money printing, could necessitate deploying figures in the $10 to $15 trillion range. That dwarfs the $6 trillion printed during the last major intervention.
So the message is clear. The preliminary target is mid-next year, but watch economic indicators closely. A sudden deep recession changes everything and could mean immediate, large-scale intervention.
That's the takeaway. The current plan is political. The accelerated plan is purely economic triage.
Now, let's turn to safety and security. When you announce a $2,000 payment, you inherently invite scams, and our fixed-income listeners need detailed reassurance regarding protection from predators and financial institutions.
Safety is paramount. First, let's talk about garnishment. Previous stimulus checks included strong federal protections. Now, a few narrow exceptions do exist, specifically for federal debts like back taxes owed to the IRS or specific federal student loan defaults, and most notably, court-ordered back child support.
Okay.
But for the vast majority of recipients, the funds are protected from general private debt collectors, credit card companies, and other creditors.
Can you elaborate on the specific legal mechanism that ensures this protection? What prevents a typical debt collector from sweeping the money once it hits the bank account?
The protection stems from federal statutes that specifically exempt certain types of federal benefit payments from standard garnishment orders. And those protections are typically extended to these direct advanced refundable tax credits. The purpose is to ensure the money provides stability, not merely to pay down old consumer debt.
So the government steps in.
The Treasury Department issues guidelines to financial institutions, making it clear that these funds should be protected when deposited, often requiring banks to automatically review accounts to ensure the protected funds are not improperly seized.
That distinction provides substantial peace of mind for listeners struggling with older debts. Now, concerning eligibility for means-tested programs, will this $2,000 disrupt benefits like s.n.a.p, Medicaid, or housing assistance?
This is a critical point for low-income beneficiaries. Because the payment is legally structured as an advanced refundable tax credit, it is generally treated differently than regular income. The federal goal of these payments is to enhance economic stability without triggering a loss of essential safety net benefits.
So it shouldn't count against you.
Exactly. The rules implemented for previous stimulus rounds ensured that the payments did not count against income or resource limits for programs like s.n.a.p, SSI, or Medicaid. We anticipate these non-inclusion rules will apply again, ensuring that $2,000 does not cause a lapse in your critical health care or food assistance.
And for those beneficiaries who are still working, those on Social Security or SSDI who have specific earned income limits, does this $2,000 count against those limits?
No, it does not. The Social Security Administration, the SSA, has very specific rules regarding earned income limits, the income you receive from a job, that determine if your monthly benefit is reduced. This $2,000 payment is an advanced tax credit. It is not earned income.
It's a different category of money.
Completely different. Furthermore, eligibility for the $2,000 is based on your total adjusted gross income, your AGI being below the threshold, not the SSA's specific definition of earned income. If you meet the AGI cutoff, you receive the payment, and it does not affect your monthly benefits.
Now, we absolutely must spend a substantial amount of time on the scam warning. When the phrase thousands of dollars is broadcast across the news, fraudsters see a massive opportunity, often specifically targeting vulnerable populations who need this money most.
This is the most vital segment of the entire deep dive. You must be hypervigilant. We need to detail the primary rule. The Internal Revenue Service, the IRS, the Social Security Administration, the SSA, and the Veterans Affairs, the VA, will never initiate contact with you via an unsolicited phone call, text message, or email asking you for money, banking information, or personal data to secure or process your $2,000 payment.
They will never demand a processing fee, a deposit, or an administrative charge.
Never. Any contact demanding immediate payment or asking you to buy gift cards or asking you to wire money in order to receive your government benefit is a definitive scam. Let's look at specific common scam tactics listeners must watch out for.
Okay, first up, the verification link scam.
This one is rampant via text message. You'll get a text saying, your $2,000 dividend payment is pending. Click this link to verify your identity and banking information. Clicking that link compromises your device and steals your data. Government agencies do not use texts or emails for critical financial transactions. Just don't click it.
Second, the representative pay scam, which targets vulnerable individuals who have someone managing their benefits.
This one is particularly cruel. Scammers will call claiming to be from the SSA, saying there's an issue with the representative payee's account and they need the recipient's bank account or direct express payment immediately to unfreeze the stimulus payment. Hang up immediately. The SSA communicates changes to payees through official certified mail.
And third, the tax debt scare, trying to capitalize on the confusion about garnishment.
Right. They might call claiming the IRS is intercepting your $2,000 payment for unpaid back taxes and that you must pay a fee via a gift card or Bitcoin to release the funds. This is a scam. If the IRS intercepts a payment, they notify you via official letter mail first, and they never, ever demand payment via unconventional methods like gift cards.
So the ultimate rule remains. Only trust official letters delivered by mail or direct information posted on verified government websites, such as the official My Social Security portal.
Protect your information fiercely. If you receive a suspicious contact, hang up, report it to the FTC or the SSA's fraud hotline, and delete the message. Do not engage.
What if the distribution day arrives and a listener's payment is late or they receive the wrong amount?
Patience is key, especially during the initial rollout of a new benefit. Distribution in past rounds took weeks, often segmented by benefit type or birth date. We encourage everyone to use the official My Social Security portal. It is the most reliable place to manage your benefits and get real-time updates regarding your specific payment schedule.
So check there first.
Always. Wait for clear, published government communication regarding delays. If a significant delay occurs, the administration will establish specific, published channels for reporting non-receipt, just as they did for the prior stimulus checks. Do not call the general SSA or IRS lines unless you are specifically instructed to do so.
Let's step back and look at the broader economic context. We're talking about a $2,000 payment designed to provide stability. How does the necessity of this massive one-time intervention connect to ongoing issues like the cost of living adjustment or CLA? Is this payment a tacit admission that CLA is failing to keep fixed income beneficiaries whole?
That is precisely the connection, and it is perhaps the deepest insight we can provide today. The need for a $600 billion one-time cash injection highlights a fundamental failure in systemic support for fixed-income Americans. If the annual HLA increases were truly keeping pace with the actual inflation experienced by seniors, particularly inflation in healthcare, housing, and food, this emergency payment would not be politically or economically necessary.
And KLA is based on the CPIW, the Consumer Price Index for urban wage earners and clerical workers. Why is that index flawed when applied to seniors?
The CPIW significantly underrepresents the spending patterns of retirees. Seniors spend far more proportionally on non-discretionary expenses like medical care and housing, which often inflate much faster than the general goods tracked by the CPIW, like gasoline or electronics.
So their basket of goods is just different.
It's completely different. Therefore, the COA calculation systematically underestimates the true financial stress felt by this population.
So the $2,000 dividend payment essentially acts as an emergency supplemental COA. It's designed to fill the gap that the official CLA formula has failed to address over the past few years of high inflation.
Exactly. It's a short-term, targeted boost intended to give breathing room. It's a political fix to an economic vulnerability. Lawmakers are essentially saying, we know the structural mechanism, CLA, isn't adequately supporting you, so here is a large, visible cash payment to temporarily fix the problem without forcing us to undergo the difficult long-term reform of changing the Cameo formula itself.
That brings us back to the economic reasoning. If this payment is distributed in mid-2026 as planned, it's intended as a short-term economic boost and a political maneuver. If it's accelerated due to a recession, it signals a deeper, immediate need for massive intervention.
In the planned scenario, it's targeted relief. In the accelerated scenario, it's a necessary attempt to prevent a systemic crash. The fact that the plan is even on the table requiring the diversion of 2 years of specific revenue demonstrates the scale of the pressure lawmakers feel to provide substantial relief and demonstrate competence in economic management leading into the midterms.
This political commitment, this massive scale of funding, and the continuous high-level updates lead us to our final provocative thought.
And it's this. Given the administration has committed so hard to finding the $600 billion, diverting nearly 2 years of tariff revenue, having the President and Treasury Secretary publicly validate the $2,000 figure, the potential for public backlash if this payment is ultimately scrapped is enormous.
Failure to deliver would be a catastrophic breach of political trust, especially with the reliable, massive senior voting bloc right before a major election.
That's the key. This proposal has moved beyond the realm of mere political suggestion and into the realm of political necessity. The commitment level suggests this must happen, making it highly probable that the fixed income recipients we are discussing today will indeed receive this $2,000 payment, whether on the planned timeline or an accelerated one. This commitment is the strongest piece of evidence we have.
That context is invaluable for anyone who has been relying on these headlines. Let's bring everything back into sharp focus by summarizing the 4 most critical facts you need to walk away with today.
We want these facts imprinted clearly for your financial security.
First, the target amount. $2,000 is the current figure for this direct dividend payment.
Second, who qualifies? Social Security, SSDI, SSI, VA recipients, and retirees are absolutely included. Dismiss the working families jargon. Your eligibility depends only on your income falling below the anticipated AGI threshold, likely $75,000 for an individual or $150,000 for a couple.
Third, the timing. The current official target is the middle of next year, late summer or early fall. But pay attention to economic news. A severe recession in the coming months would trigger immediate, rapid distribution.
And finally, the protection. This is legally structured as an advanced refundable tax credit, which guarantees the money is secured for you even if you have zero taxable income or don't file taxes. Furthermore, it is generally protected by federal statute from garnishment by private debt collectors and will not jeopardize your vital benefits like S.n.a.p. or Medicaid.
We understand deeply how critical these potential payments are. They can offer dignity, stability, and the necessary financial breathing room to handle rising costs. We are committed to tracking every statement, every legislative action, and every official timeline change the moment it happens.
If you found this deep dive provided the clarity and reassurance you needed, please take a moment to subscribe and turn on your notifications. We are your trusted source for critical financial news, and ensuring you never miss an update on this $2,000 payment or any other essential benefit information is our top priority.
Share this deep dive with any friends or family members who rely on fixed income, and drop your questions or concerns in the comments below. Thank you for tuning in, and we will be back soon with another deep dive into the headlines that matter.
Welcome back to the deep dive. Okay, today we're looking at something pretty big. A proposal that, if it actually happens, could put thousands of dollars directly into the pockets of folks who really, really need it.
That's right. We're talking about a specific, high-level discussion, really, about a significant payment, a $2,000 dividend payment.
And this isn't just some vague idea floating around, is it? It seems pretty concrete, or at least the idea itself is being confirmed at the highest levels.
Exactly. It's been repeatedly endorsed. And look, if you're listening to this, maybe you rely on Social Security or SSI, any kind of fixed income. Well, $2,000 is huge.
Oh, absolutely. It can make a massive difference, right? Like covering rent or unexpected bills. It gives you that breathing room.
It really does. That's why we need to dig into this.
So our mission today for this deep dive is to cut through all the chatter, the speculation. We've got the source material stacked up, recent posts, official statements, some historical financial context too.
And we're aiming to pull out 3 key things for you. First, who exactly is this dividend aimed at? Who gets it?
Right. Second, how realistic is the funding? They talk about how it'll be paid for, but does the math actually work given the huge cost?
And third, maybe the most critical point.
Yeah.
What's the track record here? This isn't the first promise like this. Does that history tell us anything about whether it'll actually, land in people's bank accounts?
Yeah, that's crucial context, especially for our audience. We're talking retirees, folks on low income, people with fixed benefits. They need clarity, not just headlines.
Absolutely. When you're talking about thousands of dollars, the details matter. The income limits, how it gets delivered, that's the stuff that really counts.
Okay, let's unpack this. So the proposal itself, what are we actually looking at? The source material, you said, it's recent posts from the president.
Yes, very recent, very public posts confirming the idea. It's been called a few different things, hasn't it?
Yeah, I saw that, like $2,000 stimulus check or a $2,000 dividend distribution rebate.
Or even just a $2,000 payment to all of us. That last one sounds broad.
Right. But the key now is to get past those catchphrases and look at the actual language. Who is supposed to get this money? That's where we need to start.
Exactly. Let's nail down the specifics.
So Section 1, who's the target for this $2,000 payment?
Well, the amount seems pretty consistent. It's proposed as $2,000, sometimes phrased as at least $2,000.
Okay, so the number itself is clear, $2,000. But the who gets it part, that seems to have shifted a bit.
It really has. Over just the last few weeks, it went from a very broad initial statement to something much more focused.
What was that first message? I remember it causing a bit of a stir.
It did. The first post we looked at, the key words were something like, a dividend of at least $2,000 a person, not including high-income people, will be paid to everyone.
Everyone. That's the word that jumps out. But then that little catch, not including high-income people.
Right. And that immediately creates confusion, doesn't it? What does everyone mean if it excludes a group? And more importantly, who counts as high income?
Exactly. And for people on fixed benefits, that everyone phrasing, it's tricky. Does everyone include someone just getting Social Security or retirement who doesn't file taxes the usual way?
Or someone on SSI? Their income is needs-based, often below tax thresholds. Are they part of everyone? That ambiguity is a real problem when people are trying to figure out if this applies to them.
It causes anxiety, definitely. You see $2,000 for everyone, and then you wonder, wait, but do they really mean me?
Precisely. Which is why the follow-up clarification was so important.
So there was another post. What did that one say?
Yes, almost right away, a second, more specific post came out, and this one sharpened the focus quite a bit. The language changed.
How so?
It stated $2,000 payments were explicitly for low and middle income USA citizens.
Ah, okay. Low and middle income. That's much clearer than everyone except high income.
Much clearer. And that shift in language, that specific focus on low and middle income people,
Yeah.
it matters tremendously for our listeners.
Why specifically? How does that address their concerns?
Because it directly tackles those long-standing worries for seniors, people with disabilities, folks with very little income, or those living only on government benefits. Think about past stimulus efforts.
Right. There was always that question of how they'd find people not in the regular tax system.
Exactly. The administrative hurdle. How do you determine eligibility for someone outside that standard W-2 employee structure. By tying eligibility clearly to income level, not the type of benefit someone receives, it simplifies things massively for millions.
So it doesn't matter if you get Social Security retirement or SSDI or SSI. It's about how much money you actually have coming in overall.
That's the core idea based on this new phrasing. If you get Social Security, that's based on your work history. SSDI, disability and work history. SSI, that's needs-based, so your income is already defined as very low.
So in pretty much all those cases, your annual income would put you in the low or middle income bracket anyway.
Almost certainly.
Yeah.
By any standard government definition, yes. This takes the focus off which benefit you receive and puts it squarely on your total income.
Okay, so this is a key point we can pull from the source material and past actions. Income is the main thing they look at.
Income is the sole metric. Historically, for these big distributions, income is number one. Doesn't matter if you file taxes, don't file taxes, get Social Security, SSI, SSDI. If your income fits the definition of low and middle, then according to this proposal, you'd be eligible.
What's fascinating here is, well, the reassurance that gives people on fixed benefits. Right?
Absolutely. If you're getting, say, the maximum Social Security benefit, or if you're on SSI where the income limits are already very strict, you're almost certainly going to fall well within any reasonable definition of low and middle income.
So people can stop worrying about, do they know I exist if I don't file taxes, or does SSI count? It's just about the total income figure.
That seems to be the clear message from the updated phrasing. It moves the conversation away from the source of the income and focuses purely on the level of income.
And let's be real, for so many of our listeners, their monthly income might be, what, $1,500, $2,000, maybe $2,500.
Exactly. And in that context, a one-time $2,000 payment isn't just helpful, it's transformative. It could literally be a full month's income, or close to it.
That could clear up overdue utility bills, cover a major car repair, pay for needed medication. It's a real material difference.
It's a significant safety net, even if temporary. That's why we're taking this proposal seriously and breaking it down.
Okay, one other detail in that phrasing. USA citizens. That seems pretty clear-cut.
Yes, that handles the residency requirement up front. Based on this specific language, non-citizens, regardless of their income level, wouldn't be included in this particular proposal.
Got it. So the big takeaway from this first section is the target is explicitly low and middle income U.S. citizens. If that's you, based on your income, you're the intended recipient.
Correct. The focus is clear.
Okay, but that leads directly to the next big question. If it's for low and middle income and not for high income, where's the line?
Ah, yes. Section 2, defining high income and figuring out those eligibility thresholds.
And this is where the source material gets a bit vague, right? They didn't actually put a dollar figure on high income.
No, they didn't. The posts clearly state who isn't getting it, high income people, but they don't give an exact number for that cutoff. That's the missing piece right now.
And that number is everything, really, because where they draw that line determines who in the middle class actually qualifies.
Precisely. The entire eligibility for millions of middle-income earners hangs on that definition.
So, since the legislation isn't written, we have to look elsewhere, like past programs.
Exactly. We have to rely on historical context. And thankfully, we have some pretty good recent examples, especially the big stimulus checks that went out in 2021 under the American Rescue Plan.
Right. Those had income limits, so we can use those as a guide.
They're vital for setting realistic expectations. Based on those programs, we can make a reasonable estimate.
What are we thinking? What were those limits, roughly?
Well, for an individual tax filer, the point where payments started to phase out was generally around $75,000 per year in adjusted gross income, or AGI.
Okay, $75K for a single person? What about couples?
For married couples filing jointly, that threshold typically doubled. So around $150,000 per year AGI.
75K and 150K, those were the common phase-out points before, so it's likely they'd use similar numbers again.
It's a strong possibility. These figures are sort of the established benchmarks for where broad stimulus payments started tapering off in the recent past.
But why those numbers specifically? Couldn't they set the high-income bar much lower, say $50,000 to save money?
They could, but it would contradict the stated goal. Let's look at the bigger picture, the economics mentioned in the material.
Okay.
The average household income in the U.S. last year was around $83,000. if the administration truly wants this payment to go to low and middle income people.
Setting the cutoff below the national average wouldn't make sense.
Exactly. If they drew the line at, say, $60,000 or even $70,000 for an individual, they'd be excluding a huge chunk of people who most would consider middle class. People who are definitely feeling the pinch of inflation but aren't technically low income.
So it wouldn't really be a middle income benefit then, would it? It'd just be a low income payment.
Precisely. To genuinely include the middle class, as the phrasing low and middle income implies, those estimated thresholds of $75,000 for individuals and $150,000 for couples seem necessary. They need to be high enough to capture a broad swath of working families.
Okay, that logic makes sense. So bringing this back to our listeners on fixed incomes.
Right. Let's connect it directly. If your total annual income is, say, below $30,000 or $40,000, which is true for the vast majority of people receiving Social Security retirement, SSI or SSDI.
Then you are absolutely, unquestionably within the low income category for this dividend.
Your eligibility, assuming the proposal goes through based on these likely thresholds, is practically guaranteed. You're well below those 75K, 150K marks.
And maybe we should quickly clarify again the different benefit types, just to be sure.
Good idea. Social Security retirement and SSDI, disability insurance, are technically earned benefits based on your work record and contributions. SSI, supplemental security income, is different. It's purely needs-based. It's a safety net for the lowest income seniors and people with disabilities.
So because SSI has such strict income and asset limits already, those recipients are probably the most certain to qualify.
Absolutely. Their income is already determined to be very low by definition of the program. For Social Security retirees, even those who might have had higher earnings during their career and get a larger monthly benefit now.
Their current retirement income still usually falls well below that $75,000 individual limit.
Generally, yes. Even the maximum Social Security benefit is considerably less than $75,000 a year.
So if income is the only factor, what about someone working, say, a minimum wage job, not getting any federal benefits? Are they in?
Yes, absolutely. If an individual works full-time and earns maybe $30,000, $35,000 a year, they're clearly low income by these metrics. They would qualify just the same as a senior living on a similar amount from Social Security.
It's purely about the income number, not where it comes from.
That's the takeaway from the current proposal's language. Income level is the gatekeeper.
There was also something in the source material about the sheer scale of this plan, right? How many people they expect to cover.
Yes, that's another clue about the income thresholds. When they calculated the potential cost, which we'll get to next, the model assumed about 85% coverage of the population.
85%? That's huge. That's similar to the big stimulus checks in 2021.
Exactly the same metric used for the $1,400 check back then. We're talking about potentially reaching around 284 million people, including dependents.
Wow. Okay, and to cover that many people, 85% of the population. The income limits have to be set pretty high, right? You can't reach that number if you cut off eligibility too low.
Precisely. It reinforces the likelihood of those higher thresholds, the 75K, 150K figures. You need those levels to be inclusive enough to hit an 85% coverage target. It has to include a large part of the middle class.
So what does this all mean? Let's synthesize the eligibility part.
It means eligibility seems to hinge solely on your income level. Based on the specific language targeting low and middle income and the historical context, if your income is below those likely thresholds, maybe 75K for individuals, 150K for couples, you'd probably qualify for the proposed $2,000 payment.
And for most people on fixed federal benefits, that means they are very likely included.
Very likely, yes.
Okay. Now, before we dive into the money part, the funding mechanism, which sounds complicated, maybe we should quickly address some of those missing details that people worry about.
Good point. While we don't have final answers, we can talk about expectations based on past practice, especially regarding financial protections.
Like garnishment. That's a big one. If someone gets this $2,000, can a debt collector just snatch it?
That's a major concern, understandably. Historically, large federal relief payments like the stimulus checks often came with specific legal protections against garnishment, especially for federal benefit recipients.
So the money was protected.
Often, yes. Congress included language to shield those funds. Now, the Trump proposal doesn't specify this yet because it's just a proposal. But
if it follows the pattern.
If it follows precedent for a payment of this nature and size, there's a strong historical likelihood that anti-garnishment protections would be included, particularly for vulnerable groups.
But we have to stress that's not guaranteed yet. No official word.
Absolutely not guaranteed. It's something that must be clarified in any final legislation. It's a critical point of concern we'll be watching.
And the other big one, taxes.
Yeah.
Would this $2,000 be taxable income?
Another unknown right now. Past stimulus payments were generally structured as tax rebates, meaning they were not considered taxable income.
And this payment is being called a dividend distribution rebate sometimes.
Right. That phrasing, tying it to tariff revenue as a sort of rebate, suggests the intention might be for it to be non-taxable. But again, intention isn't law.
We need the final legislative language to be sure.
Exactly. Garnishment protection and tax status are two huge missing pieces. We absolutely urge listeners not to make assumptions about either one until official government sources confirm the details.
Okay. So eligibility seems fairly clear based on income, but key details on protection and taxes are still missing. Let's move to the money itself. Section 3, the financial mechanics. How are they proposing to pay for this?
Right. We know who they want to give it to, but where does potentially more than $500 billion come from?
$500 billion, is that the estimated cost?
Yes, based on that 85% population coverage metric we mentioned, setting $2,000 to roughly 284 million people. The total cost is estimated at a staggering $568 billion.
$568 billion. Okay, that's a lot of money.
It is indeed, and the source material is very specific about the funding source. It explicitly says these proposed $2,000 payments are tied to revenue generated from massive tariff income.
Tariffs. Okay, maybe quickly explain what a tariff is, just for clarity.
Sure. A tariff is basically a tax. It's a tax imposed by a government on goods or services that are imported into the country.
So stuff coming in from other countries gets taxed.
Right. It serves two main purposes. It generates revenue for the government, and it often aims to make foreign goods more expensive, hopefully encouraging people to buy domestically produced goods instead.
Got it. So the idea is this $568 billion comes from those import taxes.
That's the proposal. But this is where we hit the core mathematical challenge laid out right there in the source material.
Okay, let's hear the numbers. Cost is $568 billion. How much is coming in from tariffs?
Well, the report states that so far this year, and remember, we're well into the year now, about $195 billion has been collected in tariff revenue.
$195 billion collected. Okay,
Yeah.
That's not $568 billion.
Not even close.
Yeah.
And it gets worse. The projected annual tariff revenue, so for a full 12-month period, is estimated to be around $350 billion.
So even over a whole year, they only expect to collect $350 billion from this source, but they need $568 billion for the payout.
Exactly. Yeah. The immediate problem is crystal clear. You need $568 billion for the checks. But the maximum you expect to get from your dedicated funding source in a year is only $350 billion.
That leaves a shortfall.
Yeah.
Carry the one, about $218 billion short, just for 1 year's worth.
Precisely. So based purely on the current annual revenue coming in from tariffs, funding this distribution is, well, logically, mathematically impossible on a short-term cash-on-hand basis. They just don't have the money right now from that source.
Okay, this is really important for people to understand. If the payment depends only on the tariff money collected this year, it's not happening at the scale.
Correct. They are hundreds of billions short based on current and projected annual collections.
So how do they plan to do it then, if the dedicated funding source isn't enough right now?
This leads directly to the mechanism they have to rely on, looking further out, long-term projections, and crucially, borrowing.
Ah, the future money. What are the projections?
The source material throws out a much bigger number to try and bridge this gap. A 10-year tariff projection. Over the next decade, they project collecting over $3 trillion from tariffs.
$3 trillion over 10 years. Okay, that's a massive number compared to $568 billion.
It is. And that's the argument. They'd say, look, the immediate funds are short, yes, but the future revenue stream is enormous. A $568 billion payout today is sustainable when you measure it against $3 trillion coming in over the next decade.
So the plan is to pay for it with future money?
Essentially, yes. But let's be really clear about what that means operationally. If you don't have the $568 billion today,
You have to get it from somewhere else today.
you have to borrow it. The source material says it clearly. They would have to borrow the money today, send it out, and then use the incoming tariff revenue over the next 10 years to pay back that loan.
So wait, borrowing against a projection of income over 10 years, isn't that just a fancy way of saying they're adding $568 billion to the national debt right now and just planning to pay it back later with tariff money?
That is precisely the critical question. It absolutely involves deficit spending up front. You're issuing debt, financing the payout now, with the promise that future tariff revenues are earmarked for repayment.
It sounds like the government taking out a huge mortgage on its future earnings to cover a big expense today.
That's a pretty good analogy.
Yeah.
Conceptually, that's how it works. The immediate impact is that this $568 billion cost gets added, at least temporarily, to the national debt. It's financed through borrowing, even if the plan is to pay it off later with specific revenue.
And the context here matters too, right? The source mentioned the current rate of debt increase.
Yes, it points out the nation is already accumulating debt very rapidly, billions every day. So financing this $2,000 payment by borrowing against future tariffs uses that same mechanism of increasing national debt. Even with the repayment plan, the immediate effect is more debt.
But if they really do collect $3 trillion over 10 years, $568 billion is what, less than 20% of that?
Correct. The scale comparison is important. If that $3 trillion projection holds true, then financing $568 billion up front is easily manageable against that massive future stream. They could justify the borrowing based on the long-term income.
But the key point remains. They don't have the cash now. They need to borrow it first.
The current math confirms that. The $568 billion isn't sitting in a tariff fund waiting to be spent today. It requires upfront financing.
Now, there was another point in the source material about this funding that sounded confusing. Something about paying down the debt.
Yes, this is a really tricky, almost contradictory claim made in the posts. The claim was that after sending out the $2,000 payments to low and middle-income people, there would still be so much money left over from the tariffs that they could actually use it to pay down the national debt.
Wait, how does that work? If they need $568 billion and they only collect $350 billion a year and they have to borrow the difference, how is there money left over right away to pay down other debt?
It's mathematically very difficult to square that circle in the short term. If the cost, 568B, exceeds the annual revenue, 350 bedders, you're operating at a deficit for this specific payout initially. The only way there could be money left over in a broader sense is if you consider the entire $3 trillion projected income stream.
So they're talking about the long-term projection again, saying the total projected income is more than the payout cost.
That seems to be the implication. They're saying, yes, we have to borrow now, but look how much money is coming in over 10 years. This $568 billion is just a fraction, and the rest can go to debt reduction. But claiming an immediate surplus or money left over after the checks go out, while simultaneously needing to borrow hundreds of billions to send the checks, it's a confusing message.
It sounds more like optimistic accounting based on future hopes than current reality.
It definitely leans heavily on the long-term projection holding true. For you, the listener, just be aware that this claim that the payments will happen and other debt will be paid down simultaneously from this source is part of the political messaging. It's intended to make the proposals sound fiscally responsible, even if the short-term mechanics involve borrowing.
Okay, so summing up the financials. Huge cost, 568 boobies. Immediate tariff income isn't enough. 195B collected, $350 projected annually. Success hinges entirely on that long-term $3 trillion tariff projection and requires borrowing the money up front today.
That's the financial reality presented in the sources.
Which leads us nicely into the next section, context and credibility. Because this isn't the first time we've heard about big payments, is it?
Not at all. Section 4, context and credibility. This is where we look at the history and the implications of making repeated promises.
Because if we connect this to the bigger picture, the fact that this $2,000 idea isn't new is pretty significant, right?
Hugely significant. The credibility and the risk associated with this specific proposal need to be understood in light of recent history. The source material actually details this timeline. This is, believe it or not, the fourth time since January. So in less than a year that this administration has endorsed a major cash distribution concept.
4 times in under a year. Wow. Okay, let's quickly recap those. What were the others?
Let's walk through it. First, way back in February this year, there was talk and even an endorsement of something called the $5,000 Doge dividend. Sounds odd, but it was a real proposal that got high-level attention.
Okay, the $5K Doge dividend. What was next?
Then, more recently, in August, we saw the endorsement of a $600 rebate check. That one was more formal, introduced as part of the American Worker Rebate Act of 2025.
$600 rebate. Got it. And the third?
The third instance was just on October 2nd. In a specific interview, the president indicated a distribution or dividend was being considered, somewhere in the range of $1,000 to $2,000.
$1,000 to $2,000 in October. And now this latest explicit post about a dividend of at least $2,000.
Exactly. February, August, early October, and now again. 4 times in about 10 months, the idea of sending out thousands or at least hundreds of dollars directly to Americans has been floated and endorsed at the highest level.
So what does that mean? Promising something 4 times? Does that make it more likely or less likely to happen?
That's the million-dollar question, or maybe the $568 billion question. It leads right to the strong warning highlighted in the source material about the need for follow-through.
Because repeating the promise raises the stakes.
Dramatically. While the messaging itself is powerful, who wouldn't want $2,000? And it generates hope, especially for people struggling financially. Repeating that message over and over without actually delivering creates a massive risk. A trust risk, a political risk.
Yeah, the source said something about it being a really, really bad messaging campaign if it doesn't happen now.
Precisely. The analysis shared was that if you flip this idea 4 times and then fail to execute, it just looks bad. It completely undermines credibility. The phrase used was that the administration is effectively painting themselves into a corner.
Meaning the only way out now, credibly, is to actually do it.
That's the argument. The political pressure, largely self-inflicted through these repeated endorsements, is now immense.
And what does this mean for you, the listener? How should people interpret this repetition?
It's a double-edged sword. On one hand, the repeated high-level endorsements suggest genuine intent. It's clearly something they want to do. On the other hand, it highlights the potential for disappointment.
It's like the kid who cried wolf analogy the source used.
Exactly that. If you keep promising significant financial help to vulnerable groups, seniors, low-income families, people with disabilities, and it never materializes, you erode trust. The next time a genuine proposal comes along, people might just roll their eyes and think, yeah, right, heard that before.
It could actually hurt future efforts to provide real relief.
It absolutely could. The stakes are incredibly high now, not just for this specific payment, but for the administration's overall credibility on economic promises, especially to these communities.
It's pretty unusual to see this level of repeated public endorsement without immediate, concrete legislative action following right behind it.
It is unusual. It signals strong intent, but it also dramatically increases the political cost of failure.
Okay, so the history suggests they really need to deliver this time, but let's circle back to the practical side again. Since it's still just a proposal, endorsed but not enacted, all those crucial operational details are still missing.
Completely missing. The sources confirm. This is an idea that's been backed, not a finalized plan. So there is zero specifics on the how and when.
We need to be really clear about what the source material does not say. No payment dates.
No mention of dates. Could be November, December, sometime next year. We simply don't know.
No details on how the payment arrives. Direct deposit, paper check, direct express card.
Nothing on the method of payment, which is crucial as many fixed-income recipients rely specifically on their direct express cards.
And critically, as we discussed, no final word on taxes or those garnishment protections.
Correct. No official confirmation on tax implications, or, importantly, whether the funds would be shielded from debt collectors.
So for our listeners, especially someone maybe juggling old debts or on SSI with strict asset limits, knowing if that $2,000 is protected is absolutely vital information for managing their money.
It's paramount. But for now, we have to emphasize, those details only emerge once official legislation is passed, or an executive order is issued and made public. Right now, we're analyzing the proposal and the intent, not the finalized implementation plan.
So while the eligibility criteria look promising for many, especially based on income, people need to stay patient about the logistics.
Patience and vigilance are key. The implementation phase, the nuts and bolts of getting the money out, is always the hardest part. That's where things can get bogged down in rules, regulations, and debate.
What's the best thing someone can do right now, then?
Honestly, the most practical step is to ensure your current payment information is up to date with the relevant agency, likely the Social Security Administration or the VA if you receive benefits there. Make sure your direct deposit info or your direct express card details are current.
Because if this payment does happen, they'll likely use the existing systems.
Almost certainly. Using the established payment rails is the fastest way to get money out.
Yeah.
So having accurate information on file is the best preparation you can do right now.
Okay. So the repeated messaging ramps up the pressure to deliver. The eligibility looks good for low-middle income folks. Funding is tricky, but potentially doable via borrowing. But the actual how and when remain big question marks.
That sums up the situation based on the available source material. The pressure is definitely on.
All right, let's move to our final section. Section 5, the need for trust and looking ahead.
Right. Given all this uncertainty around a high-profile proposal, we need to talk about trust and security.
Especially avoiding scams, right? Whenever there's talk of government money, the scammers come out.
Absolutely. Even though the source material didn't explicitly detail a scam warning for this specific proposal yet, based on every previous stimulus payment, we must issue a strong warning now.
What's the key message?
Rely only on official sources. Get your information directly from verified government websites, SSA.gov, IRS.gov, VA.gov, or wait for an official letter in the mail.
And nobody official is going to call or text asking for info.
Absolutely not. This is critical. No one from the Social Security Administration, the IRS, the VA, or any other government agency will ever call you, text you, or email you out of the blue asking for your Social Security number, your bank account details, your credit card number, or demanding a fee or gift card payment to release or process this $2,000 dividend.
If you get a call like that,
Hang up immediately. Don't engage. If it's a text or email, delete it. Do not click any links. These are scams, plain and simple.
and report if possible.
Yes, report suspicious contact to the relevant agency or the Federal Trade Commission, FTC. Remember, if this dividend happens and you're eligible, especially if you already receive federal benefits.
The money should arrive automatically. No need to apply or give out info.
Exactly. It should use your existing payment method on file. No application needed for most people. Be incredibly wary of anyone telling you otherwise.
Okay, very important warning. Now, let's connect this $2,000 idea to the bigger economic picture. Is this part of some larger reform, or is it just a one-off?
Based on the source material, this is being framed as an idea for a one-time relief payment. It's meant to help people cope with current economic pressures like inflation.
So it's not like a permanent increase to monthly Social Security checks or a change to the annual COLA calculation?
No, it doesn't appear to be part of any long-term structural reform of the Social Security system or other benefit programs. Think of it as emergency financial aid, a shot in the arm to deal with current high costs, not a permanent raise.
That's a really important distinction for managing expectations, right? This is temporary help, not a change to your base benefit.
A crucial distinction. People need to budget and plan accordingly, knowing this is likely a one-time event if it happens.
And the economic thinking behind it. Why do this kind of payment?
Well, if it were enacted, putting $568 billion directly into the hands of low and middle-income individuals and families is a very direct form of economic stimulus.
Because those groups tend to spend the money quickly.
Exactly. People living on tight budgets generally use extra funds immediately for essential needs, groceries, rent, gas, repairs. That money flows right back into local economies, supporting businesses and jobs. It provides a rapid boost.
Which is part of the political appeal. Besides just helping people, it stimulates the economy from the bottom up.
That's the theory, yes.
Yeah.
It's seen as an efficient way to get money circulating quickly where it's most needed.
Okay. So as we wrap up this deep dive, what's the main message going forward?
Vigilance. We have to remain vigilant. We'll keep monitoring the status of this proposal, tracking any legislative movement, watching the financial projections, seeing if the political follow-through actually happens.
Because the credibility of the whole thing depends on what happens next.
Entirely. We have the baseline from the sources, the promise made repeatedly, the target audience, low-middle income, good news for fixed-income folks, and the proposed funding, tariffs, but needs borrowing.
Sure.
Now we wait for action.
And that vigilance is crucial for our listeners, too. Managing a fixed income is tough. You need reliable, up-to-date information.
And we promise to provide that. As soon as there's definitive news, official legislation, and executive order, those crucial details on dates, taxes, garnishment, we will bring it to you.
Okay, let's quickly summarize the absolute most important takeaways for everyone listening.
Let's do it.
First, the proposed amount is significant, at least $2,000 per person.
Second, the target group is now explicitly stated as low and middle income USA citizens. This strongly suggests inclusion for almost everyone on Social Security, SSI, SSDI, based on typical income levels. Your income is the key.
Third, the funding is tied to tariff revenue, but the math shows it requires substantial future borrowing, likely against 10 years of projected income to cover the immediate $568 billion cost. That's the big financial hurdle.
And fourth, this is a proposal that has now been publicly endorsed 4 times in less than a year. This repetition massively increases the pressure on the administration to actually deliver, making follow-through critical for their credibility.
Got it. $2K, low middle income focus, tariff funded borrowing, 4th time's the charm. Hopefully.
Hopefully. And maybe a final provocative thought for people to chew on.
Go for it.
The very fact that such a huge $500 billion payout is being planned based on borrowing against projected future tariff income, it raises really fundamental questions, doesn't it, about the long-term sustainability, the fiscal transparency of using this specific revenue stream for this kind of immediate broad relief.
You mean, is this a genuinely new way to fund help or just creative accounting for more borrowing?
Exactly. Is it a sustainable model for future relief efforts? Or is it essentially just repackaging standard deficit spending with a politically appealing label like tariff income? How reliable are those 10-year projections anyway? That whole debate about whether this sets a new precedent for financing federal aid, that's something really worth thinking about as this develops.
That's a powerful point. Is it real fiscal innovation or just shifting labels? Definitely something to keep an eye on.
Indeed.
Well, that brings us to the end of this crucial financial deep dive. Thank you for joining us. If this analysis of the $2,000 dividend proposal is important for you or for someone you know, a friend, a family member,
please subscribe to the deep dive. Hit that notification bell. That way you won't miss any updates on this or any other financial news that directly affects Social Security, SSI, SSDI, VA benefits, or your fixed income.
And please, share this deep dive. If you know someone who needs this clarity about the $2,000 promise, send it their way. Knowledge is power, especially when managing tight finances.
Absolutely. Until next time, stay informed.
Welcome to the deep dive. This is the place where we take all of that complicated financial news, all the stuff that really impacts your day-to-day life, and we try to make it immediately clear. And today, we're really cutting through a very thick fog of confusion. It's about a major financial announcement that's been making the rounds.
Yeah, big one.
We're talking about the potential for a new, pretty significant financial boost, a proposed $2,000 payment.
Right.
And you've probably heard it called all sorts of things, right? A stimulus check, a dividend, maybe a targeted income refund.
And we're jumping straight into the one question that has caused, I think, the most anxiety for millions of you, especially if you rely on a fixed income.
Yeah.
And that question is, who actually qualifies for this money?
Exactly.
Because when the Treasury Secretary, Scott Bessent, he recently spoke about this, he specifically used the phrase working families.
Ugh, that phrase.
And if you are a recipient of Social Security, SSI, SSDI, or VA benefits, that phrase probably caused this immediate flash of fear that, wait a second, I'm going to be left out because I don't have a traditional 9-to-5 job.
And look, we have dissected every source, every official comment, and we are here to deliver the immediate and I think necessary clarification.
Sure.
This $2,000 payment is highly, highly likely to be based purely on your income level, not your employment status.
That's the key.
So if you're struggling with the just relentless rise in the cost of living, and that, of course, includes seniors, veterans, people with disabilities, this information confirms you are almost certainly the exact group of people this relief is for.
Absolutely. And we're going to dedicate a lot of time today to clearly breaking down what those potential income thresholds look like.
Good.
And maybe more importantly, we're going to walk you through exactly what this means if you're a non-filer. Someone who doesn't typically file a tax return because all your income is from benefits. Understanding that one point, I think, is the key that unlocks the guarantee of your inclusion.
Okay, let's unpack this. Let's get right to the core of this proposed $2,000 payment.
Let's do it.
So our main mission today really is to provide some crystal clear analysis on those recent comments from Secretary Scott Bessent. It's all about this new substantial proposed payment, and the administration, they're calling it a dividend or maybe a refund.
Right. And we have to start by just acknowledging the emotional impact here. I mean, for millions of people living on a really tight budget, just the mention of a $2,000 lifeline, it creates this huge hope.
Of course.
But then when you couple it with confusing language like working families, it just creates this proportional amount of fear. So our job today is to get rid of that fear with facts, with what's actually in the source material.
Right. Let's start with the most concrete fact we have.
Okay.
The proposed figure. It is a $2,000 payment.
$2,000. And in the context of today's economy, I mean, that is not a trivial amount of money.
Not at all.
For someone on a fixed income, think about it. That could cover several months of groceries. It could cover utility bills, necessary medication. I mean, it's significant.
It's breathing room.
It is. And the driving force behind this whole proposal, the Secretary was really clear about this, is the widespread, kind of crushing worry about inflation,
Mm-hmm.
about the cost of living.
We've all been feeling it.
For months, we've seen all the reports showing that the essentials, housing, food, energy, they have just stretched fixed incomes way past their breaking point.
And I think it's also important to understand the sort of the context of this proposal. The secretary was really keen to emphasize that this isn't some sudden, reactive measure.
Right, it didn't just pop up out of nowhere.
No, he said the administration has been working on this and other related economic policies since, he said, day one, citing executive orders that were finalized earlier in the year, maybe back in January or February.
So what that suggests is that the administration, they're framing this $2,000 payment as a deliberate, calculated step. It's part of a sustained, kind of overarching economic strategy.
Right, not just a quick political gesture.
Exactly.
Yeah.
It's part of a policy framework that's really aimed at increasing the disposable income of low and middle income households.
That sustained approach is, I think, really critical to note.
Yeah, it is. And we also need to clarify what this payment is not, because there's confusion there too.
Okay.
It is not a permanent cost of living adjustment. It's not a GOA lay for your Social Security check.
Good distinction.
This is being explicitly discussed as a direct payment. They're often labeling it a refund. And what that means is that it's intended as a potential one-time relief measure.
So designed to inject immediate funds.
Immediate funds into the economy and, more importantly, into struggling households. And because it's a form of federal spending, it is 100% dependent on legislative approval before a single dollar can be sent out.
Which brings us directly to the political and legislative reality of this thing. And this is where we really need to dive deep into the specific mechanics that were mentioned in the source material.
Right, it's the how.
Yeah, the how, because this is where it gets really interesting. The secretary confirmed that sending out these direct payments of $2,000, or maybe even more, it's not something the executive branch can just do on its own.
Nope.
It requires the blessing and, more importantly, the funding mechanism that only Congress can provide. This is the bottleneck.
It's always the bottleneck.
It always is. And understanding the two possible paths forward here is, I think, essential for trying to predict any kind of timeline.
Okay, so path number one is the traditional legislative pathway. This is what most people picture when they think about how a law gets made.
Right, the Schoolhouse Rock version.
Exactly. It has to get a majority vote in the House, then it has to get a majority vote in the Senate. And crucially, it has to overcome that 60-vote filibuster threshold.
Which is the big one.
It's the big one. That often means you have to find bipartisan support. And only then can it be sent to the president to be signed into law.
And given the, let's say, the current political environment, that traditional path can be extremely slow.
Oh, yeah.
It's prone to amendments that might water down that $2,000 figure, or it could just fail outright.
It's a tough road.
But the sources, they also pointed to a second and I think much more viable pathway here.
Okay.
The reconciliation process.
Ah, reconciliation.
Yeah. Lawmakers have signaled they expect more reconciliation bills in the near future, which makes this a really strong possibility for this payment.
And this is a technical concept, so let's break it down really simply for everyone so we're all on the same page.
Please.
Reconciliation is a special legislative tool, and it's tied directly to the budget. It allows bills that deal specifically with federal spending, with revenue, or the debt limit to move through the Senate with only a simple majority.
So 51 votes.
51 votes, or 50, plus the vice president if you need a tiebreaker. And the key is it bypasses that 60-vote filibuster.
Right.
Which makes it a much faster and, frankly, a more politically certain route if one party controls both chambers of Congress.
But there is a huge catch here, right? A caveat that helps explain why this payment is so often tied to the concept of a refund or a dividend.
Yes, and this is important. Reconciliation is governed by these really strict rules. They're often called the Byrd Rule.
Okay.
And essentially what that means is the provisions you include in the bill must have a direct and significant effect on federal revenue or spending.
So you can't just stick anything in there.
No, exactly. If Congress tries to put purely non-fiscal policies into a reconciliation bill, they can be challenged and struck down.
I see.
So this procedural reality, it just reinforces the idea that the payment has to be structured as, a tax-related measure or some kind of budget expenditure.
Which, again, solidifies the idea that eligibility will be determined by financial metrics like income, not some arbitrary job requirement.
Right. It has to be tied to the numbers. So if we connect this proposed $2,000 payment to the bigger picture,
Right.
What we see is that it's not an isolated event.
Right.
The Secretary explicitly tied this relief measure to a much larger, more comprehensive strategy that he called the complete trade policy.
Okay, so this reveals the administration's sort of dual strategy for tackling the current cost of living crisis.
It's a two-pronged attack, really.
Exactly. So one strategy is the immediate injection of cash, right? The $2,000 payment. That's to treat the symptom of, immediate budget shortfalls.
Right. It's a short-term fix.
The short-term fix. And the other is a structural adjustment, something aimed at long-term price reduction.
And the Secretary revealed that they had been actively negotiating and working on these significant trade deals for, I think he said, 6 to 8 months.
Yeah, that's what I heard.
With several Central and South American nations. And those deals were just signed very recently.
And the tangible result of these big trade deals is tariff reductions. And for anyone listening, a tariff it's essentially an import tax. It's a tax paid on goods coming into the country. So when that tariff is removed or it's lowered, the cost to import the product goes down. And ideally, those savings are then passed on to you, the consumer.
And the Secretary was specific. He mentioned products that really hit the average American grocery bill hard.
What were they?
Coffee, cocoa, and bananas.
Okay, let's elaborate on why those specific products matter so much.
Yeah.
Coffee and cocoa are, they're daily staples for millions of people, and price fluctuations in those things have a really noticeable effect on a family's budget.
Oh, for sure. You feel it immediately.
And bananas, being one of the most popular and affordable fruits, they're crucial for low-income families who are looking for cheap, healthy nutrition.
Right. So by targeting these high-volume imported goods, the administration hopes to demonstrate that their big trade policy is directly translating into relief at the supermarket checkout.
It's a very strategic dual approach.
Highly strategic. You have the proposed $2,000 payment that's serving as this temporary financial rescue raft.
Yeah.
And at the same time, you have these structural trade agreements acting as a more permanent measure to start chipping away at that inflationary pressure on essential goods.
So both strategies are working together. They're both aiming to increase the purchasing power of the average American household.
Exactly. And it helps explain why the administration is pushing so hard for quick legislative movement, probably through that reconciliation channel we talked about.
This context it's vital. It really is. But nothing is more important than the eligibility requirements.
Nothing.
So let's move into the section that addresses the core anxiety of our audience.
Let's do it.
Okay. We have heard the outrage. We've heard the disappointment. And it's just the anxiety caused by that phrase, working families.
Yeah, we've seen the comments.
We understand why beneficiaries, people receiving Social Security, survivors benefits, SSI, SSDI, VA compensation, we get why you immediately feared you were being ignored. But we want to be really clear here. This is a classic case where a political generalization conflicts with legislative reality.
That phrase, working families, it is a generalized political shorthand. It just is.
Right.
When politicians discuss economic relief for working families, they are typically referring to the low to middle income bracket, the people who face financial pressure, regardless of where that income comes from.
It doesn't matter the source.
It doesn't matter. And the source material emphasizes that excluding fixed income recipients, it would be politically disastrous. But more than that, it just makes no sense within the structure of a direct payment.
Okay, so what's fascinating here is the clarity that was provided on the legislative mechanism. We can definitively state this.
Okay.
The eligibility for this relief payment is based entirely on your income level, not whether you get a W-2 paycheck or file a Form 1040.
This is the most important point we'll make today.
It is. The government, when it issues this kind of broad-based relief, uses one primary metric, your total adjusted gross income, or AGI.
Let's take a second to define adjusted gross income really simply, because this is the metric. This is what determines if you are included or excluded.
Yeah, let's do it.
Your AGI is your total income from all sources. So that could be wages, interest, pensions, and yes, your Social Security benefits minus certain allowable deductions.
Okay.
This is the figure the government uses to calculate eligibility for virtually all income-based relief. And the key insight is that the government is only concerned with the dollar amount of your AGI.
Just the number.
Just the number.
So let's try to nail down the potential financial hurdle here. The Secretary indicated a potential maximum threshold for eligibility somewhere around $100,000.
Right, for individuals or households.
Yeah. And he did add the caveat that the final number determined by Congress could be lower, maybe 75,000, maybe even 60,000.
Right, that's still being negotiated.
But the rule remains the same. If your AGI is below whatever that congressionally determined threshold is, you qualify for the full payment. If it's above that, you either qualify for a partial amount or, nothing at all.
And for most low-income beneficiaries, the good news here is that your total income, even if it includes your fixed benefits, is almost certainly going to fall well below that threshold.
Right.
But we need to address the most critical point for retirees and SSI recipients, the non-filer scenario.
This is it. This is the aha moment that I think brings total reassurance.
It should.
Because millions of Americans rely solely on Social Security or SSI. They're considered non-filers. They don't submit an annual income tax return.
Right.
So if they don't file, how does the government verify their income is low enough to qualify?
Okay, so we have to emphasize, this is not personalized tax advice.
Of course not.
But it is an explanation of the core tax law concept.
Yeah.
When you calculate your AGI, you get to subtract the standard deduction.
Okay.
This is a specific dollar amount set by the IRS that everyone can deduct from their income before any taxes are even calculated. Yeah. So if your total income for the year is less than the amount of the standard deduction, you generally do not owe any federal taxes. And, critically, you're not required to file a return.
Let's put that into perspective for our audience. If you're single and your total income from all of your sources, including your, potentially partially taxable Social Security, if that falls below the standard deduction amount for an elderly person,
right,
then in the eyes of the government, your income is effectively non-taxable. And often, your calculated adjusted gross income is zero or very, very close to it.
And here's the powerful logical conclusion.
Go ahead.
Since zero or even $15,000 is unequivocally less than the proposed $100,000 eligibility threshold.
Right. It's simple math.
It's simple math.
Right.
All beneficiaries who rely primarily on these fixed incomes and do not file taxes are highly, highly likely to be included.
So how does the government know?
Because the Social Security Administration has your fixed benefit information on file. The IRS can use that data, just like they did with previous stimulus checks, to verify your low-income status instantly.
Okay, so this eliminates the need for you to, file a special claim or an application.
Exactly. Your information is already in the system.
This is the key piece of evidence that just debunks the fear of exclusion. Your inclusion is practically guaranteed because your low-income status is quantifiable, and it's verifiable by the government agencies, regardless of whether you're working a traditional job.
Which brings us back to the question one more time. Why did Secretary Bessent use the term working families?
Right.
As we've established, it is political shorthand. But the source material also offered a really strong, pragmatic analysis of the political viability here.
Meaning?
Meaning excluding this huge demographic seniors, the disabled, veterans, especially with a significant election year approaching, would be political suicide.
It's just simple political arithmetic, right? To introduce a package that's meant to fight inflation and then intentionally leave out the fixed income community who are frankly suffering the most from it,
right,
it would turn a positive economic announcement into a major political liability.
Oh, a huge one. The necessity of passing this bill means that Congress has to ensure the inclusion of all low AGI Americans, which is just excellent news for anyone currently on benefits.
Okay, so that context is vital. But let's move past eligibility now and into the practical details.
Yeah, the logistics.
Assuming this legislation passes, what can you expect regarding the delivery and the timing of this potential $2,000 payment?
Right.
And we have to acknowledge, because the bill is still in the proposal stage, specific dates are fluid.
That's right. We can't give you the exact payment schedules based on birth dates or benefit type because those details, they get finalized in the legislative text itself.
But the Secretary did provide a critical hint about the expected timing, and it ties it to the overall fiscal policy.
What was the hint?
He projected that due to various tax policy changes, no tax on tips, Social Security overtime, that there will be a big bump in incomes and refunds in the first quarter of the next fiscal year.
The first quarter.
The first quarter.
So the first 3 months of the year. That strongly suggests that if this payment passes, it's going to be integrated into the annual tax refund schedule.
It seems like the most logical path.
It's the fastest, most reliable mechanism the IRS has for dispersing broad-based payments. And since the Secretary is literally calling it a refund, This path just makes the most logistical sense.
Okay, so what about the payment method? How will people actually get the money?
We can infer pretty strongly from past federal payments.
Okay.
If you received a prior stimulus check via direct deposit, or if you get your monthly Social Security benefit via direct deposit, the $2,000 would almost certainly use that established bank information.
That makes sense.
And for those who receive their federal benefits on a direct express card or through paper checks, the payment would just follow that method. It would either be loaded onto the card or sent as a physical check in the mail.
So the critical action for you, the listener, is just to make sure your current payment information is up to date with the SSA or the IRS.
That's it. Make sure they know where to find you.
Now we come to one of the most important aspects for our audience: financial protections.
Yes.
When a lump sum payment like this arrives, our fixed income listeners need to know two things immediately. First, is this payment taxable? And second, how will it affect my means-tested benefits like SSI and Medicaid?
And since we are still dealing with a proposal, we have to wait for the final legislative draft to get the definitive answers.
Right.
But we can explain why this waiting period is so crucial. First, taxability. Typically, broad relief payments like this, the ones designed to offset hardship, they are non-taxable. But the final bill has to confirm this in writing.
And second, and this is probably the most vital for anyone on SSI and Medicaid, is the impact on resource limits.
The asset limit, yeah.
For those programs, as you know, having more than a small amount of money in the bank, what they call resources, can disqualify you from getting your benefits.
Right.
So if this $2,000 is not protected, it could potentially push recipients over that resource limit.
And that would be a disaster.
A total disaster. We have to urge listeners to be vigilant and wait for the official text that confirms if the $2,000 will be specifically excluded from resource calculations, even for a period of time.
Right. They did that with previous large relief payments.
Exactly. This is an absolutely essential detail to watch for.
And furthermore, we need clarity on garnishment. Will this money be protected from debt collectors?
That's a huge one.
Past federal stimulus funds have had specific language written into the law to protect them from civil judgment. But again, the final text has to confirm those protections are included for this $2,000 payment.
For anyone who has outstanding medical debt or other financial obligations, that protection is critical breathing room.
So the bottom line here is preparation and vigilance. While you wait for the final draft, be prepared to check official government sources for updates on eligibility and delivery.
Do not rely on, unverified emails or social media posts for payment dates.
Please don't. And we have to strongly address the inevitable threat that comes with major financial news like this.
Scams.
Scams. The moment this payment is finalized, scammers will be trying to capitalize on the confusion.
I cannot stress this enough. The IRS, the Social Security Administration, and the VA will never, under any circumstances, call you, text you, or email you asking for personal information or your bank account details or some kind of fee to speed up your payment.
It will never happen.
Official communication will come via official letters in the mail or through secure online portals like the My Social Security account. Any suspicious contact should be immediately reported, and you should only trust information from verified government websites, the ones that end in .gov.
And if a payment is late or the amount seems wrong, you have to use the official notification letter that you receive as your baseline for contacting the appropriate agency.
Okay, let's pivot now to the broader significance of this proposal. This $2,000 payment, it's being presented by the administration as a central piece in fulfilling the president's goal of keeping his campaign promises to working Americans.
That framing is really essential to understand. The Secretary specifically linked the payment to these broader policy goals.
Like what?
Things like removing taxes on tips, removing taxes on Social Security benefits for middle and lower income earners, and removing taxes on overtime pay.
I see.
So the $2,000 payment is framed as this immediate, tangible financial solution that fits inside that bigger policy framework. It's a way to quickly put disposable income back into the pockets of the exact citizens these tax policies are designed to help long-term.
And this is more than just a political talking point. For so many of our listeners, these potential payments can truly be life-changing.
Absolutely.
It offers dignity. It offers help with overdue bills. It offers financial breathing room that current benefit levels, they just aren't providing because of the sustained inflation.
Right.
And our role here is to represent you, advocate for your inclusion, and make sure you have all the necessary information to claim every single benefit you are entitled to.
And finally, I think we have to ask the critical long-term question here. Is this $2,000 payment a one-time emergency measure, or does it signal some kind of permanent shift?
That's a good question.
And while the payment itself appears to be a one-time response to these acute inflationary pressures, the context, I think, strongly suggests a more permanent economic shift is underway.
Oh, so
Well, when you look at the simultaneous actions, these broad structural changes through trade deals aimed at lowering import costs, coupled with proposed permanent changes to tax policy regarding Social Security and overtime,
you see a bigger picture.
you see a concerted effort to increase the real disposable income of fixed-income Americans and low-wage earners.
Yeah.
This $2,000 payment, while it's temporary, it acts as this powerful legislative signal that supporting this specific segment of the population is a top priority for the foreseeable future.
So it suggests the government isn't just treating the symptoms of high costs.
No, they're actively trying to change the underlying economic structures to provide more lasting relief. And this is a crucial area for all of us to monitor, because permanent shifts in tax policy around Social Security can have an even greater long-term impact than a single one-time payment.
That is the landscape we are navigating right now.
That's it.
So let's quickly reinforce the most important facts as you move forward from this. The potential for a $2,000 payment is genuine, it is real, but remember, it requires definitive congressional action,
Right.
probably through that faster reconciliation process. This is the point we are waiting on now.
And the crucial takeaway, the one thing to remember for everyone on fixed benefits: eligibility is fundamentally based on your adjusted gross income,
AGI.
AGI. Likely under that $100,000 threshold, Social Security, SSI, SSDI, and VA recipients are overwhelmingly expected to be included regardless of your employment status.
Your low-income status is your qualification.
That's it. Your low income is your ticket in. We strongly advise you to remain patient while this final draft gets hammered out.
Protect yourself from the scams. Only trust official, verified government announcements for specific dates and payment mechanisms. Avoid the rumors, rely on the facts.
We really hope this deep dive has provided you with the clarity and, frankly, the deep reassurance you absolutely deserved regarding your eligibility and the path forward for this critical financial support.
We will continue to track the legislative movement on this bill every single day. We'll be bringing you immediate updates as soon as that final text is released. So we strongly encourage you to subscribe so you never miss an update on this critical payment. Please share this deep dive with friends or family who are worried, who are being excluded because of that really misleading working families phrase.
Yeah, help us clear up the confusion.
Drop your comments and your questions down below. We will continue to be right by your side, breaking down every detail every single day. Until next time, welcome back to the deep dive. We are really cutting through all the noise today to give you the essential financial truth.
And there is so much noise right now.
There really is. But right now, there is one single announcement that's just dominating the conversation. And honestly, it's causing a lot of anxiety, but also a lot of hope for millions of Americans.
That's exactly right. We're focused today on a pretty major financial update. We're talking about the possibility of a new, a really substantial direct payment.
A dividend, they're calling it.
Yes, a dividend of $2,000, maybe even more, that has been discussed at the very highest levels of government. So, this isn't just a theory. This is a live, ongoing discussion.
A discussion about delivering, crucial money directly to you.
Exactly.
And this specific proposal, it's made massive headlines. You can't miss it.
Of course. The scale of the payment is huge.
It is. But for our community, and we mean for those of you relying on Social Security, on SSI, SSDI, or VA benefits, the core question is, well, it's simple and it's really urgent.
It's always the same question, isn't it?
It is. Will this money finally reach retirees? Will it reach people on fixed benefits without some arbitrary exclusion?
And that frustration it's more than just palpable. It's historically justified. We've heard from hundreds of our listeners who just feel perpetually left out of these big relief announcements.
They feel forgotten.
Totally forgotten.
Yeah.
There's this deeply ingrained skepticism among Social Security, SSI, SSDI, and VA beneficiaries. They just assume, and maybe rightly so, that there's going to be a footnote or an asterisk somewhere that somehow excludes them.
We want to validate those concerns right away. We absolutely hear you, and we understand that history has, created this high degree of skepticism about whether you're eligible.
It makes perfect sense.
It does, and that's why our mission today is very specifically tailored to answer that one question. What about us? We want to provide some concrete clarity based on the source material we actually have.
And we are working directly from presidential remarks concerning this $2,000 plus dividend. So we're going to unpack the specific, really crucial language that's been used to figure out the true eligibility for the low-income and fixed-income community.
So if you're out there, you're struggling with rising costs, you're relying on those monthly checks to get by.
This deep dive is for you. We really need to know if this potential $2,000 or even more is truly coming your way.
Okay, let's get into it. Let's unpack this. We have a direct statement, a key quote that really sets the stage for what this payment is supposed to be.
Right.
And it focuses on two really important phrases that seem to be at odds with that skepticism we were just talking about.
Exactly. The core language we're analyzing right now is this statement about a distribution of funds. And the phrases that matter most are, first, at least a $2,000 dividend for everyone will be paid.
For everyone. Okay.
And then, immediately following that, the exclusion, not high-income people.
Those four words, everyone, and not high-income people. I mean, that's everything, isn't it?
Those are the hinges upon which this whole discussion turns. This is the official starting point for analyzing this. And on the surface, those two phrases, they really seem to suggest maximum inclusion.
It sounds incredibly broad.
It does. And this brings us immediately to the mechanism of the payment, which is so crucial because it's what differentiates this proposal from the three previous stimulus checks we saw back in 2020 and 2021.
How so? What's different?
This money's being discussed not as, traditional relief spending that's funded by borrowing or domestic taxes. This is being framed as a distribution derived specifically from tariff revenues.
Tariffs. Okay, let's stop right there and explain that distinction because that is really, really interesting. When we talk about tariff revenues, what are we actually talking about?
We're talking about money that's collected by the government through international trade duties. So basically taxes that are levied on goods imported into the country.
And why is using that money tariff revenue? Why is that so different, both politically and economically, from just, printing money or using general tax revenue like before?
That's where this deep dive really begins. See, when the previous stimulus checks were issued, they were typically funded by debt. The government either borrowed the money or used existing general funds. And that, it increased the national deficit.
Which is always a point of contention.
Always. But using tariff revenue, that creates a completely different narrative.
Yeah.
It allows the proponents to say, look, we're taking money collected from foreign trade actions, and we are giving it directly back to American citizens.
So it's framed less like a government handout and more like a benefit?
A policy benefit, exactly. Something derived from an economic strategy rather than a domestic relief bill designed to fight a crisis. It completely shifts the discussion from government spending to revenue sharing.
That's a very clever distinction.
It is. It provides a very distinct why behind this specific proposal. The idea is that the government takes revenue generated through these economic measures, the tariffs, and then distributes it back to the public as a dividend.
And that political framing might make the payment more palatable to lawmakers who are normally pretty resistant to deficit spending.
Precisely.
Okay, so this brings us back full circle to our core question, which is so critical for our audience. Because when they hear that word everyone, they immediately and understandably become skeptical.
They remember past exclusions. They remember confusing eligibility rules.
Exactly. And we really need to remember the sheer size of the community we're talking about here. It's massive.
Oh, the range of beneficiaries is immense, and their dependence on these fixed benefits is acute. We're talking about Social Security retirees who've seen their savings just decimated by inflation.
We're talking about veterans receiving VA benefits.
Individuals on SSDI due to disability, SSI recipients who are living right at the poverty line.
Don't forget Railroad Retirement Board beneficiaries, and of course, people receiving spousal and survivor benefits.
All of them. And they're all asking the same thing. Is this time going to be different?
That feeling of being sidelined, of being excluded, it's so legitimate.
Yeah.
Historically, the devil has always been in the details, right?
Right.
Or in some specific definition in the funding mechanism.
But this time, the language is unusually broad. Everyone is included. The only people excluded are high-income people.
So let's just deliver that initial broad answer right now, based purely on the analysis of the language and this funding mechanism. Let's just try to alleviate some of that immediate anxiety.
Let's do it.
Give it to us straight. Are the low-income fixed benefit communities included in this?
Okay, the simple answer is this. Broadly, yes. Based on the language, At least a $2,000 dividend for everyone will be paid, not high-income people. There's absolutely no reason these groups would be excluded.
There's a big condition there.
There is, provided their income is below the eventual threshold.
That is the critical distinction we have to hammer home. Eligibility is not tied to your benefit type. It is tied purely to your income level.
Right. It's income-based, not benefit-based. They just don't typically structure these laws to say everyone gets this except, the people who rely on Social Security for a living.
Yeah.
That's not how it works.
That would be political suicide.
Exactly. The current proposal, as we have it, focuses only on excluding high-income earners. So if you're a Social Security recipient or a low-income recipient of SSI or SSDI, you are, by definition, the community this payment is designed to support. You are the non-high-income bracket.
So we've established that the eligibility, at least in theory, is broad. So now we have to zoom in on that one crucial phrase that determines everything.
Not high-income people.
That definition holds the key to the vault.
And this is where we really need to focus our critical thinking and apply some historical data. Because the entire eligibility question hinges on how the government defines a high-income person for this specific purpose.
This is the only barrier.
The only barrier mentioned in the proposal. It makes that income threshold the absolute immovable dividing line.
Okay, so let's establish some serious historical context here, because that's really the single best predictor we have for what lawmakers consider high income when they're designing these kinds of payments.
We don't have the current threshold defined yet, no, but we have excellent precedent from those three prior major stimulus checks.
Back in 2020 and 2021.
Exactly. So to project the likely cutoff for this $2,000 plus dividend, we have to do a deep dive into the historical cutoffs that the IRS used. And those past checks, they relied on a metric called adjusted gross income.
AGI.
AGI, yes.
Let's pause right there because AGI is such a crucial term, but it causes a lot of confusion, especially for seniors who might not file taxes or who might be confused about how their benefits even factor in. So in simple terms, what is adjusted gross income?
Okay, simply put, AGI is your total income. So that includes wages, interest, any capital gains, retirement distributions, and in some cases, the taxable portions of your Social Security. And then you subtract certain allowable deductions. For most people on fixed income, their AGI is very, very low.
Why is that?
Because the majority of their Social Security income may not even be taxable, or they might only have some modest pension income on top of it. So the number ends up being quite small.
So AGI is the number the government used in the past to decide who was high income. Let's look at those historical AGI cutoffs. What were they?
Okay. For the first stimulus check in 2020, the one for $1,200.
I remember that one.
The individual threshold for the full payment was an AGI of $75,000. But the payment didn't completely phase out. It didn't disappear until an individual's AGI hit $100,000.
$100,000.
So the first standard for high income was effectively $100,000.
That's a key figure. And $100,000 for an individual, I mean, that felt pretty inclusive at the time.
It did. But that standard shifted. And it shifted quickly. By the time we got to Stimulus Check 2, the $600 one, and Stimulus Check 3, the $1,400 one,
Right.
the threshold had been lowered substantially. And the idea was to target the relief more stringently toward lower-income Americans.
So what did it drop to?
Well, the threshold for the full payment, it stayed at $75,000 for individuals, but the maximum phase-out point was dropped sharply. The payment often ended completely for individuals making above, say, $80,000 or $90,000.
So why did they drop that threshold, that reduction from $100,000 down to around $75,000 as the starting point for that phase out? I mean, that's a significant political move.
It really is. And it speaks to the political drive to make sure that these relief funds are highly targeted. The lower you set that AGI threshold, the fewer middle and upper middle class people receive the money.
Which saves the government money overall.
It saves money, and it theoretically lets them focus the impact on those most acutely in need, which of course includes our fixed income community.
But hold on, you raised a really interesting point earlier. This $2,000 dividend is coming from tariffs. It's a totally new funding mechanism for this kind of widespread relief.
It is.
So why are we relying so heavily on the old IRS stimulus rules for the income cutoff? Couldn't they define high income using a completely different metric this time? Maybe, I don't know, net worth instead of AGI?
That is a brilliant question. I mean, it gets right to the heart of the uncertainty here. And while it's true the funding mechanism is new, the logistical mechanism for actually distributing the money,
Getting it to people.
that is almost certainly going to be the IRS. because they're the ones who hold the records needed to verify income through tax data. And that's true even for non-filers who get benefits.
So trying to change the metric from AGI to something like net worth would be a nightmare.
An administrative nightmare. It would introduce impossible complexity and, significant delays. It's just not practical.
So tradition and just administrative ease suggests that $75,000 individual AGI mark is still the most likely standard for triggering the phase-out.
Or perhaps even that higher $100,000 mark just for the sake of political expediency.
It's hard to say for sure.
It is. But we're operating under the highly probable assumption that the definition of high income will be at or very near that $75,000 to $100,000 AGI range for individuals.
And for married couples.
Likely double that. So $150,000 to $200,000 for married couples filing jointly.
And this is the critical connection point for our audience. We need to relate these numbers directly to the reality of being a Social Security, SSI, SSDI, or VA beneficiary.
Let's be blunt about it. For the vast, vast majority of our fixed income listeners, the retirees, the survivors, the disabled individuals, the low-income veterans, the notion of earning an adjusted gross income of $75,000 or more per year.
It's just not their reality.
It's simply non-existent for most.
We can say with a lot of confidence that if you are living primarily or solely on fixed benefits, you are highly unlikely to be anywhere near that threshold.
Think about it. Even someone who's receiving the absolute maximum Social Security benefit, which is around $3,800 a month right now.
Which is very rare.
Very rare.
Yeah.
But even they only bring in about $46,000 a year. And not all of that is even taxable, which lowers their AGI even further.
So that's why the language is so reassuring. Eligibility hinges purely on income. The law doesn't exclude Social Security beneficiaries as a group.
It excludes high-income earners. So if you're in the fixed income community, you are, by definition, intended to be included in this.
The only way a Social Security recipient might be excluded is if they have substantial other income. Maybe a big pension, significant investment income, or a large second job that pushes their AGI over that expected $75,000 to $100,000 cutoff.
And that is, as you said, a very fortunate and very small minority among this population.
Okay, so we've established that based on income history, the vast majority of our audience should be eligible. So now let's tackle some of the administrative and logistical myths that always pop up.
Especially the ones about tax filing. That is a major source of confusion for older Americans.
Myth number one, the one that always produces so much anxiety. I don't file a tax return, so the government doesn't know who I am, and this payment isn't for me.
Right.
This misunderstanding is rooted in decades of tax procedures, but it needs to be completely, thoroughly eliminated.
It really does. This concern has to be fully addressed and just dismissed with authority. Filing a tax return has absolutely nothing to do with eligibility or the distribution of this $2,000 plus dividend money for the fixed income population.
So whether you file a Form 1040 or not,
It is completely irrelevant to receiving the payment.
tell us why that is. If it's not from a tax return, where is the government getting the information?
Because if you are a fixed income beneficiary, if you're getting Social Security, retirement, SSI, SSDI, or VA benefits, the government already has all your essential payment information on file.
It's managed by the SSA or the VA?
Oh, the Railroad Retirement Board, exactly. They already have it.
So they already know your direct deposit bank account details. They know if you use a direct express card. They know your current address for a paper check.
Correct. They don't need the IRS to tell them where you live or where to send the funds. During the previous stimulus checks, the IRS and the Treasury Department successfully used these existing SSA and VA files to get payments to non-filers seamlessly.
So they've done this before.
They've done it 3 times. It established a functional, proven infrastructure that just bypasses the entire tax return filing process for this specific group. The presidential remarks said nothing about needing a tax return. The focus was purely on income and the revenue source.
So we have to give the disclaimer that, this is not personalized tax or accounting advice.
Of course.
But the historical precedent is overwhelmingly clear. Your filing status has nothing to do with getting these specific relief payments if you're already receiving federal benefits.
Okay, let's move on to myth number 2. This is only for people who are currently working or are disabled but looking for work. Does the source material suggest this payment is employment-based at all?
Not in the slightest. The source material confirms the criteria are purely income-based. This is a dividend, intended to be shared among eligible Americans.
So it doesn't matter if you're fully retired.
Fully retired, permanently disabled, or even working a minimal part-time job that keeps you under the income threshold, it does not matter. It is a calculation based on your AGI, not your employment status.
And that is a huge relief for so many people. People on SSDI who face really strict earnings limits, or for seniors who have fully left the workforce.
So your status is irrelevant.
Your income level is the only metric that counts.
Absolutely. Okay, now let's clarify how the income thresholds usually work for people who might be, close to that limit, that important phase-out mechanism. We need to be specific here, maybe give some scenarios so people can really understand the math.
Right. A phase-out is critical because it prevents what we call an eligibility cliff, where one extra dollar of income makes you lose the whole payment.
Nobody wants that.
No. So when income exceeds the limit, and let's just assume for now the full payment threshold is $75,000 AGI for an individual, there's typically a gradual reduction in the payment amount.
Okay, let's use a hypothetical situation based on the old rules. Let's say the government approves a $2,000 dividend, and they set a phase-out rate of, say, a $50 reduction for every $1,000 you earn over that $75,000 limit. Walk us through a scenario.
Okay, perfect. Let's take an individual whose adjusted gross income is $77,000.
Okay, so just a little over.
It's a little over. That's $2,000 over the $75,000 limit. Under our assumed phase-out rule, $50 per thousand over, you take that $2,000 excess, divide it by 1,000, which gives you 2.
Right.
Then you multiply that 2 by the $50 reduction rate, which equals a $100 reduction.
So instead of getting the full $2,000, that person would get $1,900. It's a slope, not a cliff.
Exactly. Now let's take someone who earns $85,000 AGI.
Okay, a bit higher.
Right. That's $10,000 over the $75,000 limit. So you divide $10,000 by 1,000, which is 10. Multiply that 10 by the $50 reduction rate, and you get a total reduction of $500.
So their payment would be $1,500.
$1,500. It makes the mechanism really clear. You keep getting a portion of the payment until your income hits a much higher secondary cutoff. In this case, it would be an AGI of $115,000, where the $40,000 overage would zero out the $2,000 payment.
And the takeaway for the fixed income community here remains the same.
Absolutely. For the vast majority of people relying only on fixed income, this phase-out is not a concern whatsoever.
Yeah.
I mean, if you're having to worry about hitting $75,000 or $100,000 in AGI, you are already in a very fortunate minority among fixed income beneficiaries.
So, to summarize this section, forget about tax filing, forget about working status, focus only on your AGI. If you're well under that likely $75,000 to $100,000 range, you should be included based on all historical precedent and what's been said so far.
Exactly. But now we do need to discuss the gotchas.
Right.
These are the specific conditions that historically have made recipients ineligible or resulted in the payment being offset. An offset just means the government legally keeps the money to settle a debt. This is essential information because these factors can severely impact some recipients.
Let's start with the big one debt that you owe directly to the federal government, back taxes.
Yes. If a recipient owes back taxes to the federal government can, and very likely will, exercise its right to keep the funds from this dividend payment and apply them against that outstanding tax liability.
This is called a federal offset.
It is, and it's standard procedure for federal payouts that are administered through the Treasury Department. It's important to understand this isn't some kind of surprise attack. If you owe the government, they often collect before they cut you a check.
That's a really crucial nuance. It'll only impact a smaller subset of the population, but it's a clear warning for those it does affect.
What was the second major federal offset we saw during the last distributions?
Past due child support. During the previous stimulus check distributions, the law allowed for individuals with outstanding past due child support obligations to have those checks offset.
So the money was taken.
The money was taken and then redirected to the custodial parent or the appropriate state agency to cover that owed support.
So these two federal offsets back taxes and past due child support are the two major historical pitfalls that we really need to watch out for. Right. And while they don't impact the majority of beneficiaries, they are key nuances, and they often cause a lot of heartbreak for those who are expecting the money, only to find out it was intercepted.
Okay, so now we have to step into the critical area of protections. Since the specific legal language for this dividend isn't finalized yet, we have to talk about what Congress usually does for relief payments to this specific fixed income population.
We're talking about protection from private debt garnishment and clarification of taxability.
And this is maybe the most critical financial protection detail for low-income beneficiaries. We need two major confirmations, right?
Two, first, will the payment be considered taxable income? And second, and maybe even more importantly, will it be protected from garnishment by private debt collectors?
Let's start with garnishment. In past relief efforts, especially those aimed at vulnerable populations, Congress has often made sure the payments were shielded from garnishment. Why is that protection so vitally important for someone on Social Security or SSI who might have, say, medical or credit card debt?
Because if the payment is not explicitly protected by the final legislation, a private debt collector could legally seize those funds the second they hit the recipient's bank account.
Wow.
There are critical laws, like 42 U.S.C. Section 407, that protect most Social Security and SSI payments from garnishment. But this new dividend, since it's from tariff revenue, it might be seen as a separate type of federal benefit. It has to be explicitly protected in the new law.
So if that $2,000 lands in an account unprotected, and the recipient owes, say, $5,000 in old credit card debt, the bank could potentially just freeze or seize that money.
They could. And the entire intention of providing breathing room and dignity is just completely undermined if the funds end up in a debt collector's hands.
It defeats the whole purpose.
Absolutely. The legislation must include specific language stating that this $2,000 plus dividend is exempt from the claims of creditors. We have to monitor this very closely.
And what about taxability?
We need clarity there, too. Previous stimulus payments were tax-free. They were essentially a refundable tax credit. We expect the same treatment for this dividend to maximize its benefit, but it has to be confirmed.
Okay, now let's move to perhaps the single greatest source of anxiety for our SSI and means-tested audience: how this payment interacts with other programs.
Like s.n.a.p, Medicaid, or housing assistance, yes.
This is a critical detail that's completely missing right now, and the lack of clarity, it poses an immediate threat to the eligibility of the most vulnerable recipients.
We're talking specifically about means-tested programs, which are defined by very strict limits on both your income and your resources, meaning your assets.
Can you define means-tested programs and explain the specific crisis a $2,000 payment could create for someone in them?
Sure. Means-tested programs include supplemental security income, or SSI, s.n.a.p, which is food stamps, certain Medicaid benefits, and housing assistance. For SSI, for example, the resource limit, the amount of money or assets you can have in the bank, is often only $2,000 for an individual.
Wait a minute. So if someone on SSI currently has, say, $1,500 in their bank account, and they get this $2,000 dividend,
They are instantly at $3,500 in resources.
so they are now over the $2,000 resource limit.
Precisely. And that temporary increase could, in theory, immediately jeopardize their eligibility for SSI.
Yeah.
And losing SSI usually means losing your Medicaid coverage, too.
That is a catastrophic scenario, receiving a $2,000 dividend only to lose your essential health care or food benefits.
It's in the worst-case scenario.
So what's the historical solution? What has Congress done in the past to protect this population?
They include specific language in the relief bill, language that states the payment does not count as income or as a resource for the purposes of these means-tested programs for a specific period of time,
How long?
usually 12 months. It's known as an exclusion period. This 12-month grace period allows the recipient to spend the money on immediate needs, bills, food, medicine, without being penalized by the stringent asset tests of SSI or s.n.a.p.
This detail feels non-negotiable. If that 12-month exclusion period isn't in the final legislation, this dividend could cause way more harm than good for the lowest income recipients.
It is the single most important safety net provision we are looking for in the final text. We need confirmation that the payment will be tax-free, protected from garnishment, and excluded from resource calculations for means-tested benefits.
So we have two major logistical worries based on historical patterns that lawmakers must provide clarity on before this money is sent out. We've established eligibility is broad, but the protections are still pretty hazy.
They are, and we have provided a lot of solid answers based on precedent and the source language, but we have to be completely transparent about the outstanding unknowns. This situation is fluid, and certain key elements are still being debated or defined.
And the single most important unknown right now is the official final definition of high income for this specific proposal.
That's the one.
We've used that historical $75,000 individual AGI threshold as our best guide, but the final legislation, when it's written and passed, that's what will define the true cutoff.
And that definition is everything. If, for example, due to political pressure from groups advocating for lower-income Americans, they set the threshold even lower, say, $50,000.
That would change things?
It dramatically changes who's included, although it would still largely encompass the fixed income community. Conversely, if they raise it to $125,000, far more middle-income people would be included. We're just waiting for lawmakers to give us that specific financial detail.
And it's important to acknowledge the reality of the legislative process. I mean, information is changing daily. We are currently waiting for lawmakers to provide all these specific details.
Official income thresholds, potential payment dates,
Right. Will they use birth dates like Social Security does? Will they just lump it all together?
and the specific language addressing the protections and the offsets we just talked about.
We're really in the policy development phase of this potential payment. We know the proposal exists. We know the source of the funding is tariffs, and we know the general intent is to include everyone except high earners.
But the regulatory plumbing, the how and when of it all, is still being finalized.
Let's try to position this potential payment within the broader context of, advocacy for fixed income individuals. This audience doesn't just need one-time checks. They need long-term stability and structural reform.
That's the bigger picture, absolutely. Is this potential $2,000 plus dividend just a one-time fix to address the current inflation crisis? Or is it part of a bigger push for more permanent structural change?
You mean like the cost of living adjustment?
Exactly. Advocacy groups have been putting sustained pressure on Congress to address issues like the insufficient COLA formula.
Because that calculation often fails to capture the true inflation that seniors experience, right? Especially the steep rise in medical and housing costs.
It does. A $2,000 check provides temporary relief, which is wonderful, but it doesn't fix the underlying problem of inadequate annual adjustments.
So this is breathing room.
It's breathing room, yes. But we need systemic changes, too. And the economic reasoning behind this dividend, tying it to tariff revenues, is a very distinct policy move. It's aimed at community relief, distributing wealth collected via trade policy. But it remains to be seen if this signals a real commitment to long-term reforms that permanently improve the dignity and financial stability of fixed-income Americans.
Okay, before we wrap up with our final summary, we have a crucial, very high-stakes warning that we have to deliver. This is absolutely essential for every single person receiving Social Security, SSI, SSDI, or VA benefits.
Because every time a major payment is announced, the scammers target this group first.
Immediately.
We have to strongly warn the audience about potential scams. The second that news of this dividend becomes more solid, the scammers will just flood phone lines and email inboxes. They prey specifically on the vulnerable, on older adults, and on those who are desperate for the money.
This is your absolute protection. The Social Security Administration, the IRS, and the VA will never call you, text you, or email you asking for money, for gift cards, or for personal information related to receiving this payment.
They will never, ever tell you that you need to pay a processing fee or an enrollment fee to get your $2,000.
Remember the old stimulus scams? The phone calls claiming you needed to verify your bank account details.
Or demanding you go out and purchase gift cards to pay some non-existent administrative charge.
If you get a call, a text, or an email claiming to be about this dividend, and they're asking for your Social Security number or your bank details over the phone,
it is a scam, 100% of the time. Hang up immediately, delete the message, and rely only on official letters sent through the physical mail or on verified government websites. You have to protect your identity and your money.
Okay, that brings us to the summary of this comprehensive deep dive. We've covered a tremendous amount of ground. We've hopefully alleviated some anxiety about basic eligibility, but also highlighted the critical unknowns that are still out there.
Let's reinforce the most important facts we discussed today, the non-negotiables. First, the potential payment amount is substantial, $2,000 or more. This is real money being discussed.
Second, eligibility is broad. Based on the language of everyone and not high-income people, Social Security, SSI, SSDI, and VA beneficiaries should absolutely be included as long as their income is under that likely $75,000 to $100,000 individual AGI threshold.
Third, pay close attention to those two key federal offsets we identified. If you owe back taxes to the federal government, or if you have past due child support obligations, your payment may be intercepted before it ever reaches you.
And fourth, the urgent need for clarity on protections. We are still waiting for that official definition of high income, as well as confirmation on critical safeguards for garnishment, and most importantly for our most vulnerable listeners, that 12-month exclusion from means-tested benefits like SSI and s.n.a.p.
We understand that these potential payments can be life-changing. I mean, they offer much-needed breathing room to cover utilities, medical costs, overdue rent. We are committed to being your trusted guide, breaking down all this technical language into clear, actionable, and empathetic information every single step of the way.
Now for our final provocative closing thought. This entire payment, as we've said, is tied to tariff revenues. It's tied to international trade policy, not traditional domestic spending.
So if the funding mechanism for widespread community relief is now structurally tied to trade revenue, what does that imply about future payments? Does this create an entirely new stream of economic relief, one that's tied to global trade policy?
And would that make these payments more frequent, less dependent on those contentious domestic appropriations debates?
It's a fascinating precedent. It could fundamentally change how we think about economic policy and wealth distribution in the U.S.
Absolutely. And the situation is dynamic. It is changing daily. The second that details like official dates and finalized income thresholds hit the wire, we will be right here to update you immediately. We strongly encourage you to subscribe and turn on your notifications so you never miss a crucial financial update.
And please, share this deep dive with family or friends who are also relying on these fixed benefits. We appreciate your trust, and we'll be here for you every step of the way, providing clarity. Welcome to the Deep Dive. If you are an older adult, a retiree, a veteran, or, frankly, anyone relying on Social Security SSI, SSDI, or VA benefits, you're going to want to listen very closely.
You really are, because the conversation that is absolutely dominating Washington right now involves a proposal that could put significant, and I mean immediate, financial relief right into your bank account.
We're talking about a major piece of financial news, the discussion around a potential $2,000 direct payment.
That's the number, $2,000.
Now, some people are calling it a stimulus check, others are calling it a dividend payment.
Right.
But whatever you call it, the number is concrete.
And the single most urgent question, the one that we know causes the most anxiety for anyone on a fixed income, is this. Are beneficiaries included?
Or is this just for people with, traditional jobs?
Exactly. So our mission today is to take the direct comments from Treasury Secretary Scott Bessent, he's the one leading this, and really use them as a roadmap to clarify who is eligible and hopefully provide some real reassurance.
Because let's be honest, with the cost of living pushing everyone's budget to the absolute limit, that $2,000 could be the difference.
It could be everything.
Okay, let's unpack this.
So to start, just to lay the foundation, this is real. This proposal is well beyond just an idea being floated around.
It's not just talk.
Not at all. Treasury Secretary Scott Bessent has confirmed it. The administration is actively discussing and developing a plan to send $2,000 direct payments to average Americans. This is an active initiative.
And what I find fascinating right from the start is the language they're using.
The terminology, yeah.
It's not just one thing. He's using the term we all know, the $2,000 stimulus check.
Right, which everyone remembers.
But he's also using these more, policy-sounding phrases like $2,000 dividend payment or even a refund. Why are they doing that?
It's a really crucial distinction, both politically and legally. When you say stimulus check, it immediately makes you think of the past emergency payments, like from the CARES Act.
It frames it as emergency help.
Precisely. It's aid to stabilize a struggling economy. But when you start using words like dividend or refund, you're subtly changing what the payment is.
How so?
Well, a dividend, that implies the government is returning money from, say, economic success to its shareholders, the American public.
And a refund.
A refund suggests it's just giving you back taxes that you overpaid. It's your money to begin with.
So it's a messaging strategy. It lets them frame the payment in a way that appeals to different groups, different political ideas.
That's it exactly. You can see it as essential relief, or you can see it as money you were owed all along.
Right.
But the objective, no matter what you call it, is the same.
And that objective seems pretty clear.
Oh, absolutely. The secretary said this is a direct response to the very real and severe concerns people have about inflation and the rising cost of living.
So they see this as a tool to get spending power back into people's hands.
Yeah.
Immediately.
Yes. And he was careful to point out this wasn't some rushed, last-minute idea. He framed it as part of a long-term strategy.
Right. He said they've been working on solutions since day one of the administration. He even mentioned some earlier executive orders.
And that continuity part is really important for you, the listener, because it suggests they're committed to this. It's not just a political soundbite they're going to forget about next week. They want to see it through the whole process.
And this commitment is part of what he called their two-pronged strategy for relief,
A two-pronged attack on high costs, really.
which is designed to hit the problem from two different directions at the same time.
That's right. Strategy one is the direct cash. The $2,000 payment, the refund, the dividend, whatever its final name is, that's the immediate money-in-your-hand relief.
And strategy two.
Strategy two is a parallel effort. It's more structural. It involves changing trade policy with the specific goal of lowering the prices of everyday things you buy.
I do like that they're looking at both sides of the budget. They're trying to raise your income with the payment.
And lower your expenses with the policy changes. We are going to get into the trade stuff a bit later because it's really interesting.
But for now, the main takeaway is that this isn't just a simple handout. They're trying to use all their economic tools.
Yes, it's a blend. An immediate cash injection mixed with these longer-term adjustments to fight inflation. It's different from the last stimulus rounds.
But none of that matters if they can't actually get the money out. And that brings us to the big roadblock.
Congress.
Right.
The secretary was very, very clear on this, and it's so important for managing expectations. This payment requires Congress.
This is not something the president can just sign into existence tomorrow.
Absolutely not. This isn't an executive fiat. The Treasury can't just start sending checks.
So for our listeners, that means it has to go through the whole process. It has to pass the House of Representatives.
Then it has to pass the Senate.
And only then does it go to the president to be signed into law. And given how things are in Washington right now, getting a majority in both chambers is, well, it's a huge hurdle.
It's a massive hurdle, and that's exactly why the conversation immediately shifts to other ways of getting it done.
Alternative pathways.
Right. Lawmakers have already started talking very serially about using the budget reconciliation process.
Okay, reconciliation. That's a term a lot of people have heard, but they might not know exactly what it means or why it's so important here. Let's really dive into that.
We have to, because it represents the best hope for getting this done quickly. Reconciliation is a special procedure in the Senate. It's mainly for bills related to federal spending, revenue, budget stuff.
It's a superpower.
Its superpower is that it can't be filibustered. So instead of needing 60 votes to pass something in the Senate, a reconciliation bill only needs a simple majority.
51 votes. Or 50 plus the vice president's tie-breaking vote.
Exactly.
Yeah.
That's the hope. It's a potential shortcut around all the gridlock.
But if it's that easy, why don't they pass everything that way? There have to be limits, right?
There are big ones. It's called the Byrd Rule, and it basically says you can only use reconciliation for budget measures. You can't stick in extraneous stuff.
Meaning things that don't have to do with spending or taxes.
That's right. You couldn't, for example, attach a huge new healthcare law to a reconciliation bill that's just supposed to authorize a payment. It keeps the bill focused.
So if they structure this $2,000 payment as, say, a tax refund, like they've done before,
then it fits perfectly. It's a prime candidate for reconciliation. It just means the bill itself has to be clean, lean, and focused only on that spending.
which helps us understand why lawmakers are already saying more reconciliation bills are coming. They're signaling they have a high priority item like this that they might need to push through without bipartisan support.
It shows their strategy. And the secretary's comments really reflect that flexibility. He said the president is all about solutions and that everything is on the table.
Which is code for, we'll try the normal way first.
But we are fully prepared to use reconciliation if we have to. They just want to get the money out.
And this all ties back to some of the administration's other financial promises, right?
Mm-hmm.
The secretary mentioned things like no tax on tips, Social Security, overtime.
He did. He connected it all to a very specific prediction. He said that because of all these efforts, including this potential $2,000 refund, Americans are going to see a big bump in the first quarter with the refunds and the real incomes.
That phrase, real incomes, is key. It's not just about more dollars. It's about what those dollars can actually buy after inflation.
It's about purchasing power. He's building a narrative of sustained effort that will lead to real, tangible results early next year.
But that other phrase he used, working Americans and working families, that creates a huge risk. And it brings us right to the main fear our listeners have.
This is it. This is the moment we have to address the #1 source of anxiety from everything the secretary said.
Because when he keeps saying, for working families,
If you are a senior who hasn't worked in 20 years, or you're on SSDI because you can't work, That language makes you think, I'm going to be left out.
It's an immediate and completely understandable fear. The language is vague. But this is where we need to stop and provide the definitive clarity that comes from looking at how these things have always worked.
This is where the policy analysis is totally different from the political rhetoric.
And where it gets really interesting.
The crucial definitive clarification from every single analyst who knows these payment systems is this. Eligibility is based on your income, period.
It's an income test, not a job test.
It's an income test, not a job test. I want to say that again. They check your total adjusted gross income, your AGI.
But let me just challenge that for a second. Couldn't they, if they really wanted to, write this bill to specifically exclude people who aren't working? To save money?
I mean, theoretically, Congress can write a bill any way they want, but the political fallout, not to mention the logistical nightmare of trying to do that, would be catastrophic.
It would go against all the precedent.
Completely. When the government sends out mass payments, they don't send people door to door to see if you have a job. They look at one thing, the income number on the tax forms they have for you.
So in every previous stimulus or refund program, the threshold was based on that adjusted gross income number.
Every single time. And that number includes more than just wages. It includes the taxable portion of your Social Security, pension payments, interest, any taxable income.
So let's be as explicit as possible here. Based on that clear rule that income is what matters, we can confirm that recipients of Social Security retirement, SSDI, SSI, survivors benefits, VA benefits, railroad retirement, all of you.
You are intended to be included as long as your total income is below whatever limit they set.
It would be completely contradictory to the whole point of the program to leave you out.
Think about it. The payment is designed to help people struggling with the cost of living. Who is most vulnerable to inflation?
People on fixed low income.
Exactly. Seniors, the disabled. Excluding the most financially vulnerable group would make the entire policy ineffective.
So the source of your income doesn't matter as much as the amount of your income.
Right.
A 9-to-5 job, Social Security, a VA pension. If the total is under the limit, you should qualify.
And this is backed up by the political analysis in our sources, too. The analyst said that creating a policy to specifically cut out federal beneficiaries would be, and I'm quoting, very bad. Very bad.
You're talking about tens of millions of people. A huge, engaged group of voters.
The analyst pointed out that the 2026 election is not that far away. Intentionally creating a relief bill that ignores such a massive part of the low-income population would be, quote, a really bad, not smart move.
It's just not politically survivable.
So when you hear the secretary say working families, you need to translate that. In government speak, in policy terms, that means households below a certain income threshold.
Don't get hung up on the word working.
Don't. Just focus on the income number that will be in the final bill. That's the only thing that will matter for you.
Okay, so we've established income is the key. So let's get into the actual dollars. What do we know about the income limits they're discussing for this $2,000 payment?
The secretary didn't give a final locked-in number in this particular clip, but he has given a very clear range recently. And the general idea is that it would be for individuals or households with an income under $100,000.
Under $100,000.
Yeah.
That's interesting. Because previous stimulus payments often started phasing out much lower, around $75,000 for a single person.
It's a crucial comparison. The fact that they're even talking about a ceiling as high as $100,000 suggests they're trying to cast a much wider net this time.
They're targeting more of the middle income group.
Right. People who might not have qualified before, but who are really feeling the squeeze from inflation now. It's an acknowledgement that everyone's purchasing power has gone down.
But he did say that number isn't set in stone. He said it could be 75, it could be 60. That's a pretty big range.
It is a huge range. The difference between a $60,000 and a $100,000 cutoff impacts millions of people. And that uncertainty is why we keep saying, don't worry about the speculation. You have to wait for the final text of the bill.
That's what will have the exact numbers for single filers, married couples, and so on.
Exactly.
Now for the question that causes so much stress for so many of our listeners, the non-filers.
The what about me question, I'm on SSI, my income's too low to file taxes, what happens to me?
And that anxiety is so valid. In the past, non-filers have had the hardest time getting their money.
They have. But from a purely qualification standpoint, the news is actually very reassuring. If you don't file a tax return, it's almost always because your income is below the standard deduction.
And what does that mean when we're talking about an income limit?
It means that for the government's purposes, your income is effectively zero for tax calculations.
So the math is pretty simple. Is $0 less than $100,000?
Yes. Is it less than $60,000? Yes. You are highly likely to be eligible because your income is so low.
So not filing a tax return isn't a barrier. In a way, it's proof that you qualify.
That's a great way to put it. The lack of a return is often proof of your low income status.
But, and this is a big but, qualifying is one thing. Actually getting the money is another. We saw the government struggle with this before.
Immensely. They didn't have current bank information for millions of non-filers. So let's talk logistics. In the past, they set up an IRS non-filers tool online.
Which was difficult for a lot of people to use.
It was. But for beneficiaries, for people on Social Security, SSDI, SSI, or VA benefits, the process was different and much easier. The Treasury worked directly with the SSA and the VA.
To use the direct deposit information they already have.
Exactly. So the most important advice for you if you rely solely on benefits is this. If your monthly benefit is direct deposited, you should be set to receive this $2,000 payment through that exact same channel.
And what if you get your benefits on a Direct Express card?
The same thing applies. That card works just like a bank account for these purposes. They loaded the previous payments right onto those cards.
So as long as your info is up to date with the SSA or the VA, you shouldn't have to do anything extra.
You shouldn't. The anxiety is really for people who might get paper checks or whose bank account has changed recently.
So the key action item is to make sure your address and your direct deposit info are current with the agency that sends you your benefits.
That is the single best thing you can do right now to prepare. It's the simplest way for the government to find you and get you the money quickly.
The bottom line is they want to get this money to low-income Americans. Don't let the fact you don't file taxes make you think you'll be forgotten.
Let's shift gears now to that second prong of the plan. The part that isn't about giving you more money, but about making things cost less.
The trade policy changes.
Right. The secretary mentioned his team has been working on these trade deals for 6, 7, 8 months. They're just recently finalized.
And how do these deals actually lead to you saving money at the checkout counter?
The mechanism is tariffs. A tariff is just a tax the government puts on imported goods. By making these new deals, mainly with countries in Central and South America, the U.S. has agreed to get rid of those taxes on certain products.
And what products did he mention specifically?
He was very specific. He named everyday items: coffee, cocoa, bananas, and he said many other items as well.
And the idea is that when you remove those taxes, the prices here in the U.S. should come down.
That's the anticipation. These are not luxury goods. These are staples in most people's weekly grocery budget.
Do we have a sense of how much prices could drop?
He didn't give a percentage, but we know tariffs on food can be pretty significant, sometimes 5, 10%, or even more. So if you remove, say, a 7% tax on imported coffee beans, that saving should theoretically get passed on to you.
So the $2,000 payment is the immediate, shot in the arm.
The defibrillator, yeah.
And the trade deals are the long-term plan to keep prices stable. It's an interesting mix.
It is. And it's also smart politics. It lets the administration say, look, we're not just handing out money. We are fixing the structural causes of inflation with better policy.
Speaking of politics, let's circle back to why it's basically impossible for them to exclude beneficiaries from this payment.
It comes down to leverage and logistics. Economically, beneficiaries are the group hit hardest by inflation, so leaving them out makes no sense.
And politically.
Politically, it would be suicide. You would alienate millions of seniors, veterans, and disabled Americans who are all feeling the pain right now. That analyst's warning about the 2026 election is not an exaggeration.
And it's just harder to do bureaucratically.
It's so much harder. It's far more efficient to just use the existing SSA and VA systems to send money to everyone below the income line than it is to build a whole new system just to filter some people out.
So their inclusion is basically a political and a logistical necessity.
Which just reinforces what we said earlier. The test is income, not your job.
Okay, now for the practical concerns. Let's assume the bill passes and you qualify. People need to know the logistics, the timeline, and the protections that come with a payment this big.
And let's start with the most stressful part. When?
Yeah.
We know it depends on Congress, but what does that actually look like?
If a bill is introduced tomorrow, what are the steps?
Well, based on past spending bills, it's unpredictable. First, the bill has to go through committee in the House. That's where they hammer out the final details. That alone can take weeks.
Then a vote in the full House.
Then it goes to the Senate. And that's where things usually slow down the most, especially if they don't use reconciliation.
So when the secretary talks about a big bump in the first quarter,
Mm.
that's a really aggressive timeline.
Extremely ambitious. For you to get a payment in, say, January or February, that bill needs to be passed and signed into law by early December at the latest. That gives the Treasury time to set things up.
That would require a massive amount of political cooperation.
Or the immediate use of reconciliation. The point for you to understand is that any delay will be because of politics in Washington, not because the Treasury is slow.
Okay, delivery. We touched on this. For most beneficiaries, it should be automatic, right?
It should be. In every past round, if you are already getting federal benefits by direct deposit, the Treasury just used those payment files. It's the fastest, easiest way.
So the $2,000 should show up in the same bank account your Social Security does.
Will be loaded onto your Direct Express card.
Yes.
As long as your information is current, you shouldn't need to go to some special IRS website or fill out a new form.
That's a huge relief. Now, financial protection. Is this payment going to be taxed?
Based on all the precedents, no. This kind of payment is almost always structured as a tax credit or a refund, which means it is not considered taxable income.
More importantly, does it affect your eligibility for other benefits, like SSI, s.n.a.p, Medicaid?
That is the critical question. If getting $2,000 suddenly pushes you over the asset limit for SSI, you could lose your monthly benefit, which would be a disaster.
It would defeat the whole purpose.
It would. And that's why past legislation has always included specific protections. They usually write the law so that these payments don't count as income or a resource for 12 months.
So it shouldn't affect your other federal benefits.
We have to assume the final bill will include that same vital protection. It's something everyone needs to look for in the final text.
And what about debt collectors? If someone has private debts, can this money be garnished?
Another great question. In the past, these payments were protected from garnishment by private creditors, so credit card companies, medical debts, things like that.
But not from government debts.
Generally not. Things like back taxes or overdue child support could still be taken out of the payment. So, again, the final text of the law is what matters. The expectation is protection from private debt, but not necessarily from federal or state debt.
And finally, we have to issue the warning: scams.
We have to be so loud and clear about this.
The Treasury, the IRS, the Social Security Administration, the VA.
They will never, ever call you, text you, or email you asking for your personal information or for a fee to get your payment. It will never happen.
If anyone contacts you and says you need to pay a fee to expedite your $2,000 dividend, it is a scam. 100% of the time.
Hang up. Delete the email. Block the number. Only trust official letters in the mail from a government agency or information you get by logging into your own secure My Social Security account online.
Our main message here is to stay calm. Don't worry that you'll be left out because you're not working 9 to 5.
Focus on the income requirement, make sure your benefit information is up to date, and then we just have to wait for the political process to play out.
So to wrap all this up, let's just summarize the 2 most important facts that we've pulled from this deep dive.
Let's do it. First, the payment is real. It's being actively developed for $2,000, maybe more. But it needs Congress to act either the normal way or through that reconciliation shortcut.
And the timeline for that depends entirely on political speed.
Second, and most importantly, eligibility is all about income, not about your job. The limit is likely to be under $100,000, which means Social Security, SSDI, SSI, VA, all beneficiaries with low incomes are expected to qualify.
Don't let the phrase working families cause you any more worry.
Please don't.
So what does this all mean for you? We've talked about this dual strategy, the immediate cash from the payment and the longer-term relief from lower prices through trade. We've established that your inclusion is almost a certainty, politically and logistically.
So the provocative thought we want to leave you with is this. When you think about your own household budget, how will these 2 solutions interact? Which one do you think will provide the fastest and most meaningful relief for you personally?
Is it the one-time check that helps you catch up on bills right now? Or is it the ongoing, steady relief of slightly lower prices at the grocery store, week after week?
It's something to think about. Your next step now is just to keep an eye on the legislative process. Seeing how quickly that bill moves will be the best clue you have as to when that money might actually arrive.
Stay informed, stay calm, and focus on the facts as they come out in that. Welcome back to the Deep Dive. Today we are cutting straight through all the noise.
A lot of noise.
So much noise around what might be one of the biggest financial updates we've seen in a while. We're talking about the very real possibility of thousands of dollars in direct payments.
Right.
Specifically, that number we keep hearing is $2,000, and it could be coming to you as emergency relief.
And that's the keyword, relief. And for those of you on a fixed income, and we know that so many of you listening, whether you're a retiree or you're receiving Social Security, SSDI, SSI, VA benefits, your biggest question is always, am I included?
Of course.
We're going to make it crystal clear today why this payment is, well, it's pretty much designed with you in mind.
Yeah, this money could provide that breathing room everyone needs for bills, for rising costs, and we're going to break down the timeline, who's eligible, and how to protect yourself right now.
Let's do it.
Okay, so let's really set the stage. Our mission today is to focus on these really high-profile updates. They're coming directly from the administration. We're talking the president, the Treasury Secretary.
Yep.
And they're using this specific term, dividend payments.
Right. And we need to translate that immediately. When you hear dividend payment, just, think stimulus check.
Exactly. It's a direct payment.
It's a direct payment. And the number that keeps coming up over and over is $2,000. Or sometimes they'll phrase it as thousands of dollars.
And what feels different this time, and you've pointed this out, is the sheer political commitment. It's not just a vague idea anymore.
No, not at all. You have lawmakers, senators, the highest profile people in the administration giving, almost daily updates. It suggests this is highly, highly likely to happen.
So the goal here is to filter out that noise, like we said, and really speak to the concerns of everyone on a fixed income. Retirees, people on Social Security, SSI, SSDI, VA benefits. You need clarity.
You need to know if you qualify, and just as important, when that money might actually show up.
Absolutely. The political momentum is building, and it seems like they're really committing their reputation to this.
They really are. And that's important because when they commit this hard, politically, it becomes very, very difficult for them to back out. The public backlash would just be enormous.
Okay, so let's unpack maybe the most interesting and unique detail about this whole thing. Where is this $2,000 payment actually supposed to come from?
Yeah.
Because it's not like the last stimulus rounds.
No, not at all. This is not the same playbook. Those were funded through, massive borrowing, just straight up deficit spending.
Right, printing money, basically.
This is completely different, and that's why they're using that very specific word, dividend.
Okay, so what does that mean? A dividend from what?
The entire plan is to fund these payments using tariff revenue.
Tariff revenue. Okay, explain that.
So, money the government collects on imported goods. The plan is to peel off about $600 billion of that revenue money that's already in the government's accounts and then distribute it back out to the people.
$600 billion. That is not a small number.
That's a massive number.
Before we even get to how they'll send it out, what does taking $600 billion from tariffs do to the rest of the budget? That money usually goes somewhere, right?
That is the multi-hundred-billion-dollar question, isn't it? And yeah, it's a major political trade-off. That revenue normally just flows into the general fund.
So it helps pay for everything.
Pretty much. Government operations, infrastructure projects, maybe paying down a tiny piece of the deficit. So if you divert $600 billion, you're essentially choosing not to fund other things.
So it isn't really free money.
Oh, absolutely not. Nothing is. It's a redirection. They're taking money that could have, say, repaired highways or funded federal agencies, and they're putting it directly into your pocket.
And that must be facing some serious opposition.
It is. Of course it is. But this is where the political messaging comes in. By calling it a dividend or a rebate to the American consumer, they're framing it differently.
They're saying it's your money anyway.
Exactly. They're basically saying you paid for these tariffs through higher prices on goods, so we're just giving it back to you.
Yeah.
And politically, that's a much easier sell than we're going to borrow another $600 billion.
And that amount, the $600 billion, it's a huge number. How much tariff revenue is that really?
To put it in perspective, it's nearly 2 full years worth of tariff collections.
Wow.
So it's a gigantic bet. They are betting that the political win from sending you $2,000 is bigger than any political fight over the budget.
So how does that $600 billion figure connect back to the $2,000 checks for everybody?
It lines up almost perfectly. The math works out. I mean, we're talking about a huge logistical operation here.
Yeah, I'll bet.
The goal is to send $2,000 to about 85% of the population.
Yeah.
That comes out to roughly 284 million people. And if you do the math, $2,000 times that many people is about $568 billion.
So the $600 billion covers it with a little buffer.
Exactly. The funding pool is specifically designed to cover the full cost. It's not an accident.
All right, that makes the funding part much clearer. It's a redirection. Now, let's get to what is, I think, the most critical part for our audience: eligibility.
Mm-hmm.
We have to address the confusion and, honestly, the anxiety that was caused when officials, including the Treasury Secretary, used the phrase working families.
That phrase, it caused immediate panic. We saw it in the comments, the emails. I'm on disability, I can't work. Does this mean I'm left out?
Right. I'm a retiree. I'm not a working family anymore.
And we need to just state this as clearly as possible.
So let's be definitive. Are people on fixed income, Social Security, SSI, SSDI, VA benefits excluded because of that phrase?
No, absolutely not. 100% no. That phrase, working families, is just. It's political jargon, it's shorthand, it's meant to sound inclusive and relatable to a broad audience.
So it doesn't literally mean you have to have a job.
It does not mean you must be currently employed. The administration knows, they know full well, that excluding seniors and people with disabilities from a major payment like this would be political suicide.
Okay, so if it's not about having a job, what is the actual rule? What's the real criteria they'll use?
Well, it's one thing, your income.
That's it.
That's it. Specifically, your adjusted gross income, or AGI. They are not checking your employment status. They don't care if you have a job. The only question they ask is your income below the cutoff?
And what do we expect that cutoff to be?
Well, nothing is final until a bill is passed, but if we look at the past 3 stimulus rounds and other proposals, all signs point to a threshold of around $75,000 for an individual.
And for a couple.
And $150,000 for a married couple who files their taxes together.
Okay, let's quickly define AGI, because a lot of our listeners might not file taxes, so that term might be new to them.
Right, good point. So adjusted gross income is basically your total gross income minus a few specific deductions. For most people on a fixed income, your AGI would be the taxable part of your Social Security benefits.
Not the whole amount.
No, just the taxable portion. Plus, any pension income, money you take out of a traditional 401k or IRA, things like that.
What about things that aren't taxed?
Critically, non-taxable income doesn't count. So certain VA benefits or the non-taxable part of your Social Security, that's excluded. And that's really helpful because it means your AGI is often much lower than your total cash in hand.
So it's very likely that most people on Social Security or disability will fall well below that $75,000 line.
The vast majority, yes. So if your AGI is below that line, you qualify, period. End of story. The phrase working families is noise. Your AGI is the signal.
And let's just hammer this home with the historical proof, because I think it's the most reassuring thing we can offer.
It really is. The evidence is concrete.
Why are we so confident?
Okay, first, just pure politics. Seniors and retirees are one of the largest, most reliable voting blocs in the country.
They show up to vote.
They absolutely show up, alienating that entire group by denying them a $2,000 check right before an election. It would be, it would be politically ridiculous. It would backfire spectacularly.
So there's the political motivation, but there's also the plumbing, right? The system is already built to do that.
The plumbing is already there.
Yeah.
Exactly. Look at the last 3 stimulus checks, the $1,200, the $600, the $1,400 payments.
Mm-hmm.
In all 3 of those cases, the system was already set up to send money directly to Social Security retirees, to SSDI recipients, to people on SSI, to VA beneficiaries.
Right.
They didn't have to invent a new system. They just used the payment info they already had.
And you even brought up a really specific example from back in 2009.
Yes. This is a perfect historical precedent. Back in May of 2009, during that crisis, the government sent out a special $250 payment. And it went only to Social Security beneficiaries, railroad retirees, and veterans.
So they've specifically targeted this exact group before?
They have. It proves they have the ability and the willingness to do it. So when you hear working families, I want you to replace that little bit of anxiety with the confidence of history. The system is built for you.
It's incredibly clear. Let's talk a bit more about those income thresholds, the $75,000 and $150,000.
Mm-hmm.
What about people who are right on the edge? Say someone makes $76,000. Are they just out of luck?
That's a great question. And no, they're usually not just cut off completely. These kinds of payments almost always use what's called a phase out.
Phase out.
Yeah, so your benefit doesn't just drop from $2,000 to zero the second you make $1 over the limit.
Okay, so how does that work, typically?
Usually, the payment amount starts to decrease gradually over a certain income range. For example, they might reduce the payment by, say, $50 for every $1,000 you earn above that $75,000 threshold.
So someone making 80,000 wouldn't get the full 2,000, but they'd still get something.
Exactly. They might get, say, $1,750 instead. It protects people who are right on that borderline from losing the entire benefit just because they're a little bit over. We fully expect to see a similar phase-out rule for this payment.
That's really helpful. Okay, now let's move to the legal structure of the payment. This is a bit technical, but it's maybe the most important detail for anyone with low or zero taxable income. What is this payment legally?
This is the absolute key to the whole thing. Legally, these stimulus checks, these dividend payments, they are all structured as an advance of a refundable tax credit.
Okay, two big phrases there, advance and refundable tax credit. Let's break down refundable tax credit first.
Right. So think about it like this. A non-refundable tax credit can only lower the taxes you owe. If you owe $500 in taxes, a $2,000 non-refundable credit will wipe out that $500, and the other $1,500 just disappears.
You don't get it back.
You get nothing back. But because this payment is refundable,
It's different.
completely different, a refundable tax credit is treated like actual money you've paid to the government. Even if your income is so low that you owe zero in taxes,
You still get the money.
you still get the full $2,000. The government literally cuts you a check or makes a direct deposit for the full amount.
That is the guarantee. That's the mechanism that makes sure everyone on a fixed income, even with no taxable income, gets the money.
That's the whole ballgame. And the advance part just means they give you the money now based on your status instead of making you wait to claim it on a tax return next year.
Which brings up the next question. What about filing taxes? So many people on fixed incomes don't have to file. Will they need to file a tax return just to get this money?
It is highly, highly unlikely. Just like with the last stimulus rounds, the Treasury and the IRS will get the data they need directly from the Social Security Administration and the VA.
So if you're already getting a federal benefit,
They know who you are. They have your payment information, whether it's a bank account for direct deposit or a mailing address for a check or a direct express card. As long as your income is below the threshold, you should not need to do anything at all. No tax return required.
that is a huge relief to hear. Okay, so we've covered the money, we've covered who gets it. Now, the big question, when? When might this $2,000 actually arrive?
Right, the timing. So the official word coming from the president is that the money is, and this is the quote, likely coming sometime in the middle of next year, or possibly a little bit later than the middle of next year.
Okay, so let's translate middle of next year or a little bit later. What does that mean in terms of months?
We're looking at a window of, say, late summer to early fall of next year.
So not next week.
Definitely not next week. Everyone needs to manage their expectations. This is not immediate. There's a whole legislative process to get through first. This money is not scheduled to arrive in the next few weeks or even couple months.
But let's look at that timing. Late summer or early fall of next year. That's not an accident, is it?
Oh, not at all. You just have to look at the calendar. That timing is perfectly calibrated.
For the midterm elections.
Right before the midterm elections. It is a classic textbook political strategy. You deliver a huge, tangible financial benefit to millions and millions of voters just a couple of months, maybe even a few weeks, before they go to the polls.
And make sure the payment is fresh in their minds.
Top of mind. It's
Yeah.
designed to have maximum political impact.
And we have to keep saying this is still a preliminary plan. It's not law yet. What has to happen for it to become real?
Well, it has to pass through Congress. It'll likely be part of a larger bill, maybe an appropriations bill, or it could be a standalone piece of legislation. That process takes time. Debates, votes. That's why the target is the middle of next year. The final date won't be set in stone until that bill is actually signed into law.
Okay, so that's the planned timeline. But you mentioned an accelerator. What could happen that would make this money show up much faster than the middle of next year?
One thing, really, a major economic
A
shock.
crash.
A crash, a severe recession, a major market downturn, that crash and burn scenario. If that were to happen in the near future, say in the next couple of months,
The political timeline goes out the window.
completely, the need for emergency fiscal stimulus would override everything else. In that situation, the government's priority shifts from political timing to just getting cash out the door.
And they would move immediately.
practically immediately. An economic crisis like that triggers an emergency response. You'd see massive money printing, what people call helicopter money, just to stabilize consumer spending and prevent a total collapse.
You've mentioned a number before in a scenario like that, a staggering number,
Yeah.
$15 trillion. Can you put that in context? That sounds astronomical.
It is. And to be clear, that 15 trillion isn't just for stimulus checks.
Okay.
That's an estimate of the total government and central bank intervention that would be needed to stabilize the entire financial system in a crisis on the scale of, say, 2008, but in today's much larger economy.
So that includes bailing out banks, liquidity for markets, everything.
Everything. It's the whole financial war chest. The stimulus checks would be one of the first and most important parts of that, but they'd be a piece of that much larger response. The point is, if the economy hits a wall, this payment becomes almost certain, and it becomes immediate.
Okay, that makes sense. We're talking about a potentially life-changing amount of money here, $2,000. So we have to spend some serious time on safety, security, and financial protections.
This is a top priority, paramount.
Let's start with garnishment. If you owe money to a credit card company or a debt collector, can they just take this money from your bank account?
Great question. Based on all the previous stimulus checks, the answer is almost certainly no. Those payments came with very strong protections against garnishment.
So most creditors couldn't touch it.
For the vast majority of people, yes. Now, there were a few rare exceptions.
What were they?
Things like federally owed back taxes or court-ordered back child support. In those specific cases, the money could sometimes be intercepted. But for your typical debts, credit cards, medical bills, personal loans, the money was protected. We fully anticipate this $2,000 payment will have those same protections built in.
What about other benefits? So many of our listeners rely on programs like S.n.a.p. food assistance, Medicaid, or housing assistance. Will getting this $2,000 suddenly make them ineligible for those things?
That's a vital concern, and the answer, again, should be no. Because the payment is legally a tax credit, a one-time thing, it's not treated as regular income for these programs.
So that doesn't count against you.
Right. In the past, the rule was that the stimulus money didn't count as income or as a resource for at least 12 months. The whole point is to help you, not to accidentally kick you off other essential benefits.
And for those on disability who work part-time, what about SGA, the substantial gainful activity limits?
It does not count towards your SGA limit, not at all. This is a federal benefit payment. It is not earned income from a job. Your eligibility for the $2,000 is based on your total AGI, not on how it interacts with SSA's work rules.
Perfect. Now, the big one, scams. The second there's a whisper of thousands of dollars, the scammers just come out of the woodwork. They target seniors. They target vulnerable people. We need to be loud and clear about this.
We have to be. So if you are listening, please commit this to memory. The IRS, the Social Security Administration, the VA, they will never, ever call you, text you, or email you to ask for personal information or money to release your payment.
Never. What are the red flags to look for?
Any message that creates a sense of urgency or fear, your account is frozen, or you must act now to claim your money.
High pressure.
Exactly. Anyone asking you to pay a processing fee or an admin fee to get your benefit, that is always a scam.
What about gift cards?
If anyone, for any reason, tells you to go buy gift cards, Apple, Google Play, Target, whatever, and give them the numbers on the back to pay for something, hang up. It is 100% a scam. Every single time.
So where do people get real trusted information?
Only from official sources. That means a physical letter in the mail from the IRS or SSA, or a government website that ends in .gov. That's it.
So if you get a suspicious call,
you hang up. You don't argue. You don't engage. Just hang up. And if you can, report it. You can call the Social Security Office of the Inspector General hotline to report scams.
Okay, let's say the payment is approved. The dates are announced next year, and for some reason, a listener's payment doesn't arrive, or it's the wrong amount. What should they do?
First thing is, don't panic. With millions of payments going out, there are always some delays, especially if you've recently moved or changed bank accounts.
Your banks is key.
It is. The best place to check for official updates if you're a Social Security recipient is your online My Social Security portal. That will have the most accurate, personalized information for you.
So wait for the official word before assuming it's lost.
Exactly. The government will set up official channels to report missing payments, just like they did before. It'll probably be a tool on the IRS website. But wait for that to be announced. Don't call random numbers or click on suspicious links.
Okay, let's pull back for a moment. How does this $2,000 payment fit into the bigger economic picture? This is just a one-time political fix.
It's a signal. It signals a huge vulnerability in the economy, especially for people on fixed incomes. The fact that the government feels it needs to do a nearly $600 billion direct payment tells you that the normal systems, like the annual COA, aren't enough.
The cost of living adjustment isn't keeping up.
It's not with this kind of sustained inflation. It's a good mechanism, but it lags. This $2,000 payment is an admission that people have fallen behind and need a big, direct boost to catch up.
So if it goes out next year as planned, it's a targeted boost.
It's a targeted boost, but as we talked about, if it gets accelerated because of a crash, it signals something much more serious. It signals that the system itself is in crisis and needs an emergency cash infusion to stay afloat. The fact that they're preparing this tool shows they know that's a possibility.
Let's circle back to that political commitment one last time. They've gone all in on this, the funding source. They've committed so hard, as you said.
They really have. The political capital they've spent just talking about this is immense. They've built up a massive public expectation.
So what happens if they don't deliver?
I think the backlash would be absolutely massive. It would be seen as a colossal failure, a broken promise, especially by seniors and other fixed-income voters who've been told this is for them.
It would be a huge breach of trust.
A profound breach of trust right before an election. For that reason alone, the political pressure to make this happen is just enormous. It strongly suggests that, one way or another, this payment must happen.
That is the crucial context. Okay, let's bring it all together, a final summary of the most important facts.
Yes, let's lock in the key takeaways.
First, the amount. We're talking about a targeted one-time payment of $2,000.
Second, and this is the big one, who qualifies? Social Security retirees, SSDI, SSI, VA beneficiaries, you are included. Please ignore the political jargon like working families.
It's all about your income.
It is only about your adjusted gross income being below the threshold, which we expect to be around $75,000 for an individual and $150,000 for a couple.
Third, the timing. The plan right now is for the middle of next year, late summer, early fall.
But you have to watch the economy. A serious downturn could speed that up significantly, making it almost immediate.
Finally, the protection.
Remember, this is an advanced refundable tax credit. That's the legal structure that guarantees you get the money, even with zero taxable income. And it protects the funds from most creditors and from messing up your other benefits.
We completely understand how critical a payment like this is. It's about dignity. It's about paying the bills without having to choose. It's about providing that stability. We are going to keep tracking every single development.
Every press release, every legislative draft, we'll bring it to you the moment it happens. And that's why we have to encourage you, if this deep dive was helpful, please subscribe to the channel and make sure you turn on your notifications.
It's truly the only way to guarantee you won't miss a critical update on this $2,000 payment or anything else that affects your financial security.
And please, share this with friends, with family, anyone you know who needs this information. And leave your questions in the comments below. We read them all.
Thank you so much for tuning in. We'll be back soon with another deep dive into the headlines that matter.
If you're watching this, you know how precarious things feel right now. For so many Americans, especially if you're relying on a fixed income, on Social Security, SSI, SSDI, or VA benefits, I mean, every single dollar matters.
It really does.
And that is exactly why we need to focus on a major financial commitment that has, well, it's basically dominated the headlines for the last few days.
Yeah.
We're talking about a potential $2,000 payment promised directly to the American public. And this isn't just a rumor.
No, not at all. The commitment has been unprecedented in its coordination. We've heard it publicly, repeatedly, from the president, the Treasury Secretary, the chief economic advisors. All of them affirming their dedication to delivering this specific $2,000 payment.
They've put the number right there on the table and basically dared Congress to stop it.
Yeah.
We've gathered 5 specific verifiable pieces of evidence, official statements, clips, direct presidential posts that not only confirm this push, but also, they start to reveal the proposed funding and who they're targeting.
And that level of public unified commitment, it dramatically increases the political stakes. For you, if your budget is already stretched thin, understanding the reality behind this promise is it's crucial. When the entire economic team publicly says this money is coming, it generates hope.
Right.
And the administration will face, an intense political backlash if they fail to deliver. So our mission today is to cut through the noise and really analyze the fiscal and political viability of this payment.
Welcome back to the deep dive. Our listener today, and really a huge part of our audience, is focused squarely on financial stability. The ability to pay the rent, cover medical costs, just maintain dignity in retirement.
Mm,
So when a figure like $2,000 is thrown out there by the White House, it stops being some political talking point
yeah.
and it starts being a lifeline. Today, we are focusing purely on this recent, highly concentrated commitment from the administration.
And the goal here is precision.
Okay.
We're not interested in the hypotheticals of if the government might send money. We are analyzing the specific recent evidence that proves the administration's active, serious intent to legislate this payment into existence and to do it now. It moves the whole conversation from speculation to, well, to logistics.
We're looking for the concrete data points. And the first point of discussion has to be a language itself, because it tells us so much about the policy's intent.
Absolutely. When you have multiple high-ranking individuals echoing the exact same commitment and using the same unique terminology dividend, it signals a strong, coordinated strategy. We really need to examine that distinction before we even look at the evidence for the funding.
Okay, so let's start there. The president has been, I'd say, meticulous about his language. He refers to this as a $2,000 stimulus check or dividend payment.
Right.
But then he specifies the preferred mechanism, stating he wants at least $2,000 in the form of a dividend to everybody except high-income people. That shift in terminology feels very, very deliberate.
It is. It is the heart of the administration's fiscal narrative for this payment. A traditional stimulus check is, it's generally understood to be deficit spending.
Money they have to borrow or print?
Exactly. Money borrowed or printed to inject liquidity into the economy quickly. A dividend, in this context, suggests something completely different. It suggests a distribution of accrued, existing government revenue, which is typically linked to a specific source of income.
Which, in this case, they're saying is tariffs.
In this case, it's tariffs.
So by framing it as a dividend, what they're really trying to do is preemptively neutralize that criticism that this is just adding to the national debt. Is that right?
Precisely. It attempts to reframe the payment as a financial return to citizens from money already collected through trade duties. And that has massive political utility.
Okay, but it's more than just politics, isn't it? I mean, the term dividend could carry specific legal and tax implications.
It could, and those details are still being worked out by the economic advisors. For instance, sometimes dividends from government-managed funds are treated differently for tax purposes than, say, general income or an emergency stimulus.
Potentially making it tax-free.
Potentially. Or altering how it interacts with eligibility for other means-tested benefits, which is a major, major concern for our audience on SSI or Medicaid.
That's a critical point for our listeners, especially if you're on SSI, SSDI, or housing assistance, where a sudden influx of what looks like taxable income can jeopardize your ongoing eligibility for vital aid. So the wording choices here matter deeply.
They do. And the president's phrasing, to everybody except high-income people, it just underscores the intent to make this a broad-based measure. It's aimed squarely at middle-class, working, and fixed-income Americans.
It defines the goal by exclusion, promising universality up to a certain point.
Exactly.
But we have to anchor this discussion back to reality. This is not yet money in the bank.
Absolutely not. As the administration's chief economic advisor, Kevin Hassett, he explicitly confirmed this. He said this money will require legislation, and that is the highest hurdle.
It's everything, really.
It's everything. It cannot be enacted via a simple presidential memorandum or an executive order. Congress must draft, debate, and pass a law authorizing the appropriation of this specific tariff revenue and establishing all the rules for its distribution.
So despite all the public enthusiasm, the final decision rests on Capitol Hill, in the hands of lawmakers who are, let's be honest, often hesitant to pass broad, expensive measures.
Which is why the administration's coordinated pressure is so telling. They are trying to make it politically impossible for Congress to say no.
They're strategically leveraging public demand.
And the 5 data points we are about to discuss, they serve as the foundation of that political leverage. They're committing the administration so deeply that failure to deliver would just be politically disastrous.
This is where the political messaging meets the policy planning. The administration hasn't just mentioned this idea in passing. They have saturated the media landscape with the identical message, all within about a 72-hour period.
Yeah, it's been a full-court press.
This strategy of painting themselves into an extremely tight corner, as one source observed, it just suggests Total institutional buy-in.
It's a very high-stakes move.
Yeah.
For the audience relying on financial predictability, this signals that the promise has passed the initial, vetting stage and is now in active development. We have to scrutinize the statements of the people doing the groundwork.
Okay, so let's start with the economic gatekeeper, the man who provided the financial justification for this entire proposal.
Right.
Economic advisor Kevin Hassett.
Kevin Hassett is the economic advisor. He's the person responsible for crunching the numbers and confirming feasibility.
His statement was pivotal because it provided that financial anchor for the dividend narrative. So what did he specifically claim regarding the funding?
Hassett asserted that the current influx of tariff revenue has created, and this is a quote, enough room to cover those checks and not go into the rest of the budget.
Okay, that is a profoundly important claim.
It is.
If that's accepted, it shifts the entire debate from being about deficit spending to one of revenue distribution.
Completely.
Okay, let's unpack that fiscal narrative. Hassett is essentially claiming that the money derived from import duties, from tariffs, is sufficient and separable from the general federal budget pool, allowing it to be returned to the people without affecting, say, existing Social Security funding or military spending.
Yes, and this relies on a specific accounting argument. While all federal revenue generally goes to the U.S. Treasury's general fund, the administration is arguing that the source of the revenue, the tariffs, can be earmarked for redistribution as a dividend. Hassett confirmed they have enough money in the current stream to fund the full $2,000 checks.
And he also confirmed he's working on it now, right?
He did. He confirmed that he is actively studying the matter and getting the numbers straight so the president has all the choices he needs, which proves the proposal is in a technical analysis phase, not just some talking point.
But here's where we need to stop being recorders and start being analysts. Our sources noted a significant internal contradiction. While Hassett claims the funding works, there was an internal note suggesting that the numbers that we're calculating on a year-over-year basis, it doesn't really make sense. So what does that contradiction tell us? Is this tariff funding a sound economic solution, or is it just a political justification?
That internal tension is the most fascinating part of the data. Look, tariff revenue is inherently volatile.
Of course.
It fluctuates based on global trade volumes, trade war dynamics, specific tariff rates. To rely on it for a massive fixed one-time payment of $2,000 per person is, well, it's fiscally questionable over the long term or even year to year.
So the internal skepticism makes sense.
It does. It suggests that while they may have a large cash reserve right now due to recent tariff policies, projecting that revenue consistently is very difficult. Therefore, Hassett's public statement is arguably more of a political assurance, saying we found the money, don't worry about the debt, than a pure reflection of long-term fiscal stability.
Yeah.
So the political fact is that the chief economic advisor has given the green light, regardless of the nuanced economic reality.
Right.
For the administration, that public assurance is enough to justify the next step, defining who gets the money.
Yeah.
Exactly. Which brings us to evidence number 2, Treasury Secretary Scott Bessent.
Right. Next, we had the Treasury Secretary, Scott Bessent, who would be the person to oversee the actual distribution. He confirmed the commitment, and he gave us the first specific figure regarding eligibility.
Bessent provided a tentative eligibility idea when he was discussing who would receive the rebate. He mentioned it would be for families making less than, say, $100,000.
Okay, now for our audience, that $100,000 figure is crucial.
It is.
Because it provides a clear indication of where they intend to draw the line. It confirms they are targeting the vast majority of households, specifically fixed income and middle-class earners, while excluding the highest earners.
But we do have to be careful here. Bessent clarified that this $100,000 was merely a figure in discussion, and that no final threshold has been decided upon yet.
So it's not set in stone?
Not at all. Previous stimulus checks have used varying thresholds, sometimes based on adjusted gross income, sometimes on modified AGI, and they often phase out the benefit above that line rather than just cutting it off abruptly.
Right, a gradual reduction.
Exactly. But the fact that they are discussing a cap around this figure confirms that the definition of high-income people is being quantified right now, and it's likely aligning with thresholds used in prior relief efforts. just to simplify the rollout.
This discussion of an income cap is, I think, particularly reassuring for anyone on Social Security or disability, because it signals that if you weren't considered high income under prior relief efforts, you're likely the exact demographic this dividend is intended to support.
That's the takeaway. The commitment is broad, aiming for maximum impact on people who need financial breathing room, which is so often our fixed income audience. Okay, let's move to the messaging front. Evidence 3. Press Secretary Caroline Leavitt. Her statement confirmed the active process that's underway. She stated clearly that the White House is, quote, committed to making that happen. Yes.
Leavitt's contribution was essential because it laid out the logistical commitment. She confirmed they are currently exploring all legal options to get that done.
Which corroborates Hassett's work.
It does. They are actively researching the best legal vehicle to move the tariff money to the American people.
She did have to temper the expectations a little bit on the timeline, noting that no timeline or further details are available yet.
But the overall message was one of relentless dedication. And this confirms the sequencing we're seeing. Commitment first, then technical analysis, then legislative action. For the public, knowing that the White House press secretary is confirming the active exploring of legal options is powerful evidence that this is not some shelved idea, but a live proposal. And then finally, evidence 4 and 5, the commitment was cemented directly by the president himself on his public platforms. This is what transformed the statement from an interview, quote, into an undeniable public promise.
The use of Truth Social to reinforce the promise, twice within just a few days, on a Sunday and then again on Monday, that is a classic political tactic. It's designed to lock in the public narrative and prevent the message from being diluted by other news cycles. And the repeated phrasing was precise and identical. The distribution of at least $2,000 in the form of a dividend to everybody except high-income people will be paid. That verb choice, will be paid, is so definitive. It is. This repetition, coupled with the specificity of the amount and the mechanism, provides the clearest possible evidence of political intent. Together, these 5 data points demonstrate a singular focus across the administration.
The message is clear.
The $2,000 payment is a top priority that is now past the point of casual discussion. They've made the commitment, now they have to deliver. Now that we've established the commitment is real, we have to deal with the inevitable hurdles, starting with eligibility and the legislative process itself. The core intention is clear. Target everyone who is not high income. And the administration's broad language means that once that specific income threshold is finalized, and it's likely around that $100,000 family AGI discussion point, most beneficiaries of Social Security, SSI, SSDI, and VA benefits will almost certainly qualify.
Yeah.
These fixed income groups are precisely the people who need this financial support most and who would not be captured by any high-income exclusion.
But the mechanism, that remains the critical constraint. Since Hassett confirmed this relies on tariff revenue and requires legislation, we are looking at Congress. What does require legislation actually entail in this scenario? I mean, this is crucial for understanding the timeline.
This is where the deep dive really starts. When a major financial distribution is proposed, Congress has several options, and the choice they make matters significantly for timing.
So what are the most likely paths here?
Well, the first is a standalone bill, passed through regular order. This is typically slow, it's vulnerable to amendments, and it requires bipartisan support to clear procedural hurdles.
Which is hard to get.
Very. Given the size and nature of this payment, a standalone bill could take months or even fail entirely due to political deadlock.
And the alternative? What's the faster route?
The more streamlined path, which I'm sure they're exploring, is budget reconciliation. Reconciliation allows Congress to pass certain measures related to spending, revenues, and the federal debt limit with a simple majority.
Bypassing the filibuster.
Bypassing the usual threat of a filibuster. If the administration can successfully frame this as a revenue distribution measure linked to the collection of tariff duties, they might attempt to use reconciliation.
But that's not a guarantee.
No, it's not. Reconciliation has very strict rules regarding what is permissible, and whether a direct dividend payment qualifies under those rules, well, that would be subject to intense Senate scrutiny.
So the complexity of the legislative path means this is far from a slam dunk. Yet our sources suggest lawmakers are reportedly warming up to the idea of these $2,000 payments. Why the sudden warmth?
There are 2 main drivers, I think. First, the political pressure generated by the White House's public commitment is immense. Lawmakers know that voting against a measure that provides $2,000 to their constituents,
Right.
especially if the funding is publicly claimed to be separate from the debt, that's a difficult electoral decision to make.
And the second driver?
The second is that there may be internal legislative compromises at play. To get the necessary votes, the administration might be bundling this payment with other legislative priorities, or perhaps adjusting the eligibility criteria slightly to appease specific factions within Congress. The fact that the initial rejection we often see with massive spending proposals is absent suggests that strategic groundwork is already being laid.
It really seems the economic viability, dubious as it might be over the long term, is being overshadowed by political necessity. The narrative of returning tariff money to the people is proving highly effective in lowering congressional resistance.
That narrative is the key. It allows budget hawks to conceptually support the measure as a redistribution of collected revenue rather than approval of new debt. This subtle shift in framing is likely the reason for the reported warming up. The speed at which this moves now depends entirely on the legal team's success in defining a legislative vehicle, like a reconciliation bill, that can pass quickly.
Okay, let's transition to the practical implications. This is where this deep dive becomes most relevant for our audience. What does this strong commitment mean for the likelihood of the money actually arriving? And critically, how will it affect existing benefits?
The repeated public commitment is a massive factor. They are in a high-risk situation. If the administration, after the president posted this twice, and his top 3 financial officials confirmed it, if they failed to deliver, the resulting political blowback would be catastrophic.
So that risk works in the listener's favor.
In a way, yes. That inherent risk actually serves as a guarantor for you, the listener. The internal motivation to succeed is now maximized.
Let's dive deeper into the financial complexities, specifically Hassett's tariff funding claim. If the money is coming from tariffs, does that genuinely make it fiscally sound?
This is where we have to maintain that critical distance. Hassett's assertion that the revenue exists and will not require digging into the existing federal budget is the administration's public line. However, that contradiction we noted in the sources, the year-over-year accounting challenge, it suggests that this funding source may not be sustainable or stable. If Congress passes this bill based on the tariff revenue, and that revenue suddenly dips, they will either have to cut the amount of the payment, delay future payments, or ultimately fund the difference through conventional means, like debt.
So for the listener, the confidence of the economic advisor provides a legislative justification, but the long-term solvency of the mechanism is, it's secondary to the immediate political goal of distribution.
That's a good way to put it.
Yeah.
Okay, let's assume, for the sake of the audience, that the legislation passes and the $2,000 payment arrives. We have to address the most pressing concerns for our fixed-income and low-income audience: taxes, other benefits, and scams. These are crucial concerns that must be addressed, even without the final legislative text.
Starting with taxability. If it's labeled a dividend from tariff revenue, does that protect it from being taxed?
It offers a possibility, but it's not a guarantee. Past stimulus checks generally have been non-taxable income because they were structured as refundable tax credits.
Okay.
If this payment is structured purely as a dividend distribution, its tax treatment would depend entirely on the specific language in the final bill. We would strongly advise our audience to assume, just for planning purposes, that the funds could be considered taxable until Congress explicitly declares them tax-free.
But for most of our audience whose incomes are low, any tax liability would probably be minimal, right?
It would likely be minimal or offset by other credits, yes.
A far more urgent concern for those on means-tested benefits like supplemental security income, SSI, s.n.a.p. food assistance, or Medicaid is the impact on their eligibility. Can a $2,000 payment jeopardize that vital aid?
Historically, Congress has been very protective of these benefits during relief efforts. During prior stimulus rounds, the money was specifically excluded from counting as income or resources for a 12-month period for SSI and other federal means-tested programs.
And that protection is absolutely vital.
It is. If Congress fails to include this exemption in the new legislation, a $2,000 lump sum could push an SSI recipient over the $2,000 asset limit, causing them to lose benefits. Given the political focus on low-income Americans, we expect and frankly advocate for Congress to include these explicit protections to safeguard eligibility for ongoing benefits.
And what about garnishment? Can debt collectors or outstanding judgments seize this money upon arrival?
This is another area where the final legislation must be explicit. For the payment to be safe, the bill needs to include garnishment protection, declaring the funds exempt from legal processes that would attach them to satisfied debts.
We've seen that protection before.
We have, but listeners must monitor the final bill. If you are concerned, you should deposit the money into a protected account as quickly as possible. And finally, let's address the inevitable dark side of financial news scams. This is a highly vulnerable audience. This is perhaps the most important guidance we can offer today. The administration has provided strong evidence of its intent, but the details are still pending. Therefore, listeners should anticipate a massive wave of fraud attempts. The official channels, the IRS, the SSA, or the VA, will never call, text, or email you asking for money, banking information, or personal data to process your $2,000 dividend. The distribution of federal funds almost always relies on information the government already has on file.
So what should you do if you receive a suspicious communication?
You should hang up immediately, delete the text or email, and report it to the appropriate agency. Trust only official letters sent via mail or verified government websites ending in te.gov. No legitimate entity needs payment or sensitive information to send you money you are already entitled to receive.
We've established the commitment is strong and the need for protections is high. But when can people expect to see this money? What are the next concrete steps we should be monitoring? Because the administration is still exploring all legal options, we lack those crucial definitive details. A final income threshold, a definitive timeline, and the specific distribution plan. The timeline is just inextricably linked to the legislative path chosen. If Congress chooses the slower, regular standalone bill path, we could be looking at many months. If they successfully use a mechanism like budget reconciliation, the timeline could shrink dramatically.
Correct. The most important thing listeners can do is monitor the movement of the legislative proposal in Congress. Look for official announcements regarding the introduction of a bill number in committee discussions. That will be the primary indicator that the wheels are truly turning.
And what about the administration? They promised an update once the economic advisors finish their work?
Yes. Watch for a joint announcement from the White House and the Treasury Department. That update will likely contain the finalized income threshold, the process of distribution, direct deposit, paper checks, direct express cards, and an estimated timeline based on congressional cooperation.
And they'll need to detail how the SSA and VA will coordinate to get the money out.
Exactly. How they will coordinate with the Treasury to get the money to existing beneficiaries quickly and correctly.
In the past, these payments have often been tied to a beneficiary's birthday for staggered distribution. Should listeners expect similar administrative complexity this time?
Likely, yes. The distribution will leverage existing infrastructure. For current Social Security and SSI recipients, the Treasury will rely on the payment files maintained by the Social Security Administration. If the payment is a one-time event, they will likely adopt a staggered schedule based on either the benefit received, so SSI first, then Social Security, or the recipient's birth date, as a means of managing the massive volume of payments and ensuring the system doesn't overload.
So the best preparatory step is just to make sure your info is up to date.
Maintaining up-to-date information in the My Social Security portal is the best preparatory step you can take right now. So the guidance remains. Manage expectations. Understand the commitment is genuine, but action is still pending, and prioritize safety against scams above all else.
Exactly. The commitment is a political reality. The delivery is a legislative logistic. Do not plan your budget around receiving this money immediately, but recognize that the likelihood of passage is extremely high given the political pressure the administration has created for itself. Wait for the concrete legislative text before making any financial decisions based on this proposed dividend.
This has been a crucial deep dive into a promise that could provide significant financial breathing room for millions of Americans, especially those who rely on fixed incomes and struggle against rising costs. Let's summarize the key takeaways. The evidence for the $2,000 payment is undeniable. 5 high-profile officials have publicly confirmed the administration's commitment, and the payment is framed as a dividend funded by tariff revenue, a fiscal narrative that's been confirmed by the economic advisor.
The mechanism requires Congress to act, and while legislative movement is possible, the speed depends on the choice of legislative vehicle, such as a standalone bill versus budget reconciliation. For you, the promise of a $2,000 influx means potential relief from mounting bills. And the critical conditions for our audience are twofold. The final legislation must explicitly exclude this payment from income calculations for means-tested benefits like SSI, and it must provide garnishment protections. And we strongly advise constant vigilance against scams targeting this specific promise. This political commitment is designed to be a significant measure of support for those needing financial help the most. The administration has made its intent clear.
And that leads us to our final thought for you to consider. Given that the administration has committed itself so publicly to this tariff funding narrative, and knowing the internal accounting challenges. What specific legislative concessions, beyond just the $100,000 income threshold, do you anticipate Congress demanding in exchange for swift approval of this highly publicized payment?
The clock is ticking, the pressure is building, and the details are about to matter immensely. We encourage you to keep following these updates closely as the administration works to fulfill this very public, potentially life-changing promise. Thank you for diving. Okay, let's jump right in because this is big. A potential payment of at least $2,000 is on the table.
And this is money specifically for you. We're talking about low-income individuals, fixed-income folks, retirees, veterans.
And the key thing here is the commitment. This isn't just talk anymore.
No, not at all. The White House and the Treasury Secretary have both publicly confirmed they are committed to making this happen.
They're calling it a dividend or a rebate. And it's all funded by this massive stream of tariff revenue.
And we have the critical detail, the thing everyone's been waiting for, the income threshold.
Right.
It's confirmed to be under $100,000, which means that Social Security, SSI, SSDI, and VA beneficiaries are absolutely included.
So stick with us. We're going to guide you through all the facts, cut through the confusion, and give you what you need to be prepared for this.
Welcome back. We are doing a deep dive today into something that has, frankly, captured the attention of millions.
It really has. A proposal for a payment of at least $2,000. And it's being called a dividend, a distribution, a rebate.
And, this started with the president, but it's been doubled down on again and again. It's moved way past just a social media post.
It's become a public commitment.
It really has. This is being addressed at the highest levels of the administration, which, turns political talk into something much more solid.
So let's talk about the sources here, just to give this the weight it deserves.
We should.
We're talking about direct confirmation from the White House Press Secretary, Caroline Leavitt.
And also the Treasury Secretary, Scott Bessent. I mean, when officials at that level start confirming dollar figures and delivery plans,
the stakes just go way, way up. For them and for you listening.
Absolutely.
Yeah.
I mean, Caroline Leavitt's quote was that the White House is committed to making that happen.
She also said they're exploring all legal options to get that done.
Which is not soft language. That's not a casual endorsement. That's a high-pressure, very public promise.
And that's exactly why we need to unpack this. So let's get into the core of it. Why is this happening right now?
And where is this money? This pretty significant amount of money supposedly coming from.
Okay, so the why seems tied to the economy, right? The volatility.
It's directly connected. And the where is all about international trade policy. The plan they're putting forward is really specific.
They're saying they want to pay this out from tariff revenues.
Massive tariff revenues that are right now just flowing into the country from, various trade policies and disputes.
I think we need to pause on the scale of that revenue for a moment.
Yes.
Because it helps explain how they can even talk about a number like $2,000 per person.
The numbers are, frankly, staggering. I mean, the tariffs are bringing in about $1 billion.
$1 billion a day.
Every single day. So if you project that out, you're looking at something close to $350 billion a year.
Wow.
And over the next 10 years, the projection is $3 trillion. It's just an enormous, sustained flow of cash.
And it's separate from our usual income tax or sales tax revenue.
Completely separate. And that's why the administration is using that fact to call this payment something unique.
Right. It's not stimulus.
No, they're explicitly calling it a dividend or a distribution or even a profit share.
That's a really critical political distinction they're making.
It is, because by framing it that way, as a dividend from tariff money, they're trying to say, hey, we're just giving you back the money the country earned from trade policy.
So it separates it from stimulus, which, a lot of people associate with deficit spending.
Exactly. And it separates it from, say, welfare, which can carry a stigma for some people.
Yeah.
They're basically saying, this is your share of the country's new trade income.
That reframing is probably essential to getting this past certain lawmakers.
It makes it much more politically palatable, especially for people who would normally be against these big cash distributions.
Okay, that brings us to the most important question for anyone listening. Eligibility. Who actually gets this money?
This is it.
The president's first announcement was pretty broad. He said everyone, but then he added, not including high-income people.
And that one little phrase immediately causes worry, right? For millions of people on a fixed income.
Of course. You're sitting there thinking, wait, am I considered high income? Even if I'm just living on my Social Security check.
We have to address this head on. For anyone receiving Social Security, SSI, SSDI, or VA benefits, the answer is a definitive yes.
You are expected to be included.
Overwhelmingly yes, based on all the analysis, the historical precedent, and what the officials themselves are saying.
And the reason for that is so important for peace of mind. The key metric here is always income.
It's always income. It is not your status. It doesn't matter if you're working or retired or have a disability.
It just matters what your total income is compared to the threshold they set.
That's absolutely right. And historically, the government never excludes Social Security beneficiaries just because they're on a fixed income. If your annual income is below that line in the sand,
Even if that income is 100% from your Social Security benefit.
you qualify. You qualify just like a low-wage worker would.
Okay, so let's define that line in the sand. What are they actually calling high income?
This is the big news. We have a solid number now from Treasury Secretary Scott Bessent.
Okay.
He confirmed the discussion is centered on an income threshold of less than $100,000 for an individual.
Wait, 100,000. That feels very high.
It is.
If you look back at the stimulus checks in 2020, 2021,
Yeah.
wasn't the cutoff usually around 75,000, sometimes even lower?
It was. The second check had an even lower threshold, so you're right to question that. Is the administration setting an expectation that's a little unrealistic?
Or are they starting high, knowing they'll have to compromise and bring it down later?
That is the political tension here. $100,000 is incredibly inclusive. I mean, if they stick with that number, it covers almost every retiree, every fixed income person, and a huge chunk of the middle class.
But like you said, there's a political reality and a financial one.
And that reality is the price tag.
It's always the price tag. So while the official talk is about that $100,000 level, logic
Yeah.
and all the analysis, suggests that final threshold might be lower.
So they might bring it down to 75,000 again, or even 60.
It's very possible. Bringing it down to, say, 60 or 75,000 for an individual would dramatically reduce the overall cost.
And that makes it a much easier pill for some fiscally conservative lawmakers to swallow.
A much easier pill. So, for you listening, the key takeaway is that if your income is, say, below 60,000, your eligibility is almost guaranteed. If your only income is your fixed benefit check.
You are definitely the person this money is intended for.
Absolutely. The debate is really about where that middle income cutoff will land. The inclusion of low income and fixed income folks is rock solid.
Okay, let's move on to something that I know causes a lot of stress for our audience.
The tax return question. The tax return myth. So many retirees, they haven't filed a tax return in years. And they hear tax credit and they panic, thinking they won't get the money.
We need to be very, very clear about this. Filing a tax return is, for almost everyone in this situation, completely irrelevant.
You do not need to file a special form. You don't need to do anything just to get this payment.
Correct.
So why do people believe they have to? Where does that confusion come from?
It comes from the legal jargon. The legal structure of past payments was an advance of refundable tax credit.
And that just sounds complicated. It sounds like you need to be involved with the IRS.
It does. Let's try to break that down, maybe with an analogy.
Yeah, please do. We need the explain it like I'm 5 version.
Okay, so think of it this way. A tax credit is just money the government promises you if you qualify for something.
Right.
A refundable credit means even if you don't owe any taxes, they'll still send you the full amount in cash.
Yeah.
And the key word here is advance. The government is basically saying, hey, we already know you qualify for this credit because we know your income is low, so we're just going to advance you the money right now.
Ah, so you get it now, long before you would ever even think about filing a tax return for next year?
Exactly. It makes perfect sense when you put it that way. They call it a tax credit for legal reasons, but really it's just a mechanism.
A way to get cash into people's hands quickly.
That's all it is. And the reason they can bypass the whole tax return process is because the Social Security Administration
And the VA and the Railroad Retirement Board.
they already have all the information they need for every single beneficiary.
You've called this the plumbing before. The idea that the government's systems are already in place.
The plumbing is already there, and it's foolproof for this group. The SSA has your name, they have your current address, they have your direct deposit details.
And most importantly, they already know what your annual income is.
Because they're the ones paying it to you. For anyone getting a monthly check, the system is designed to send this money out automatically.
Using the exact same bank account information that your benefits go into every month.
The exact same information. No need to file, no complicated application to fill out. The data is already on file, ready to go.
So to be crystal clear, if you get a fixed benefit, the government already knows where to send the $2,000.
Yeah. The only time this ever got complicated in the past was if for some reason a payment didn't arrive, or if someone had other complex income that put them right on the edge of the cutoff. But for the vast majority, it's automatic.
Okay, so we've established they're talking about this and that low-income folks are the target. But, talk is cheap. How real is this commitment? And is the funding plan even realistic?
Well, the commitment is, I'd say, exceptionally high. And that's because they've tied the names of the most senior officials to this promise.
Right. When the White House press secretary goes on the record saying they are committed to making that happen.
They're putting a huge amount of political capital on the line. It's not something you can easily walk back.
So let's talk about the money, the funds they need versus the tariff revenue they have. This is where the math gets a little rough, right?
This is where it gets critical. We need a price tag reality check.
Yeah.
So let's do a quick calculation.
Okay.
Based on the last stimulus rounds, we can estimate that targeting low and middle income people means you're covering about 85% of the population.
Which is how many people?
It's roughly 284 million people.
Okay, so 284 million people, each getting a $2,000 payment. What's the total cost?
The total cost comes out to approximately $568 billion.
Wow.
And if they use that very generous $100,000 threshold, the cost could push up closer to $600 billion.
Okay, but you said earlier the tariff revenue is projected at about $350 billion per year.
Exactly.
The numbers don't add up for an immediate payment. They don't have $568 billion just sitting in a tariff piggy bank today.
They don't. And that contradiction right there exposes the real financial mechanism they'd have to use.
So how would they do it? How do they send out checks right away?
This is the deep insight. Even though they're calling it a dividend from tariff money, they would essentially have to borrow the entire $568 today.
So it adds to the national debt.
It adds to the national debt, yes, in order to issue the payment immediately.
Hold on. If they have to borrow it, does that completely undermine the story they're telling? That this is a profit share from tariffs?
It absolutely contradicts the narrative, and that's the tension. They are using the future tariff revenue that projected $3 trillion over the next 10 years.
As the collateral.
As the collateral or the backing for the debt they're taking on today. Their justification is, well, we know this money is coming in eventually, so we're just giving you the dividend a little early.
So it's debt financing no matter how you slice it, even if they strategically call it a tariff dividend. That's a crucial distinction.
It's crucial for understanding the political game here. The immediate payment requires fronting the cost. It means attaching nearly $600 billion to the national debt right now.
And just hoping that $3 trillion in future revenue actually materializes to justify it.
Precisely.
Let's zoom out a bit and look at the pattern here, because this isn't the first time we've heard about a big payment.
No, it is not.
Yeah.
The repetition is what makes this feel different. It adds political weight.
This is now the fourth time the president has endorsed a major financial distribution in less than a year.
And the pattern is, it's pretty unmistakable when you lay it out.
So walk us through it. What was the escalation?
Okay, so it started back in February with a mention of a $5,000 Doge dividend, which, was widely seen as a bit of a political stunt. It never happened.
Right.
Then by August, the idea got more formal. There was discussion around a $600 rebate check, and that one was actually introduced in the Senate.
And then in October, the number suddenly jumped.
It jumped dramatically. The president started talking about a payment of somewhere between $1,000 and $2,000.
And now, here we are in November, and it's a definitive at least $2,000 confirmed by the Treasury Secretary.
There's a clear analysis from our sources on this. The quote is, every time he talks, the dollar amount gets bigger.
And that pattern creates this immense self-imposed pressure on the administration.
They are, as we said before, painting themselves into a very, very tight corner.
And the only way out of that corner is to actually follow through.
It is. Regardless of the huge cost of fronting that $600 billion.
Because if they fail to deliver on this $2,000 payment now,
especially after repeating it, increasing the amount, and having top officials confirm it,
it would be a massive loss of credibility.
A huge loss of trust, especially with the very people they're trying to reach. The political cost of failing to deliver might actually be higher than the financial cost of the payment itself.
All right, let's move on to the question that is probably on everyone's mind right now.
When do I get the money?
When could this money actually arrive? We know it won't be tomorrow, given how Washington works.
We have to be direct about this. There is no exact date because the legislation hasn't even been written yet. But we do have some official guidance.
Who?
From Treasury Secretary Scott Bessent. He indicated that people can see substantial tax refunds early next year.
Early 2026.
Early 2026.
Okay, so early next year suggests what? Maybe January, February? Around the same time people usually get their tax refund.
That seems to be the implication.
Yeah.
And if you look at the broader political calendar, the timeline makes sense. The window for action is really between now and the midterm elections in November 2026.
And if they want this to have a political impact, they need to do it well before the election.
Right. They probably have about an 11-month window to get this done.
So why the delay? I mean, if the commitment is so strong, why can't they just push a button and send the money now?
It all comes down to the legislative process.
Yeah.
It's slow. Lawmakers are notoriously slow.
And we have holidays coming up, Thanksgiving, the December recess.
Exactly. So a formal bill has to be drafted. Then it has to be introduced, debated, passed by the House, passed by the Senate, reconciled.
And then finally signed by the president.
And even if they fast-track it, that whole process takes weeks, sometimes months. It just naturally pushes any real distribution into the new year.
Which makes that early 2026 target seem pretty realistic.
It does.
So when this money is approved, how does it actually get to people? For the millions of beneficiaries who don't file taxes every year.
It goes back to that plumbing we talked about.
Oh.
Because the systems are already in place, the money would be delivered through the methods already on file with the SSA or the VA.
So direct deposit.
Direct deposit paper checks or the direct express cards that a lot of beneficiaries use.
So no new application, no sign-up needed.
No, it should be automatic.
Okay, this next part is vital. We have to talk about the caveats for our low-income audience, the financial protections, and the potential offsets.
This is so important because getting $2,000 could, in theory, mess up your eligibility for other benefits if it's not handled correctly.
Right, like SSI or Medicaid.
We have to be a little cautious here because the final law hasn't been written. But we can look at what's happened in the past.
Okay.
The payment is being framed as a tax credit or a dividend. Past stimulus checks with that structure were generally tax-free.
So we can expect this will be too.
We have every reason to believe so, but
Yeah.
you have to wait for the final text of the law for 100% confirmation.
Let's talk about the two big traps, the situations where the money could be taken away before you even see it.
Right. Garnished or offset. This could be devastating for someone on a fixed income.
So what are they?
The sources identify two main exceptions. The first is federal tax liability.
So if you owe back taxes to the federal government.
To the federal government, yes. Not state or local, but federal. If you owe, say, $3,000 in back taxes, they can keep this $2,000 payment to reduce your debt.
And the second one?
Past due child support. This happened with past stimulus payments. The money could be intercepted and garnished for outstanding child support obligations.
But it's really important to stress that private debt collectors, for credit cards or medical bills, they typically can't touch this money.
That's a critical distinction. These payments are usually protected from private debt collection. The garnishment exceptions are almost always for federal debt or legally mandated things like child support.
Okay, and finally, the most critical protection for many, the effect on other benefits. SSI, Medicaid, s.n.a.p.
This could be the most important part of the conversation for some listeners.
How will this payment affect eligibility for those means-tested programs?
Again, we have to look at history here since the new law isn't written. With the past 3 stimulus checks, Congress was very careful. They specifically wrote into the law that the payments were excluded from being counted as income or as a resource,
For how long?
usually for 12 months.
So the expectation is that they will write similar protection into this new law.
That is the strong expectation. But until that clause is written and passed, you can't assume it.
Because for someone on SSI, having an extra $2,000 in your bank account,
It could push you over the asset limit, which is often just $2,000 for an individual.
and you could lose your benefits, your health care.
It's the single most important caveat. You need to get absolute confirmation that this specific payment will be protected and won't be counted as a resource for at least a year.
Before we wrap up, we have to spend some serious time on fraud and scams.
Oh, absolutely. This is critical.
Our audience, seniors, people with disabilities, they are so vulnerable whenever these big government payments are announced. Scammers just come out of the woodwork.
They do, because they know this money is a lifeline. We have to urge extreme caution. Remember the #1 rule. The government, whether it's the SSA, the IRS, or the VA, will never, ever call you, text you, or email you asking for money.
They will never ask for your banking details or personal information over the phone.
And they will never demand you take immediate action to get your dividend.
So let's get specific. What are the common scams we think will pop up around this $2,000 payment?
I think we need to watch for 3 main things. First is the verification fees scam.
Okay, what's that?
You get a call from someone claiming to be from the Treasury. They say that to release your $2,000 check, you first have to pay a $50 processing fee.
And they want you to pay with a gift card or Bitcoin or something untraceable.
Exactly. It's a total scam. The government will never ask you for a fee to get your own money.
Okay, what's the second one?
The Direct Express update scam. Scammers know that a lot of people use Direct Express cards.
Right.
So they'll call or text and say, your card has been locked because of the pending deposit. They'll ask you to confirm your PIN and the 3-digit code on the back to unlock it.
And if you give them that, they drain your card.
Instantly. The SSA will never ask for your PIN, ever.
And the third one is probably the most common, the phishing email.
Yeah, the wrong payment email. You'll get something that looks official from the IRS or SSA. It'll say, you received the wrong amount. Click here to correct it and update your bank info.
And that link goes to a fake site that just steals all your information.
It does.
So the bottom line is, if anyone contacts you claiming to be from the government, asking for a fee, asking for your card details, or pressuring you to act now,
Hang up. It's a scam, period.
the only places to trust are official government websites or the physical mail that comes to your address.
Or your My Social Security account online.
Yeah.
It is the only place you should be verifying your information.
Let's connect this back to the bigger economic picture. Why are we seeing the president bring this up 4 times in a year?
It's a symptom, really. It connects directly to a kind of systemic economic instability, even if the top-line numbers look good.
The economy feels very divided right now. People call it a K-shaped recovery.
That's a perfect way to describe it.
Can you explain that for our listeners?
Sure. Imagine the letter K. The top arm is going up. That's high-income folks, large corporations. Asset values are rising. Luxury spending is up.
But the bottom arm of the K is going down.
That's low-wage workers, fixed-income families, retirees. They are getting crushed by the high cost of essentials. Food, gas, utilities.
There's a massive divide.
There is. And this $2,000 payment is a political attempt to help the people on that bottom leg of the K.
And what are the other factors pushing lawmakers to consider this now?
I think they're preparing for a potential downturn. There are a few catalysts. Continued inflation is eating away at fixed incomes. There are serious concerns about the stability of the private credit market, and global tensions are keeping costs high.
So historically, when the economy starts to look shaky,
Lawmakers scramble to approve some kind of stimulus to cushion the fall. So these discussions are happening because they might be getting ready for a worst-case scenario.
and finally, let's just set expectations. Is this a permanent fix or a one-time thing?
It is explicitly being framed as a one-time distribution, a dividend from the tariffs.
So it is not a permanent increase to your monthly benefits?
No, it is not a COLA. It is not benefit reform. It's a short-term fix. It's designed to give you immediate financial breathing room.
It's emergency cash, help to pay off a bill, cover medical expense. It's not a change to your long-term income.
Exactly. It's relief, not reform.
Okay, let's summarize the key takeaways, the confirmed facts you need to know about this potential $2,000 payment.
We can do a quick rundown. The 5 W's.
Let's do it. What is it?
At least a $2,000 payment framed as a tariff dividend or rebate.
Why is it happening?
It's proposed to be funded by those massive tariff revenues, though the money will have to be borrowed up front.
Who gets it?
Low and middle-income individuals. That is expected to include everyone on Social Security, SSI, SSDI, and VA benefits, with that income threshold currently being discussed at under $100,000.
When will it arrive?
The official guidance is pointing to early 2026, but the political window is really any time in the next 11 months.
And finally, how will you get it?
It will be delivered automatically through your existing payment method, direct deposit, paper check, or direct express card.
You know, a $2,000 payment could be a genuine lifeline for so many people right now.
It really could.
It's money that can offer some relief, some dignity, a way to catch up on bills that have been piling up.
It's a significant amount, and the fact that the commitment is coming from such a high level suggests they really do intend to deliver on this.
And that brings us to our final provocative thought for you to consider as we watch this unfold.
The administration, from the president down to the Treasury Secretary and the press secretary, has now painted itself into an exceptionally tight political corner.
They have repeatedly endorsed this payment. They have officially confirmed their commitment to it.
So now they face a choice. The financial cost to front that $568 billion is immense. It will add to the national debt. That's a real cost.
But what's the other cost?
The cost of lost credibility, the cost of broken promises among their core supporters, retirees, low-income families, if they fail to follow through after all this.
That cost might be even higher than the financial price tag.
It might be. So the question is, which cost will they ultimately choose to bear? The financial one or the political one?
Something to think about as we await the formal legislation. Keep watching. Okay, if you are watching your mailbox or, checking your bank account, anxiously tracking any sign of financial relief that could ease the strain of rising costs, well, this is the deep dive you absolutely cannot afford to miss. We are tracking a major financial update that has gone from maybe rumor to near certainty.
Yeah.
A potential payment that could put a significant amount, at least $2,000, directly into your pocket.
That's exactly right.
Yeah.
The speculation phase, I think we can say, is over now.
Yeah.
We have concrete, high-level confirmation. After the president's initial statements, Treasury Secretary Scott Bessent has stepped forward, and he's actively confirming and discussing this substantial payment. That gives us the crucial logistical and eligibility details we've really been waiting for.
And here's the truly game-changing detail, I think, especially for those maybe in the middle income bracket who felt kind of excluded before. The income threshold for eligibility is significantly higher than anything we saw in previous stimulus rounds. I mean, much higher. Yeah. This means many more low-income, fixed-income, and yes, middle-income Americans could qualify. It offers crucial breathing room, against inflation and those high utility bills.
And so today, we are diving deep into the source material, the direct comments, the analysis surrounding Bessent's recent remarks. Our mission is really to provide the critical clarity you need right now. We'll meticulously cover who exactly gets this money, why the Treasury Secretary is framing it as a tax refund, which is interesting, and the highly specific legislative timeline pointing toward potential payments in, early 2026. This is the financial deep dive you need to manage your expectations and your budget effectively.
Welcome back to the Deep Dive. Today, we are undertaking a crucial financial analysis. We're moving past the headlines and really getting into the fine print of the newly released information concerning this potential $2,000 payment. For our listeners on fixed incomes, retirees, low-income citizens, and those relying on benefits like Social Security, SSDI, or VA payments, these funds aren't just a bonus. They could be truly life-changing, offering a critical buffer against the relentless pressure of current economic realities. The interest in this subject is, understandably, through the roof.
It really is. And the level of governmental engagement, that's what differentiates this from just, mere rumor or speculation. The momentum is driven by recent public announcements from the president, and it's been quickly crystallized and detailed by comments from a key player, Treasury Secretary Scott Bessent. When the Treasury Secretary speaks about the logistics, about transferring hundreds of billions of dollars, that signals that these payments are rapidly moving from just a proposal into an active, high-priority governmental initiative. And that necessitates a full deep dive into the specifics, like we're doing.
Right. So our mission today is to cut through all the confusion and the jargon. And believe me, there is a lot of jargon swirling around this. We need to clarify exactly what this $2,000 is, who the Treasury Secretary says is eligible, which, again, sounds like a much broader category than we've seen. And crucially, we need to provide a realistic timeline. When might we actually see this money arrive? So let's start with the fundamental nature of this payment, because the terminology itself is causing a lot of worry, I think. Is it a $2,000 stimulus check? Is it a dividend payment? Or is it, something else entirely?
That's the absolute essential first step, yeah.
Right.
And we need to clarify this immediately because the language chosen by the administration is highly strategic. While the president initially used the term dividend payment, the Treasury Secretary, when he's detailing the actual mechanism for distribution, he consistently uses the term substantial tax refunds. Now, the core technical concept behind this payment is that it's being structured as an advance of a specific type of benefit, a refundable tax credit, something that would typically be claimed when an individual files their annual tax return.
Okay, advance of a refundable tax credit.
Hmm.
I can almost hear the collective sigh of confusion from our listeners right now. That sounds like complex financial jargon that immediately creates panic, right? Especially among our audience of retirees, veterans, or maybe those on fixed disability benefits who, well, they may not have filed a federal tax return in a decade or even more. They hear tax credit and they automatically assume, oh, I'm excluded because I'm a non-filer.
And that assumption, that's precisely the biggest point of confusion and anxiety we have to address, like right now with authority. Based on the history of these types of large-scale federal relief payments, like the ones distributed back in 2020 and 2021, the fact that it's technically an advance on a refundable credit, well, that's strictly a legal and technical mechanism. It's used for efficient distribution. It's not an eligibility barrier. The source material, drawing on the Treasury Secretary's comments, is crystal clear on this. Filing a tax return does not matter for eligibility.
Okay, that is a critical reassurance. But we need to expand on why that's true because the logic, it seems kind of counterintuitive. If it's a tax credit, why don't you need to file taxes?
Okay, yeah, good question. The key lies in that word refundable. Let's try to break down the technical difference. Maybe an analogy helps. Think of a tax credit like a coupon. A non-refundable tax credit is like a regular coupon you use at the store. It can reduce the price of your purchase, maybe down to zero, but you don't get cash back if the coupon's value is more than the item costs.
Right, okay.
But a refundable tax credit, that's different. It's more like a prepaid gift certificate issued by the government. So if the government issues you, say, a $2,000 prepaid certificate, and maybe you only owe $50 in taxes, the government still refunds you the entire difference. That's the $1,950 in this case. Because the credit's value isn't limited by how much tax you owe.
So hang on. If I owed zero taxes because my income was really low, I'd still get the full $2,000.
Absolutely.
Yes.
And that's precisely why it's the mechanism of choice for relief aimed at low-income populations. Now, the advance part just means the government doesn't wait for you to submit paperwork in April. They plan to proactively send the money out. They use the tax credit structure to define the benefit legally, sure, but they use existing Treasury infrastructure to actually distribute it. The source analysis confirms this strong assertion. If you don't file a tax return, it doesn't really matter. Has nothing to do with that whatsoever. It's entirely a function of qualifying for the credit based on income thresholds alone.
Okay, that immediately addresses the biggest hurdle, I think, for our fixed income and retired listeners. But digging a bit deeper, how does the government know where to send the money if someone hasn't filed a return in years? I mean, back in 2020, there were significant delays and, frankly, a lot of confusion for non-filers who relied solely on Social Security or SSI.
That's a really skeptical and necessary question, yeah, given those historical issues. The reason the Treasury Secretary can be so confident now is because the infrastructure used for those previous stimulus payments, well, it remains in place. And crucially, it's been refined. The Treasury and the IRS have established data matching agreements with the Social Security Administration, SSA, the Veterans Affairs, VA, and other federal benefit agencies.
Meaning, what does that mean practically?
Practically, it means that if you're receiving regular federal benefits, Social Security retirement, SSDI, SSI, VA compensation, the Treasury already has your current address, your direct deposit information, or your direct express card data on file. They don't need a tax return to verify you exist or know how to pay you. They simply match your benefit file against the income threshold set for this new $2,000 credit. So this system, it basically bypasses the traditional tax filing hurdle for the vast majority of non-filers who receive federal payments.
Wow. So the system is actually designed to identify and pay the non-filers automatically, just as long as their income falls below that target threshold. This really speaks volumes about the political intent, doesn't it? They know this relief is fundamentally aimed at those segments of the population.
Exactly. The government is, in essence, characterizing this as a straightforward cash transfer. But they have to cloak it in the technical mechanism of a refundable tax credit for legislative reasons, primarily for speed, and establishing a legal precedent for disbursement. This political maneuvering, framing it as a tax refund rather than stimulus, that's key. A tax refund sounds fiscally responsible, right? It suggests the return of money already collected. A stimulus check sounds like new government spending, which is much harder to pass through a well, a divided Congress.
That distinction, responsible return versus new spending, that's fascinating. And it drives directly into the political expediency, the choice of words. It's strategic shorthand, really, to make the, nearly $500 billion expenditure more palatable.
It's definitely an exercise in political linguistics, yeah.
Yeah.
And let's not lose sight of the dollar amount itself. The president's original announcement stated a dividend of at least $2,000 a person.
Mm-hmm.
Well, that at least is potent, But the base $2,000 is already a substantial headline-grabbing figure. It provides real, meaningful relief compared to some of the smaller, more targeted release packages we've seen. It sets a very high expectation right out of the gate.
The clarity here is invaluable, I think. So message is, ignore the tax language if you're a non-filer, trust the income threshold, and pay attention to the flow of information because the administration is clearly prioritizing this.
Yeah. Okay. Now we get to the core of the good news. Eligibility. This is where the source material suggests a massive expansion of aid. The income threshold being discussed by Treasury Secretary Besson is substantially higher than we originally thought, potentially making more people eligible for this than in any previous relief round. Seriously, this is big. This expansion is arguably the most surprising and financially impactful detail we've seen. Scott Besson was explicit about the income thresholds the administration is currently advocating for. For an individual, the eligibility line is set at $100,000 or less in annual adjusted gross income.
$100,000. Wow, that is a huge figure to define the ceiling for federal aid like this.
It really is, and it truly defines where the line of high income now stands, at least for this specific initiative. Now, while Besson specifically focused on the individual limit, the source analysis assumes, and it's a logical assumption, that for a married couple filing jointly, the threshold would likely double. That indicates an upper limit of around $200,000.
Okay, we absolutely have to put this in context for our audience. Let's compare this to the two previous major stimulus payments back in 2020 and 2021. For those payments, the full benefit usually started phasing out around $75,000 for individuals and $150,000 for married couples. What does this jump from $75,000 to $100,000 actually mean in real terms?
Well, it means the inclusion of a demographic we might call the squeezed middle. It really does. This includes skilled workers, maybe dual-income households, even retirees with substantial private pensions who were previously phased out of relief. Someone earning, say, $80,000 or a couple earning $160,000 who might be struggling intensely with mortgage rates, childcare costs, inflation. They are now squarely in the qualifying zone. This decision, it reflects a policy choice, I think, to recognize that the current economic squeeze is affecting families well above the traditional poverty line, deep into that middle income bracket.
Yeah, and the political framing here, linking it back to the president's original intent to be clear about not including high-income people, that's revealing. By setting the cutoff at $100,000, the administration is essentially making a public statement about what they view as the line between the struggling middle and the, financially comfortable in this current climate.
Precisely. Besson is defining high income in this context as those earning over $100,000 individually. It establishes a necessary boundary. The source emphasizes that Besson's position is firm on this. Nobody over $100,000 of income for an individual is going to get this. This clarity is crucial, but it brings us to a major financial planning detail.
Yeah.
Is this a hard eligibility cliff, or is there likely to be some kind of phase-out mechanism?
Right. That's the essential nuance for our financially astute audience. If I earn $100,001, do I just get nothing? That seems harsh.
Yeah, it would be. While the Treasury Secretary specified the $100,000 figure as the maximum eligibility, previous relief payments of this nature have typically included a phase-out mechanism. It's designed to smooth the transition and avoid that extreme cliff effect you mentioned. A phase-out basically means that for every dollar you earn above the threshold, the benefit decreases by a fixed percentage. Now, the source material doesn't detail the exact phase-out rate for this proposed $2,000 dividend, but financial precedent strongly suggests there will likely be one. That would stretch the income eligibility slightly higher, but it would reduce the total payment amount as you go up. For budgeting purposes right now, though, our listeners should probably operate under the assumption that the full benefit is guaranteed up to that $100,000 mark.
Okay, that's helpful context. And let's just reiterate the core rule of eligibility, particularly for those on fixed benefits. Does my status, as a recipient of Social Security, SSDI, SSI, or VA benefits automatically guarantee my eligibility?
No, it does not guarantee eligibility, but it does ensure ease of payment, which is important. Eligibility is always based on income alone. The type of benefit you receive is irrelevant if your adjusted gross income exceeds that $100,000 threshold, or the presumed $200,000 for couples. The source material is really consistent on this. They don't give a rip about all the other details when it comes to benefit type. The one and only determining factor is your annual income. This focus simplifies the distribution process immensely for the government and ensures that low to middle income earners are treated equally, regardless of whether their income comes from work, a small pension, or federal benefits.
Got it. So if we have, say, a retired couple who combined, maybe they receive $45,000 from Social Security, maybe $10,000 from a modest investment portfolio, and $25,000 from a private pension, their total income is $80,000. That's well below the likely $200,000 threshold. So they qualify easily and automatically based purely on the income test.
Correct. And because they're already in the federal benefit ecosystem, their payment delivery will be streamlined through those existing Treasury systems. It bypasses any need for new applications or tax filings. This is exactly why the high-level confirmation from BESON is so important. It validates the process for the people who, frankly, need this money most urgently.
Okay, let's turn our attention now to probably the most urgent question for anyone watching their budget, the timing. When will this money actually arrive? Scott Besson's statement provided the clearest indication we have so far, he said. Substantial tax refunds coming early next year, explicitly meaning early 2026.
Right. Given that we're discussing this in November 2025, early 2026 might sound close, but the reality of the legislative process, well, that can make it seem like an eternity.
Yeah.
We really need to provide a crucial reality check here and analyze the legislative timeline in detail because Congress, it moves at a geological pace sometimes. That is the necessary tempering factor, absolutely. The enthusiasm over the announcement, it has to be balanced against the mechanical constraints of Congress. Even with high priority, writing, debating, voting on a $500 billion spending bill, that takes substantial time. The source material estimates this process takes a minimum of a month to maybe a month and a half after lawmakers even agree on the specifics.
Okay, walk us through the steps that absolutely must happen using the congressional calendar as our guide. What makes early 2026 seem almost unavoidable at this point?
Okay, well, first, the bill itself needs to be formally written and introduced. Then it goes to the key financial committees, that's Ways and Means in the House and Finance in the Senate. These committees, they have hearings, amendments get debated, the price tag is fiercely contested. This alone can take weeks, easily.
And right during this critical drafting and committee phase, we hit major legislative roadblocks that are just built into the calendar, right?
Exactly. We are rapidly approaching the major congressional breaks. Lawmakers are scheduled to leave pretty soon for their Thanksgiving recess. They come back for a short period, and then bang, the massive holiday break hits, the traditional Christmas and New Year break. If a bill is not passed and signed by the president by, say, early to mid-December, the entire process just stalls until Congress reconvenes, which is usually the second week of January.
So let's say, best case scenario, they manage to pass it in early December. What happens next? Does the money flow immediately then?
No, unfortunately not. Even if the bill is fast-tracked and signed by the president in December, the Treasury Department and the IRS need administrative time to actually mobilize. This is a crucial, often overlooked step. They have to program the computers, update all the disbursement files, implement the new $100,000 threshold verification system, confirm bank details for millions and millions of recipients, especially those non-filers we talked about. The logistical constraint alone, just the sheer need to disperse hundreds of billions of dollars accurately, that pushes the payment date into the start of the next year.
This strongly suggests that the term early 2026 isn't just some political excuse. It's a necessary buffer built around bureaucratic capacity and the realities of the calendar. And when Secretary Besson links it specifically to tax refunds, he's kind of hinting at the tax season schedule, isn't he?
He absolutely is. The traditional tax filing season begins usually late January or early February. By suggesting these payments will arrive then, he's aligning the administrative rollout of this new credit with the existing, very robust operational window for the IRS. This reinforces the projection that payments will likely start flowing in the latter half of January or early February 2026. It is really crucial for listeners to understand that while the announcement is exciting now, they must budget for this delay. This money is not a guarantee for your December utility bills.
Yeah, it sounds like the greatest threat to a swift payment isn't necessarily political opposition, but simply the sheer size and weight of the governmental machinery trying to move this fast, especially during the holidays. It's like trying to turn a massive oil tanker ship. It takes momentum and time, even if everyone agrees on the destination.
That's a perfect analogy, yeah. The political desire might be high, but the procedural hurdles are concrete. We also have to consider the disbursement methods. While the source details are a bit limited here, given this is framed as a tax refund advance, we can pretty safely assume the standard trio of payment methods will be employed.
Which are? Remind us.
Direct deposit is always the fastest for those whose bank information is already on file with the IRS, or, importantly, the SSA. Then, there are paper checks sent through the mail, which takes significantly longer and adds to the administrative backlog. And third, for many SSI and SSDI recipients, payments will likely be loaded onto their existing Direct Express cards. The administrative challenge and really the reason for that January-February timeline will be coordinating those three massive streams simultaneously across millions and millions of people.
Right. So the message on timing seems crystal clear. The money is highly likely to come, but you should probably pencil it in for early next year. Allow time for Congress to clear the decks and for the Treasury to actually flip the switch. Okay, let's transition now to the major elephant in the room that Congress absolutely must contend with, the staggering cost. Here is where the enthusiasm generated by that higher $100,000 income threshold runs directly into the hard reality of, well, budgeting.
This is the absolute crux of the legislative battle ahead. The decision to expand the eligibility threshold from, say, $75,000 up to $100,000. While it's certainly politically popular, it exponentially increases the number of eligible citizens and therefore the program's price tag. This isn't just an extra few $1,000,000 we're talking about. This is the difference between a large bill and a truly massive one.
Let's review the figures detailed in the source material again. Based on calculations for a broad but maybe slightly more targeted distribution, say covering 85% of the population at the old $75,000 level, the cost was already estimated at a pretty daunting $568 billion. What does the jump to the $100,000 threshold mean for the government's ledger?
Well, with the $100,000 threshold, which includes a substantially larger swath of the middle class, the total estimated cost skyrockets to approximately $600 billion. The source emphasizes the sheer, almost unthinkable magnitude of this figure. It's more than $500 billion. This level of spending just does not pass through Congress quietly. It will face intense scrutiny, resistance from fiscal conservatives, and almost certainly demands for offsets elsewhere in the budget.
Yeah, $500 billion is a number that creates serious political headaches, regardless of the merit of the relief itself. This brings us directly to the legislative strategy we need to anticipate. Given this enormous cost, how do lawmakers and the administration actually expect this bill to pass?
This is where we shift from kind of analysis to political calculus. The source raises a really critical strategic observation. While $100,000 is the current high-water mark being discussed by Besson, there's a very strong possibility, maybe even probability, that this threshold may be lowered significantly during the negotiation and legislative process.
Okay, so you're suggesting the administration might be using the high $100,000 figure as a form of political leverage, almost like an opening bid, knowing they'll probably have to give some ground later.
Exactly. It's a classic legislative maneuver. The explanation is purely economic and political. To make the bill an easier sell to lawmakers and secure the necessary votes, the overall price tag likely needs to drop. Lawmakers who might balk at a $600 billion expenditure will almost certainly pressure the administration to reduce the income limit to something more fiscally conservative, maybe back down to $75,000 or perhaps even a more aggressively targeted $60,000.
Well, why not just start at $75,000 then, if that's where they might end up?
Well, because the $100,000 figure generates maximum public excitement and puts significant political pressure on Congress now, if the administration starts high, they can afford to compromise down to a still generous $75,000 or maybe $80,000 and still claim a victory for delivering substantial relief. They'd be hailed as heroes for fighting to keep the limit high, even if perhaps they knew the $100,000 figure was potentially unsustainable from the very start.
That is a sharp insight into the political theater involved here. They use the enthusiasm of the middle class, who are now included, to push the bill forward, but the final legislatively feasible version might end up only targeting those who truly need this money, as the source suggests, likely meaning those on fixed or lower incomes.
And that strategic reduction, that's the key variable for our listeners to really track. If the income limit were brought down, the cost would be lowered substantially, and the likelihood of the bill passing would become significantly higher. The debate really boils down to this. Is this relief primarily for the most vulnerable SSI, SSDI recipients, the lowest income retirees, or is it a broad economic stimulus meant to include the entire struggling middle class? Right now, the $100,000 figure leans toward the latter, the broad approach, but legislative reality will likely force it somewhat toward the former, the more targeted approach.
Okay, so this means our listeners really need to understand that the $100,000 figure is, right now, more of a political statement, a target, not yet a legal guarantee baked into law.
Absolutely. We must treat the $100,000 as the current, let's say, optimal scenario being proposed. The ultimate fate of this $2,000 payment hinges entirely on whether Congress decides to prioritize broad political appeal at $600 billion or narrow targeting to manage the national budget. It's a big choice.
Okay, let's move to anticipating and maybe soothing some concerns. Focusing once again on our core audience, older adults and fixed benefit recipients who, deal with government bureaucracy daily. Despite all our clarity, I suspect the primary fear will resurface. I don't file a tax return, so I won't get it. We have to address this head on again.
We absolutely must put this concern to rest with total authority, drawing directly on the analysis of the payment mechanism. We have to repeat it. Filing a tax return has nothing to do with eligibility. The confusion is understandable, I get it, because the words tax credit are used, but we have to emphasize the process over the language.
Right. Let's reinforce the mechanism one last time. Focus on why the non-filer is safe and how the government actually handles the logistics for them.
Okay. The government system for distributing these advance payments, it relies on two main pillars. First, the income threshold, that's set by the upcoming law. If you meet that threshold, you are eligible for the refundable credit, period. Second, the government uses its existing federal benefit systems to locate you and pay you. Since 2020, the Treasury has really fine-tuned its ability to pull data from the SSA, the VA, the Railroad Retirement Board. If you receive monthly benefits from any of these agencies, Social Security, SSDI, SSI, VA compensation, your current address and bank information are already verified and secured within the Treasury's disbursement infrastructure. They have it.
So a non-filer on Social Security is essentially treated by the government as if they are an active filer who is simply claiming the benefit via an automated proactive system. Is that fair?
That's a great way to put it. Precisely. They do not need you to submit a Form 1040. They just need confirmation from the SSA, for example, that your income falls below the legislated limit. The system is designed to identify you automatically, deposit the money through the existing channel, direct deposit or direct express, and notify you afterward. This is a critical distinction that should provide some peace of mind. Your income is the only factor that matters for eligibility.
Okay. Beyond the logistical concerns, let's look at the political dynamic for a moment. The source suggests that public support and enthusiasm are actually vital. That is, the energy and excitement generated by discussions like this one are actually critical to pushing a, $500 billion bill through a slow-moving Congress. That seems counterintuitive.
Well, political momentum is the fuel for enormous spending bills like this. If the public remains silent or seems skeptical, lawmakers feel no urgency. The political analysis suggests that if the population doesn't engage, if they don't seem interested, lawmakers might decide, well, maybe the public doesn't give a rip about the $2,000, making it easier to just let the bill die quietly in committee.
But the opposite happens when the public shows sustained interest and lets their voices be heard.
Absolutely. When lawmakers see widespread discussion, excitement, a sense of anticipation, when our listeners share this information, when they maybe ask their representatives about it, it creates a powerful psychological effect on Capitol Hill. Lawmakers perceive that the people are all jacked up, as the source puts it, and they're eagerly anticipating this payment. This perceived demand increases the urgency and the political likelihood of the bill actually passing. It validates the need for this level of spending in their eyes.
Wow. So for our audience, staying informed and sharing this information isn't just passive learning. It's actually an active form of advocacy. By demonstrating that this $2,000 payment is important to them, they are directly contributing to the political pressure needed to overcome that $600 billion price tag hurdle.
It creates a mandate, essentially. When the public demonstrates that this level of financial relief is desperately important to them, it weighs heavily on the minds of the people who have to vote on the allocation of those funds. This is a crucial, practical way to help ensure the $100,000 target, or maybe something reasonably close to it, survives the inevitable congressional haggling.
Okay, one last crucial point. We must briefly address the potential for scams, which always proliferate when large payments like this are announced. What is the one ironclad rule our listeners absolutely must follow?
The number one rule, and it cannot be stated enough times, is this. The IRS, the SSA, or the Treasury will never call you, text you, or email you asking for money, personal information, or demanding that you pay some kind of fee to release your payment. Never. This payment is automatic for those who qualify. If you receive any contact demanding payment or threatening to withhold your money, it is 100% a scam. Trust only official letters sent through the U.S. mail or verified government websites like SSA.gov or IRS.gov. Stay vigilant, please, because scammers follow these news cycles very, very closely.
Okay, we have completed a pretty comprehensive deep dive into what is arguably the most significant financial relief discussion currently unfolding in Washington. Let's summarize the key facts you need to remember as you plan your finances for the coming months.
All right, first, the amount. This proposal centers on a payment of at least $2,000 per person. Could be more, but $2,000 is the baseline.
Second, eligibility. The current political target, the goal, is individuals earning under $100,000 and married couples likely under $200,000. We must reiterate, income is the sole determining factor, regardless of whether you receive Social Security, SSDI, SSI, or VA benefits.
Third, timing. Due to the legislative process and those congressional calendar breaks we discussed, the payment is anticipated for early 2026, most likely starting in late January or early February, aligning with the tax refund schedule.
And fourth, how it works. It's structured as an advance on a refundable tax credit. This is the crucial point for our audience. You do not need to file a tax return to receive this payment if your income falls within the threshold. The government has existing benefit infrastructure to pay you automatically.
Right. And as we conclude, let's just revisit that final, maybe provocative thought. The ultimate shape of this relief, who actually gets it and how much it ultimately costs, is entirely dependent on a fierce internal debate over prioritization. Will lawmakers yield to the immense public enthusiasm and try to pass the broad but very expensive $600 billion bill, knowing they face significant resistance? Or will they prioritize legislative feasibility by lowering the income threshold, making sure the payment is tightly targeted toward the most vulnerable fixed-income citizens?
The outcome really hinges on that choice between broad reach and immediate need. Your knowledge of these specifics, what we've talked about today, is your best financial protection. It allows you to manage expectations and budget accurately. We strongly encourage you to share this valuable information with friends or family who are also anxiously watching their finances. Stay informed, stay vigilant against those scams, and we will be here to provide the next piece of critical clarity as soon as the negotiation. Welcome to the deep dive. This is where we really try to cut through all that financial noise out there and get you the intelligence that actually matters.
Yeah, the stuff that impacts your bottom line.
Exactly. And today, wow, we are looking at something potentially huge, a really significant piece of news that could mean, well, real money for millions of Americans, low and middle income folks especially.
We're talking about this proposed $2,000 dividend payment. It's aimed squarely at people on fixed incomes, modest budgets, our core audience.
And this isn't just some rumor floating around. It's an idea, yeah, but it's been confirmed now, championed right from the top level of government.
And look, for our community, for those of you listening who rely on Social Security, SSI, SSDI, maybe VA benefits, or just fixed retirement income, this $2,000, it's not some abstract number.
No, not at all.
It represents actual breathing room. A chance maybe to catch up with inflation that's just been relentless, or cover those unexpected costs that always seem to pop up.
Right. The car repair, the medical bill.
Precisely. So clarity here is absolutely vital. We need to look past that big headline number, get into the details, the fine print.
Okay, so that's our mission today. We're going to tackle basically 3 big questions, drawing only from the sources we've got. First, who exactly is this targeting, especially when it comes to income? We need certainty on that. Second, this funding idea. Using tariff revenue, it sounds ambitious, maybe even a little unusual. We need to dissect that. Does the math actually work for a, $568 billion payout?
That's a huge number.
It is. And finally, third, context. This is, the 4th time we've heard a promise like this recently?
Right.
We have to ask, realistically, what's the likelihood this actually happens? Is it real help on the way, or is it, just good political messaging?
Yeah, it's a policy or promise. We'll be looking really closely at the specific statements, the exact words used, especially around eligibility. The goal is to give you, the listener, the context you need to maybe plan a little, but maybe more importantly, the warnings to stay vigilant.
Right, because confusion leads to scams.
Always. We need to separate what's being promised, what's being talked about, from what's actually been, put into law, which right now is nothing.
Okay, let's unpack this. So our analysis, it's really focusing on these recent posts endorsements. They're framing it different ways. Sometimes it's a $2,000 stimulus check, sometimes a $2,000 dividend distribution rebate.
Or just $2,000 payment to all of us?
Right. But we've got 2 key announcements recently that really define it. And the second one, especially, that really changed things for our fixed income listeners. Big time.
Okay, first things first. Let's lock down the amount. The specific number being thrown around is $2,000, but often it's phrased as at least $2,000.
Ah, okay. So potentially more, but $2,000 is the floor.
That's the baseline, yeah.
Yeah.
It's the minimum expectation that all the financial calculations, the $568 billion figure we mentioned, are based on. So $2,000 minimum.
Got it. Now, the initial message about who gets this,
Hmm.
it was pretty broad, wasn't it? And it caused, frankly, a lot of anxiety, especially in the fixed income community.
It really did.
The first statement said something like, a dividend of at least $2,000 a person, not including high-income people, will be paid to everyone.
Right. Everyone,
Yeah.
not including high-income people.
And when folks on Social Security hear everyone, but then immediately hear not including high income, they start worrying. Does my benefit count as income? Do I make too much, even though I feel like I'm scraping by? Does not filing taxes complicate things? That initial vagueness, it was a real problem.
Oh, completely justified anxiety.
Mm.
Think about it, especially SSI recipients or maybe seniors who haven't filed taxes for years because their income is solely from Social Security. They immediately worry they'll fall through the cracks.
Yeah, administrative nightmares.
Exactly. They have specific rules,
Yeah.
income limits, reporting needs.
Yeah.
Very different from someone getting a regular paycheck. But then, thankfully, came the second post, a clarification. And it was honestly huge for our audience.
Okay, so what did that one say, and why was it such a relief for people on fixed benefits?
It got specific. It zeroed right in. It stated the payment was related to $2,000 payments made to low and middle income USA citizens.
Ah, low and middle income, not just everyone minus the rich.
Precisely. That shift is critical. It changes the whole frame. Instead of, am I going to be left out?
Right.
It becomes, okay, is this specifically for me? It's a move from potential exclusion to explicit inclusion.
And low and middle income, I mean, that phrase directly describes the economic situation for most seniors, most people with disabilities relying on benefits. Their income, almost by definition, from programs like Social Security, SSI, SSDI, VA, it puts them squarely in those brackets.
Exactly right. It addresses the core concern, seniors living only on Social Security, folks getting SSDI, and particularly SSI recipients. They have the absolute strictest income and resource limits. This language puts them front and center.
It targets them specifically.
Yes.
Yeah.
And, historically, if you look back at the big stimulus payments we've seen, the main factor, the filter they always used, was income level.
Right.
Didn't really matter where the income came from.
So it wasn't about whether you filed taxes or got benefits or worked a W-2 job.
Generally, no. For those broad payments, think 2020, 2021.
Yeah.
The key was your income.
Mm-hmm.
Did it fall below the threshold? If yes, you qualified. Whether you were a senior not filing taxes, a student, a gig worker, whatever, income was the metric.
And the source material we looked at really backs this up. It confirms that history.
Strongly. It points to that precedent. Income is the gatekeeper, which is honestly good news for most fixed income recipients.
Okay.
What's fascinating here is this specific language, low and middle income. It's not just reassuring. It kind of gives instruction, right? It tells whoever would process these payments, probably the IRS, maybe SSA, working with them where to focus.
They don't have to reinvent the wheel to find these people?
Largely no. They have existing data on who receives federal benefits, who falls into lower income tax brackets. It streamlines the potential process.
So, bottom line for a listener, if your only income is Social Security, maybe SSI, and it keeps you well under what anyone would call middle income, this proposal, as stated now, explicitly includes you. It's about the amount of income, not the source, like whether it comes via direct deposit, paper check, or direct express card.
Exactly. And that's incredibly important for the most vulnerable, the SSI recipients we mentioned. SSI is designed for people with minimal income and resources. This low-income focus ensures they are central to the plan, not an afterthought. They often need this kind of help the most.
Okay, so the who seems much clearer now. It's income-based, targeting low and middle earners, which includes most people on fixed federal benefits. But where's the line? What separates middle income from the excluded high income?
Right. And this is where we hit, well, the first major gray area. The source material, even with that helpful low and middle income clarification, it does not give us an exact dollar figure.
No specific cutoff point.
No. We know the target group, but not the precise upper boundary. Where does middle, end, and high begin, according to this plan? We don't have that number officially.
Okay, but like you said before, we have history to look at, right? This isn't the first time they've done something like this. What do the experts, based on our sources and past relief checks, estimate?
Yeah, the precedent is pretty strong. Based on previous rounds of stimulus, the most commonly anticipated threshold, the estimate, is around $75,000 per year in adjusted gross income, or AGI, for an individual filer.
$75,000 for a single person
Okay?
and for couples.
Typically, they've just doubled it. So for married couples filing jointly, the estimated threshold would likely be around $150,000 per year.
So 75K and 150K. Those aren't official yet for this proposal, but they're the educated guesses based on the past.
Exactly. It's the historical sweet spot they've used to try and capture the middle class while excluding, the top percentage of earners. It's become a kind of standard approach for these broad relief efforts.
Let's think about that $75,000 number today, though, with inflation and everything. I mean, the average household income last year was, what, closer to $83,000?
That's a really important point, and our source material brings it up. There's a sort of political logic check here. It would be really, really unlikely, politically speaking, for them to set the high-income cutoff below the national average household income.
Why? What's the risk there?
Think about the message it sends. If you set the line at, say, $60,000 or $70,000, you're telling millions of working families, teachers, nurses, construction workers, people who definitely feel middle class and are struggling with higher costs, you're telling them they're high income and don't qualify for help.
Yeah, that wouldn't go over well.
Not at all. So that strongly suggests the actual cutoff, if this happens, has to be somewhere near or probably above those historical 75K, 150K marks to make sure it actually includes people who consider themselves middle income.
Okay, but wait. If they're really targeting low and middle income, and everyone knows costs have gone way up, shouldn't that 75K threshold maybe be higher now? Hasn't inflation pushed what it means to be middle income higher?
That's the debate. You've hit on a critical tension. The 75K is familiar. It's politically tested from before. But does it still accurately capture the middle class who are feeling squeezed today? Maybe not the upper end of it.
Right. Someone making $80,000 today might be struggling more than someone making $75,000 3 years ago.
Exactly. If the goal was truly all middle income folks, maybe the line should be pushed to $85,000, maybe even $90,000 for individuals. But for now, the most reliable predictor we have based on history and the analysis is still that $75,000 individual, $150,000 married baseline. It's the most likely starting point.
Okay. Let's bring this back home for our listeners. If you're listening, you're on fixed income Social Security, let's say. Your annual income is maybe $20,000, $30,000, even $45,000. You are solidly, undeniably in the low or middle income category based on these likely thresholds.
Absolutely. Way below $75,000.
So you are almost certainly who they're talking about. Your relatively low income level is the key, not how you get that income.
Right. What does this all mean? It boils down to this. Eligibility seems laser-focused on income level. If you receive federal fixed benefits, Social Security, SSI, SSDI, VA, your income almost guarantees you'd be included, provided that threshold stays around that 75K, 150K range we discussed.
That's the clarity people needed.
It removes a lot of the will I qualify anxiety for benefit recipients.
Okay, so knowing you're likely in the target group provides some relief, but the big elephant in the room, how do they pay for this? This $568 billion. That leads us to the money mechanics.
All right, let's dive into the money. The financial architecture here is, well, it's pretty unconventional for something this big. The plan, as stated, is to fund these $2,000 payments using revenue from massive tariff income.
Tariffs. Taxes on imported goods.
Exactly. It's an attempt to fund this huge payout without touching regular income taxes or just borrowing from the general fund like usual. They're trying to link it to a specific trade-related revenue stream.
Kind of framing it as free money generated by trade policy, not coming out of typical taxpayer pockets.
That seems to be the political angle, yeah. But we absolutely have to look at the actual numbers. The sources we have lay this out pretty clearly, and this is where it gets very challenging if you're talking about sending checks out soon.
Okay, break it down. Cost versus revenue.
Let's start with the cost. We need an estimate of how many people would get this. Looking back, that last big stimulus check in 2021, the $1,400 one, it reached about 85% of the population, including dependents, because it targeted similar income groups.
Okay, 85% coverage.
If we apply that same 85% metric to today's population, you're talking about roughly 284 million people. Individuals, dependents, kids.
284 million people, times $2,000 each.
Yep, do the math, and you land at a staggering total estimated cost at around $568 billion.
Wow, $568 billion. Just to put that in perspective, that's enormous. More than the annual budget for the entire Department of Defense, right? Just for this one payment.
It's a monumental amount of money. That's the funding hurdle they need to clear.
Okay, so that's the cost side. Now, what about the income side? This dedicated tariff revenue, how much is actually coming in?
Right. According to the latest financial data available in our sources, the U.S. has collected about $195 billion in tariff revenues so far this fiscal year.
$195 billion year to date. Okay, what about over a full year? What's the projection?
Even with, let's say, aggressive trade policies continuing or expanding, the maximum projected annual tariff revenue is expected to be around $350 billion over a 12-month period.
Okay, hold on, let's compare. Needed, $568 billion. Projected annual income from the dedicated source, $350 billion.
The math doesn't lie.
That leaves a gap, $568 and minus $350. That's $218 billion short just for 1 year.
Exactly. The analysis in our source material is crystal clear on this point. On a short-term basis, like if you need the cash now to send out checks next month, it logically, mathematically does not work if they can only use tariff money collected this year or next.
They're hundreds of billions short in the immediate term.
They are. And that's a really crucial financial reality check against any political messaging that might imply the money's just sitting there ready to go. It isn't.
So, how do they propose to do it then, if the current cash isn't enough?
This is where the plan pivots to the long term, and where, frankly, the political risk comes in too. To cover that immediate $218 billion shortfall, the proposal hinges on the 10-year tariff projection.
10 years. Okay. How much is that supposed to bring in?
Over a decade, the projection is massive, over $3 trillion in total tariff revenue.
$3 trillion. Okay, that's a different scale.
That $3 trillion figure is the key to making it seem feasible on paper. The way it would have to work operationally is this. They'd essentially have to borrow the $568 billion today, send out the checks.
Go into debt immediately.
Yes, effectively borrow short term. And then pay back that debt over the next 10 years using that steady stream of incoming tariff revenue.
Okay, let me see if I get this. It's like, I want to buy something for $56,000 today. I only have $35,000 in cash. But I know I have a guaranteed income stream that will bring in $300,000 over the next 10 years. So I take out a loan for the full $56,000 today, buy the thing, and promise the bank I'll pay them back using that future income.
That's a pretty good analogy. The purchase is eventually paid for by that specific income source, the tariffs. But right now, today, you've just added to your immediate debt load to make it happen.
So the $568 billion cost looks manageable when compared to $3 trillion over a decade.
Right, a fraction of it. But the key implication for you, the listener, is that this payment is not funded by tariff money that's already collected and sitting in an account. It requires the government to front the money.
Which means technically temporarily adding that cost to the national debt.
Yes. Even though the plan is to pay it off with future tariffs, the initial act is borrowing.
Now, borrowing isn't exactly new for the government.
No, they do it constantly. But for a payment that's being politically sold as paid for by tariffs, the technical reality is it relies on immediate deficit spending first, with a specific repayment plan tied to future revenue later.
Okay, that makes sense. But then there was this other claim in the source material that seemed really confusing, something about having money left over after the payments.
Ah, yes. The claim that after sending out the $2,000 checks to low and middle income people, there would still be so much money left over from tariffs that they could use the rest to pay down the national debt.
That sounds great, but how does that work with the math we just did? If they're $218 billion short this year, where's the leftover money?
Exactly. It's great messaging, but you have to look closely. That claim only makes sense if you're looking at the full 10-year, $3 trillion projection.
Ah, so they're saying we'll use $568 billion of the $3 trillion for checks, leaving roughly $2.4 trillion over 10 years for other things like debt reduction.
Precisely. But that's a long-term budget promise tied to immediate spending. It's not about cash on hand today. It's about projected revenue over the next decade. It's a really important distinction for listeners to grasp when they hear these claims. It's future money paying for present spending. Okay, so if we connect this to the bigger picture, we really have to put this current $2,000 tariff-funded idea in context. Our source material raises a big red flag here about credibility because this isn't the first time we've heard something like this.
Right. This is the fourth major time in less than a year that some kind of direct cash relief has been endorsed or proposed at this level.
Fourth time. And that pattern, that repetition, is why we have to talk about the risk of non-delivery.
Okay, let's quickly recap that history because the shifting details are important. Where did this sequence start?
It really kicked off back in maybe January or February of this year. There was talk, an endorsement of an idea for a $5,000 payment. Sometimes it got called the Doge dividend.
Oh, yeah, I remember that. Tied to some crypto or digital asset ideas.
Exactly. Very different funding source. Highly speculative at the time. That was iteration one.
Then what happened?
The conversation shifted. By August, the talk was about a $600 rebate check. This one actually had a bit more structure behind it, linked to a specific senator and proposed legislation called the American Worker Rebate Act of 2025.
So smaller amount, $600, and a more traditional legislative path proposed. Okay, that's two.
Then, iteration 3 came around October 2nd. In an interview, the president mentioned a distribution or dividend kind of floating a range between $1,000 and $2,000. Didn't specify the funding source that time, just kept the direct payment idea alive.
So we went from $5,000 speculative down to $600 legislative proposal, then up to $1,000, $2,000 interview mention.
And now, iteration 4. At least $2,000, specifically funded by tariffs, specifically targeted at low and middle income.
Okay, that pattern. The repetition, the changing amounts, the shifting funding sources, what does that tell us?
Well, it suggests a couple of things. One, there's clearly high political interest in getting cash relief out. But two, it also suggests maybe a lack of finalized concrete planning behind the scenes. The details keep changing.
And our source material really warns about the danger of this repetition, right?
Yeah.
About making promises that aren't kept.
Oh, absolutely. The analysis is pretty blunt. It suggests that if you float an idea this big, this impactful for people's lives, 4 times in a row, and then you don't deliver, it becomes, quote, a really, really bad messaging campaign. It just destroys public trust.
Yeah. You can't keep dangling that carrot.
It's the classic kid who cried wolf scenario, especially when you're talking about financial lifelines for vulnerable groups, seniors, people with disabilities, low-income families who are genuinely struggling and budgeting tightly. You create real hope.
And dashing that hope repeatedly.
It's not just a policy failure at that point. It's a serious breach of trust. People stop believing anything the government says about helping them financially.
So the analysis implies that the political pressure to actually do something this time might be higher than ever, because failing again would be so damaging.
That seems to be the dynamic. The political cost of not delivering now could be higher than the financial cost of doing it. The only way out of that corner, really, is to actually introduce and pass the legislation.
Which hasn't happened yet.
Not yet. And because it's still just an endorsed idea, a proposal, we are missing every single crucial operational detail that people actually need to know.
Okay, this is critical. Let's be absolutely clear. What information is missing because there's no official law or order yet?
Everything practical, basically.
Yeah.
The source material confirms there is zero information right now on specific payment dates or a schedule. When would the money actually arrive? We don't know.
What about how it arrives? Direct deposit, paper check, direct express card.
We don't know the method of payment. Will it default to how you usually get benefits? Maybe, but it's not confirmed.
Tax implications. Is this $2,000 taxable income?
Unknown. Past stimulus was often tax-free, but it requires specific legislative language. We don't have that language.
And crucially, especially for people struggling, protection against garnishment. Can debt collectors or state agencies take this money?
Also unknown, and this is a huge one. Regular federal benefits like Social Security have strong protections, but special payments like this often need their own explicit protection written into the law to shield them from private debt collectors.
So all those essential how and when details are completely up in the air.
Completely. And for our listeners on fixed benefits, especially SSI, the lack of detail on protections isn't just an inconvenience, it's a potential danger.
Okay, let's focus on that SSI issue. You mentioned it earlier. Why is this lack of detail so risky for SSI recipients? Explain that resource limit problem.
Okay. SSI supplemental security income is strictly means tested. To qualify, you have very low limits on both income and assets or resources. For a single person, the resource limit is generally $2,000. For a couple, it's $3,000.
$2,000 in countable assets. That's not much wiggle room.
Not at all. So imagine an SSI recipient receives a $2,000 lump sum payment from this dividend. Suddenly, their bank account might jump over that $2,000 resource limit.
And what happens then?
Unless the law creating this payment explicitly states that this specific $2,000 is excluded from being counted as a resource for a certain period. Typically, they've done 12 months in the past. That recipient could be found ineligible for their ongoing monthly SSI benefits.
Wow. So the $2,000 help could actually kick them off their regular SSI.
It could. And losing SSI often means losing associated Medicaid eligibility, too. It's a potential trap, a lifeline that could paradoxically cut off their essential support in healthcare.
That's devastating. So without that specific legal protection language, which we don't have yet, SSI recipients face a genuine risk here.
A huge risk. That's why we have to keep hammering this point. These critical technical details only come after official legislation is introduced, debated, and finalized. Until that happens, you have to assume these protections are not in place. It's vital for managing expectations and not making risky financial choices based on an incomplete picture.
Okay, so we have this exciting possibility of $2,000, but also a lot of ambiguity and missing details. That combination, it feels like a breeding ground for scams. We need to talk about that.
Absolutely. It's practically guaranteed. Anytime there's talk of government money going out, especially large amounts like this, the scammers crawl out of the woodwork immediately.
So what's the absolute #1 piece of advice?
Rely only have on official communication. That means letters you receive in the physical mail from agencies like the Social Security Administration, SSA, or the IRS, or information you find yourself by visiting their official websites, ssa.gov, irs.gov.
What about phone calls, texts, emails?
Assume they are scams. The SSA, the IRS, the VA, they will never call you, text you, or email you out of the blue demanding money or asking for your bank account number, your Social Security number, or any personal details to process this dividend payment.
They already have that information if you're getting benefits.
Exactly. There is no legitimate reason for them to contact you like that. Anyone who does is trying to steal your information or your money. Hang up. Delete the text. Ignore the email.
And definitely don't pay any processing fee. Right?
Never. There is no fee to receive a government benefit or stimulus payment like this. If someone asks for a fee or gift cards or anything like that, it is 100% a scam. Report it to the authorities, like the Federal Trade Commission, FTC, or the SSA's fraud hotline.
Okay, very important warning. Be incredibly skeptical of any incoming communication about this. Stick to official sources.
Please do. Now, thinking more broadly, this whole $2,000 dividend idea, it fits into a larger context, doesn't it? It's clearly a response to the economic pressures people are feeling.
Yeah, inflation, high costs. It's an attempt to show the government is aware and trying to provide some direct relief, especially for those on fixed incomes who get hit hardest.
It is. But it's crucial to understand what kind of relief this is proposed to be. Based on everything in our source material, this is being discussed as a one-time payment.
Not a permanent increase to benefits?
No. This is entirely separate from, say, the annual cost of living adjustment, COLA, that Social Security recipients get. It's not a structural change to your monthly benefit amount. Think of it like the stimulus checks from 2020 and 2021, a temporary injection of cash, not an ongoing raise.
That's an important expectation to set. One-time relief, not a permanent fix.
And the economic logic behind it, from the government's perspective, is pretty straightforward. Give money to low and middle income folks because they have the highest marginal propensity to consume.
Meaning they're most likely to spend it quickly.
Right. On necessities. Groceries, rent, gas, repairs. That spending then circulates immediately in the economy, hopefully providing a bit of a boost.
Which brings us back to that funding mechanism again, using tariffs. You mentioned earlier, this sets a kind of precedent.
It does, and it raises some big long-term questions. Tying such a massive immediate spending program, $568 billion, to future projected tariff revenue. It's a significant policy choice.
What's the concern there?
Well, it potentially redefines what tariff revenue is for. Traditionally, you might think tariffs are about trade policy, protecting domestic industry, or maybe just general government revenue that could go towards paying down the existing national debt.
But this plan earmarks a huge chunk of future tariff money specifically for direct payments first.
Exactly. Is this the new model? Will future trade revenue now be seen primarily as a piggy bank for domestic stimulus or relief programs rather than, say, deficit reduction? That's a profound shift with major implications for long-term fiscal health. It's something to really think about.
Okay. So, looking ahead, what's our commitment to our listeners on this?
Vigilance. Constant monitoring. We will keep tracking this proposal very closely. We're watching for any signs that it's moving from just an idea being endorsed to actual legislation being introduced in Congress.
Because that legislation is where the missing pieces will be found.
That's where we'll finally see the concrete details, the payment dates, the tax status, and critically, those all-important protections against garnishment and especially the language protecting SSI recipients from losing their benefits due to the resource limit.
Until we see that actual bill, that actual language.
Treat this as a strong signal of political intent, a serious possibility, but not as guaranteed money in your account next week. Please do not make major financial plans based solely on this promise yet. Wait for confirmation. Wait for the law.
We'll keep tracking the political wins, the administrative actions, everything. The minute there's concrete news, especially on payment timing and those crucial benefit protections, we will absolutely bring you the next update right here. Outro. All right, that was a really essential deep dive today into a proposal that honestly could make a huge difference for so many people. Let's just quickly recap the absolute key takeaways for you right now. What do you need to remember?
Okay, first, the amount. It's proposed as at least $2,000. Could be more. But $2,000 is the baseline discussed.
Second, who's targeted? The clarification is key. It's explicitly low and middle income USA citizens. Based on likely thresholds, this almost certainly includes most people receiving Social Security, SSI, SSDI, and other fixed federal benefits. Your income level is the main factor.
Third, the funding. It's tied to tariff revenue, but here's the catch. It requires borrowing now against massive future tariff projections, over $3 trillion over 10 years, to cover the immediate $568 billion cost. The money isn't just sitting there today.
And fourth, the context. This is just a proposal right now, an endorsed idea. And it's the fourth time something similar has been floated recently. That makes actual follow-through this time incredibly important for government credibility.
Yeah, the pressure's on to deliver this time.
Look, this potential payment offers real hope, especially with how crushing inflation is felt. But we absolutely have to keep demanding those clear answers and, more importantly, those necessary legal protections, especially for the most vulnerable among us, like SSI recipients.
And that leaves us with that provocative thought to chew on. Is this $2,000 payment primarily immediate necessary relief that provides dignity and helps people cope right now? Or are we essentially writing a check today that relies on uncertain future trade revenues to cover it, potentially making it harder to tackle the larger national debt down the road? That balance between immediate help and long-term fiscal strategy, that's the deeper question underlying this whole proposal. Something for all of us to consider.
Thank you so much for joining us for this critical financial update. Please make sure you subscribe to the deep dive, turn on those notifications. You don't want to miss the next update on this or any other financial news that directly affects your Social Security, SSI, or fixed income.
And share this deep dive. If you have friends, family members who need this kind of clear, unbiased analysis, please pass it along.
We promise the moment this proposal moves from talk to actual action with real details, we will bring you that information immediately. Stay safe, stay informed, and
We have a major financial update to talk about today. It's coming directly from discussions, right inside the Oval Office. Well, we're talking about a potential large-scale payment. Some are saying $2,000, others are just saying thousands of dollars. Yeah. And this isn't just another rumor. The level of public commitment we're seeing from the president, from the Treasury Secretary, it's unusually high.
It really is. And for you, for everyone listening, especially if you're on a fixed income retirees, people receiving SSI, SSDI, the question really splits in two, doesn't it?
Okay.
First, is this money real? Is it concrete? And second, if it is it coming soon, or is it just, being dangled out there on a political calendar way off in the future?
Right. The immediate need versus the political game.
That tension is the single biggest thing we need to clear up today.
And we have to get this point across right from the very start. The conversations they're having explicitly cover a huge, huge percentage of the population. So if you get Social Security, if you get SSI, SSDI, or VA benefits, and you've been hearing this confusing government speak about working families and getting worried.
Yes, a lot of people are.
Exactly. We're going to spend a good amount of time today taking those fears apart piece by piece with facts and history and just basic political logic. You are not being left out of this conversation.
And we're also going to dive deep into the mechanics of this thing. I mean, how they plan to pay for it. A $2,000 payment? That's nearly $600 billion.
$600 billion.
The plan is to fund it all through tariff revenue, which, well, it creates a huge logistical puzzle. It's a massive reprioritization of how the government spends its money. And that's why the timeline is so uncertain, even though, as you said, the commitment from lawmakers feels overwhelming right now.
So that's our mission for this deep dive. We're going to unpack these brand new statements. We'll clarify the sheer size of this plan, analyze the two very different timelines, the political one and the economic one, and most importantly, we're going to give you the straight facts you need about whether you're eligible for this money. So let's get into it.
Welcome.
Welcome to the deep dive. Today we are jumping right into the latest official statements on this proposed financial distribution. It's being called a few different things, right? A dividend payment, a rebate.
Right, but functionally, it's a stimulus check. The goal is to put cash directly into people's hands.
And our source material is as fresh as it gets. We're talking about statements made by the president just today, plus comments that Treasury Secretary Scott Bessent made over the weekend. So we're getting a really complete picture of where the administration stands right now.
And that combination is so important. You have the president's direct remarks, the big picture, and then the Treasury Secretary's perspective, which gives you the financial nuts and bolts. But what's really fascinating to me is the speed and the intensity of it all. It's not just one or two officials anymore. We're hearing from high-profile lawmakers. We're hearing from senators, the economic advisor, the Treasury Secretary himself. They're all giving updates almost every single day on this $2,000 idea.
It feels like they're all singing from the same song sheet, which is rare.
It is. And that intensity, it suggests that the political price for not doing it is already huge. After this much public talk, after all these promises, I mean, politically, logistically, it almost has to be a certain thing at this point. The train has left the station.
Okay, so let's unpack the heart of the plan. This potential $2,000 payment and, as you said, the surprisingly tricky way they plan to fund it.
Let's do it.
First, the benefit itself. A $2,000 lump sum payment for an individual. For families, we're talking thousands of dollars. For so many people right now, especially on fixed incomes, where the COLA increases just aren't keeping up with inflation, this isn't pocket change.
Not at all. It's breathing room. It's help with groceries that cost a fortune or prescription copays. It's real life-stabilizing relief.
And the administration is being very careful with their language, calling it a dividend or a rebate.
They are. The idea is to frame it as returning money to the public, not just printing it out of nowhere. But it's the sheer scale of it that makes the financing so difficult.
Yeah.
To really get why this has been such a challenge, you have to look at their funding source, tariff revenue. The plan is to take a huge chunk of that money, about $600 billion, and send it straight out as these payments.
That's a huge shift. So if they're only using tariffs, we need to understand what that $600 billion means compared to what they normally collect. What does that actually look like?
Well, this is what puts the whole challenge into perspective. Let's do the math from the sources. To send $2,000 checks to their target audience, which is about 85% of the population, or roughly 284 million people, they need something like $568 billion.
So they just rounded up to $600 billion.
Exactly. Now, compare that to normal operations. In a typical year, the U.S. brings in about $350 billion from all tariffs combined.
Hold on. If they need $600 billion, but they only collect $350 billion a year, that's almost 2 full years of tariff money.
That's it exactly. They would have to dedicate nearly 2 full years' worth of incoming trade revenue just for this one single program. And you have to remember, that's not